Wait for it. Wait for it. Oh, there it is. Good morning, ladies and gentlemen. I hope you're having a wonderful day. If you're watching this and it does not say live at the bottom of the screen, unfortunately, you're watching the recap. The good news is we are live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. Make sure you're subscribed. You're on mobile. Press hot chat. X out the chat. Hit the thumbs up button. Second link for the nightly watch list and main channel. First link for the Scream a Large Boot Camp and real estate course. But, ladies and gentlemen, bro, day 2 of April, the roughness is continuing. A lot of people wanted to blame liquidity yesterday. Well, everybody is back now around the world. I think Spain might be the only person that is closed. But, bro, bond yields are getting destroyed again. You woke up with bad news out of healthcare and the managed care businesses and Medicare. You got a little news out of Asia and all that. But, dude, 10-year bonds, 30-year bonds, the 2-year as well. They are all near the highest point of the year. 30-year bonds are at 4.5. And right away, bro, people are already talking now about the Fed not cutting rates 3 times this year. So all of a sudden, out of nowhere, everybody is like, oh my gosh, the Fed's not going to cut, even though we already knew that. So it's getting interesting here, but it sets you up for an interesting April. You have stuff to react to, but now, day 2 of pressure, you can't really ignore it now, especially with the bonds and the dollar. And again, dollar's up, oil's going crazy because of the Iranian thing yesterday that we were talking with. So, Chad, it's going to be wild. Welcome to Tuesday. Welcome to April. Welcome to the cult. But good morning. How are you, baby? What up, Bell Brand? What up, Marcus? What up, Tim Whitman? Dees, Joseph, Winnie, Loser, Gunner, Mark, Battleborn, baby. Yes, and then in Tesla. I don't know, did Tesla numbers come out? You had Rivian out there in the morning, baby. Good morning, Skinny, Awaz, Caballero, baby, Zoraj, Agent of Chaos, Cambellini, you feel me? Nate Positive Vibes. Good morning, baby. What up, Ken? What up, Just Chase, Kara, Mark, Sam, I am, baby, Charlie in the tray, Fighting Bad Vision, Mark J, baby, Robert Success, Uncle Terry, baby. Good morning. What up, Gary? What up, Patience? What up, El Chapato? Stale Blazer, Joshua MC, Jesus Garcia, Nat, Open Face, baby. Jerry, William. Good morning. Greg Ale, baby. What up, JC? What up, Lotus? How you living, Miguel? Marcus, Brian, ready to go. Good morning, baby. Yes, Sir Amster, Jay Urbanski, Robert, Killer baby, Emilio. Good morning. Daily Bedlam, Lost on the Narrow, Rose Darrow, baby. Good morning, Yunam, Adam, Banks, CEO, baby. Laker J. Bro, Laker J, I'm not going to lie to you, bro. I'm about to go to bed last night, and I just took a shower, and I go in my closet, and I put on a shirt before I go to bed. And I pull out this shirt, and it's a Laker shirt. And instantly, I go out loud in my closet. I go, Laker J. Good morning, baby. So, Chad, I hope y'all ready, man. Good morning. It's a blessed one. Let's go. Shout out the Lakers, baby. Yeah, I don't know. I be yelling Laker J in the middle of the night, bro. I don't know. It's just like I be like that. I be getting excited. Deliveries on Tesla. Ooh, 386,800. Estimate was 449,000. Yikes. Tesla deliveries missed by almost 100,000. So again, Rivian deliveries beat, but yeah, Tesla delivery numbers very bad. So it's already back to 160. Remember, that's where it bounced off of. Stock's already down 6%. Yeah, that's not good at all. All right, Chattadonia. Now, let's get into the news. I got a little bit for you. Let's let Josh AI like the video. Again, you guys did it right there. I gave you all the benefit of the doubt yesterday. So
Bond
like the
stocks drop as Fed seen delaying rate cuts. Global bonds slid and equities faltered as traders priced the possibility of fewer interest rate cuts this year from the Federal Reserve. Treasury 10-year yields rose about 3 basis points, adding to a 10 basis point jump on Monday when data showed an unexpected expansion in U.S. manufacturing for the first time since September 2022. The impact was felt worldwide, with British 10-year yields climbing as much as 12 basis points and German borrowing costs up almost 10 basis points. In equity markets, Europe's main stock 600 index ceded earlier gains to trade trade around flat, while contracts on the S&P 500 slid about 0.2%. Traders reckon now that the Fed will deliver fewer than 3 rate cuts this year, a view that could be bolstered if data at the end of this week show the U.S. economy continued to add jobs at a healthy clip in March. They also see a good chance the central bank will push back the timing of its first rate cut, with odds of a June cut briefly falling below 50% on Monday. Fed Chair Jerome Powell, who is due to speak Wednesday, said Friday that officials are awaiting more evidence prices are contained, adding that it wouldn't be appropriate to lower rates until officials are sure inflation is in check. The Fed is a difficult spot right now because if it eases too soon, it could reignite the economy and inflation comes back, but if it doesn't ease quickly enough, you get a bigger than expected economic slowdown, said Andrew Pease, global head of investment strategy at Russell Investments Limited. At the margin, the data noise could convince the Fed to wait beyond June. Expectations of higher for longer Fed rates kept the dollar close to 6-week highs against a basket of Group of 10 peers. The yen also stayed in focus as the Japanese currency slipped further toward the 152 per dollar level that many traders believe could force authorities' hand toward intervention. Markets are also keeping a close eye on geopolitical developments as an Israeli airstrike on Iran's embassy in Syria sent gold prices surging to a record high. Oil rallied above $1.85 as the attack added a risk premium to an already tight market. In emerging markets, the Turkish lira surged against the dollar after President Recep Tayyip Erdogan indicated his economic team will be allowed to stay the course with orthodox monetary policies despite a rout for the ruling party in local elections over the weekend. Pressure is continuing to build on Bitcoin, which shed 5% to trade below $67,000, having fallen about 10% from its mid-March peaks. Crypto-related stocks fell in U.S. pre-market trading, with Coinbase Global down 2.5%. U.S. health insurance stocks were the other big pre-market losers after regulators didn't boost payments for private Medicare plans like the industry had come to expect. Humana Inc., heavily exposed to Medicare, fell 9.2%, while United Health Group Inc. dropped 4.3%. Fed bets ease. Global bonds dropped as traders priced in the possibility of fewer interest rate cuts this year from the Federal Reserve following better than expected manufacturing data. The yield on 10-year treasuries hit the highest since November. Traders now reckon the Fed can deliver fewer than 3 rate cuts this year, a view that could be bolstered if data at the end of this week show the U.S. economy continued to add jobs last month. Bitcoin slumps. Tighter monetary policy expectations also weighed on Bitcoin and tokens favored by the meme crowd such as Pepe and Dogwifat. A gauge of smaller digital assets was caught in the biggest 2-day slide in about 2 weeks. Meanwhile, oil advanced to a fresh 5-month high, buoyed by the prospect of tighter supply from Mexico and heightened geopolitical risks in the Middle East. Incognito settlement. Google said it would delete millions of records of users' browsing activities as part of a settlement of a class action lawsuit that alleged it tracked people using its incognito browsing mode without their knowledge. Google, which agreed to settle in December, will expunge billions of data records that reflect people's private browsing, according to court filings. Citi job cuts. Citigroup implemented a fresh round of job cuts in its U.S. investment bank last week as part of a restructuring, according to people familiar with the matter. Technology, media, and telecom were among coverage areas hit hardest, as well as equity capital markets, debt capital markets, financial sponsor coverage, and clean technology banking. By contrast, there are plenty of jobs in Austin, Texas, working for Elon Musk. He's now officially Austin's largest private employer after Tesla boosted headcount in the region 86% last year. The car maker now employs more than 22,000 workers at its Gigafactory, Texas, while Musk is also building a lithium factory and has facilities for SpaceX in the state. Top overnight news, WTI hit $85 for the first time since October as Iran vowed revenge revenge for what it says was an Israeli airstrike on its embassy in Syria, and amid tighter supply from Mexico, adding to momentum, OPEC Plus may decide tomorrow to continue with output curbs while both Brent and WTI's prompt spread jumped. BBG, Australia's central bank, signaled a further shift toward a neutral stance as minutes of its March meeting showed the board didn't consider the case to raise interest rates for the first time since May 2022. BBG. Several Chinese developer shares have been suspended from trading in Hong Kong starting Tuesday due to their failure to meet the deadline for publishing last year's annual results, another sign of the turmoil in the country's real estate sector. WSJ. A resurfaced speech from Xi Jinping suggests Chinese policymakers may start trading government bonds to regulate liquidity, a pivot for a central bank that hasn't made a significant bond purchase since 2007. The remarks were made in October, but publicized only recently. BG. Japan may intervene in the FX market at any time should the yen weaken beyond its current range. The country's former currency chief said dollar-yen options traders are betting authorities may let the yen slide to 153 or beyond before stepping in. An intervention would probably target a 5-yen rally against the greenback, strategist said. BBG. Eurozone inflation expectations over the next 12 months fell to +3, 1% from +3, 3% dropping to the lowest level since the start of Russia's unjustified war on Ukraine in February 2022. ECB Speaker Mike Johnson has begun publicly laying out potential conditions for extending a fresh round of American military assistance to Ukraine, the strongest indication yet that he plans to push through the House a package that many Republicans view as toxic and have tried to block. NYT. Banks will have to cut their exposure to commercial real estate because of a $2.10 wall of property debt coming due in the next 3 years, according to a leading U.S. brokerage. Banks will be under pressure, said Barry Gozen, chief executive of Newmark, which handled $50 billion of loan sales for failed Signature Bank FT. Health insurance stocks fell sharply after U.S. regulators didn't boost payments for private Medicare plans like the industry had come to expect. The decision by the administration of President Joe Biden to hold firm on proposed Medicare Advantage rates for 2025 shows a break with recent practice, taking Wall Street by surprise. Only once in the past 10 years have final rates not improved from regulators' initial proposals. BBG. China's protracted property sales drought has weighed on many of the nation's biggest builders and eroded the balance sheets of the largest state-owned banks. As their bad loans swell, Beijing has tasked banks with helping pump up the domestic economy as well as supporting debt-laden developers. BBG. He really got hyped on that Biden one. That was funny. Still more, baby. Again, there's a lot here today. Bonds, even those Tesla numbers now, day 2 of pressure. S&P futures are down by 0.7 near the worst pre-market levels in Tuesday morning trading. Comes after stocks finished mostly lower to start off the week and month and quarter on Monday. Some reversal of last week's price action as year-to-date laggards were back to underperforming with rate-sensitive plays hit the hardest, while select big tech and AI names fared better. Treasury's weaker again with more curve steepening adds to Monday's big rate backup. Dollar is down by 0.1. Gold is up by 0.9 and continuing to press further into record territory. Bitcoin futures off by 6.5. WTI up by 1.6 near 6-month highs. Big story continues to revolve around Monday's outsized rate backup, largely chalked up to stronger ISM manufacturing print. Also, some focus on corporate supply, thin liquidity, deficit concerns, higher commodities and break-evens, and flurry of Fed speak over the next couple of days. Plays into concerns of another premature dovish pivot, particularly with 100 basis points of easing already priced out from the peak of earlier this year. Also, some complacency concerns following a strong Q1. Max drawdown for 2024 is just 1.7% thus far. However, resilient U.S. growth backdrop flagged as key cushion for broader bullish market narrative, along with expectations for continued breadth improvement. February JOLTS Jobs Opening and factory orders on U.S. economic calendar this morning. Busy day of Fed speak includes Bowman, Williams, Mester, and Dolly. Few overseas developers
developments in focus. Preliminary German regional inflation data highlighted disinflation traction. Eurozone inflation expectations fell to the lowest since the start of the war in Ukraine in February 22. According to ECB, UK shop inflation fell to the lowest level in more than 2 years. RBA minutes showed the central bank did not discuss additional tightening. Managed care stocks under pressure after final CY25 Medicare Advantage rate announcement from CMS was left unchanged at 0.16. Disney reportedly ahead of its proxy battle with activist Trian, with more than half of the shares already voted. PVH down big, weakness said to be exacerbated by positioning dynamics as better Q4 results offset by weaker than expected Q1 and full year 24 guidance. More deadline scrutiny for Boeing as a report of disarray at 737 factory before door plug blowout incident in early January. And then Vive announced CFO departure, but reiterated quarterly and annual guidance. Ba-da-ba-ba-ba. There's more. Managed care stocks under pressure after final CY25 Advantage rate announcement is left unchanged. Japan Finance Minister repeats readiness to act against excess yen volatility. German regional inflation softens in March. ECB consumer inflation expectations fall the lowest since Ukraine war. Bottoming out of EZ PMI stalls as activity contracted quicker in March than in February. UK store inflation its 2-year low as supermarket prices wars cool things down. South Korea inflation unchanged against forecasts for all, clouding Bank of Korea rate cut prospects. Indian manufacturing activity expands at quickest pace in 16 years, underpinned by strong domestic and external demand. RBA minutes show no discussion of hiking, but plenty of speculation on next move. Xi calls to increase trading of government bonds suggests China is moving in line with other major central banks. Bank of Japan JGB purchases confirm lower full year 24 trajectory. PVH full year sales guidance missed, citing difficult macro backdrop and EU weakness. Disney ahead of proxy battle with Trian. Boeing 737 in disarray before door plug incident. Banks facing $2 trillion of maturing U.S. property debt over the next 3 years. UBS to commence new share buyback program of up to $2 billion. And then Europe may become too dependent on U.S. LNG after shutting down cheap Russian gas. Wow. Great timing, honestly. We got through a lot of that. That's it, man. Again, I think the headlines here, everything all the way down from China to healthcare, and then once again, I mean, what's going on with bonds? I mean, you have a very distinct reaction to rate cuts being priced out today, and you finally got people responding. So it is just day 2 of the quarter. Like, let's see if this actually builds, but you got some movement here today. Ladies and gentlemen, welcome to Tuesday, but we got some pre-market movers. Honestly, more names trading lower today than up. So you got Estee Lauder there on the high, Citi upgrade, FCX up by 1.2, nothing, CHX up 11, acquired SLB, all-stock transaction. ROIV is up by 6.1, results of Neptune study of brepocitinib in NIU, authorizes 1.5 billion repurchase. FIG or RIG up 4.9 contract extension. RCKT up 4.1. EMA accepts MMA for RPL 102. Fanconi anemia. Goldman assumes neutral. VET is up by 3. ARRY 2.2. Barclay upgrade. VTSI up 14 off earnings. ZPTA up 12.6. Recently closed SPAC. SKYX up 11.2 off earnings. ANGH 10.8 completes merger with OSN. AUBXG 5.7 recent IPO. ANTX 3.5 Citizen JPM or JMP upgrade. CGC up 3.5. Gold stocks trading higher. Trading lower. Cigna, Humana, CVS all trading 9 to 5%. Final CY Medicare Advantage. ADSK down 3.6. Delays 10K. Internal accounting investigation. Vive down 3.6. CFO departure. Other management changes. Reiterates guidance. A-Lab down 3. DHI down 2.4. Wedbush downgrade. Lennar down 2.2. Wedbush downgrade. BX down 2.3. UBS downgrade. Carvana down 2.1. Rivian down 1.9. Affirm down 1.8. Palantir down 1.7. Enphase down 1.4. Solventum down 1.4. Disney down 1. Reportedly winning proxy fight with Trian. 50% of shares have voted. Schlumberger acquires Champion all-stock transaction. Verve down 34. Pauses enrollment of Heart 1 trial. Verve 101 following grade 3 SAE. PVH down 22. Earnings Q1 full-year guidance below. VFC and Gap down as sympathies. Verx down 5.0. Beam down 4.3, AGL down 4.1, Sound 3.4, Open down 3.1, Ken down 2.9, NXT down 2.7, Barclay downgrade, Sunrun down 2.7, DJT down 2.6, Files 10K, CRISPR down 2.4, IBRX down 2.3, Upstart down 2.1, Acore down 76%, Files Chapter 11, GRTS down 43, Study Data, Common Stock and Warrant Offering Prices, GoEV down 28 off earnings, MVST down 24 off earnings, PPSI down 19 off earnings, CXAI down 13.9, LLAP down 11.7 earnings, XLO down 10.5 earnings, ASTS 10.3 earnings, GCTS down 6.6, recently closed SPAC, FIGS down 5.8 off Bank of America downgrade, VSTE down 5.8 off nothing, AUS down 4.8, AISP down 4.9 earnings, Guts down 4.3, BLDE down 4.2, BMEA down 4.2, JP Morgan downgrade, ATXS down 3.3, STI down 3.3, IRON down 2.7, TPST down 2.6, and then Bitcoin related futures and names trading lower. Chatadonia. That's it, man. That's it. I got a couple of plays, nothing crazy. Again, I'm going to be watching China plays. They held up a little bit, but they may get caught up into some of the tension here today. Then watch Estee Lauder. They got outperformance there. Again, they've been one of those value plays. And then watching gold and oil, and that's going to be it. And then keeping an eye on bonds, but it might be some carnage. And then 30 minutes after the bell, you are going to get it. I would watch Tesla. I mean, that's already down 7%, but anything below 160, Tesla might get a little crazier. They had bad delivery numbers. Tesla delivery numbers almost missed by a damn 100,000. It was kind of crazy. It was like 380 versus 460. So I'm going to go to the bathroom. We're going to come back with plays, baby. I hope you're ready to go, but follow me on Instagram at the Trading Fraternity. Like the video. If we make any Tesla plays at the open, I'm just saying we need 1,000 likes, baby. We need 1,000 likes. You could do it. Only you could prevent Forrest likes. Yeah. Okay. I'll be right back. I love you. God bless you. Good morning, baby. Good morning.
Buy. Maybe that winds up triggering more M&A.
Okay, Alex, thank you very much. Alex Steele and Anne-Marie Hordern on the moving oil story. Quick price check for you on Tesla pre-market, down 7%, 7.1%. This is after deliveries not just underwhelmed, but are seriously below estimates, 386,810. The market had it estimated 449,000. They are talking about a phase of production ramp up of the updated Model 3. They're giving lots of reasons on why you're seeing the first significant shortfall in estimates, the first drop since 2020 on deliveries. This is a market which is under pressure without incentives. Coming up, the morning calls, Morgan Stanley's Andrew Sliman joins me as we head into the opening bell, discussing the outlook for markets as April gets off to a shaky start, to say the least. That conversation right ahead.
Bump. That conversation up next. Brought to you by YouTube. What? Like the video. Chatadonia. I hope you have liked the video. I hope you are feeling blessed. God bless all of you, man. It's a beautiful Tuesday. But, Chad, you heard the TV. You're waking up with tension nowadays. Again, the biggest drawdown of the year has been 1.7%. That's the fun fact here. So let's find out what happens. But you heard them all. You're here right now. So, Chatadonia, what is your first play of the day? Post it in the chat. I hope you could drop a like and drop a play, baby. What do you got, baby? Post it in the chat. Meta puts, watch and see, FedEx put, Tesla Law, SPY put, Meta puts, SMCI, XOM, Humanicall, CXAI, PayPal, QQQ, buying everything, Dylan, DJT, MSTR, Intel, Palantir, Celsius put, NVO Long, VIX Long, puts on everything, KRE, DAX put, Bank of America put, 520 call, SPY put, Tesla flips, Reddit put, Tesla, deploy the long term, buy GoEV, 198, Micron put, Gold call, grab QQQ, April 405 put, puts on Tesla, NVIDIA, SPY, GR30 put, SPY call, MSTR, Palantir put, Joe B, Jabil staying strong, SPY put, GR3, Trump, Apple, Apple calls, DraftKings, Starbucks, ADXT, Short HD, Inverse Chad, SPY calls, Palantir, Buy More 3M, TQQ, Intel calls, Muni bonds, just chillin', long-term, baby, CLSK all day, UEC and uranium, TQQ, NVIDIA puts, and the final plays. MES short, NVIDIA dropping, back to sleep, Laker J, SPY puts, time to buy the dip, CIFR put, and VIX calls. Wow. 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 So we'll see, man. We'll see. I feel you got another one of those bearish sentiments today where everybody's saying puts, but again, today did wake up. I think a lot of people thought liquidity from Europe coming back would have changed some stuff, but the rates. So again, 30-year bonds are at the highest of the year. 10-year bonds are right under their highest of the year, and same thing with 2-year bonds. So believe it or not, interest rates have pulled back very heavy so far in the first 3 months of the year. So if you go look at like gold, the dollar, the markets, everything is above December 13th when Jerome Powell started talking about cutting, except for the bonds now, ironically enough. So that's where we got. But Chatadonia, it's more important than bonds. It's more important than the market. Here at the Colt, ladies and gentlemen, before we go and try to chase a dollar, before we try to do anything, we must pay homage to a very special group of people that has made a sacrifice that most of us never have and never will. And I'm talking about the veterans of the United States of America. So on behalf of the Colt, the people here, the people not here, I want to give a huge special shout out all the active servicemen, past servicemen, anybody who has served this country, even their families. For real, thank you for the sacrifice and commitment. I hope you know you are loved and appreciated, and the least every single one of you could do is show that love, appreciation, and support to the veterans. So I hope you always continue this on, Chatadonia. But veterans, thank you, thank you, thank you, and big shout out to all the vets, and big shout out to anybody else out there giving back to their local communities, all the doctors, nurses, teachers, firefighters, police officers, the janitors, the coaches, the garbage men, anybody making their community run, giving a valiant effort, baby. That's where it all starts. So God bless you and thank you. But ladies and gentlemen, please rise. Place your right hand over your heart. Say it with me. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all, baby. Senator Judge! Oh, it's game time, baby. Oh, no, let's go. Chatadonia. It's a Tuesday. It's a Tuesday, baby. Oh, the likes. So, Chad, we need 1,000 likes, man. I don't know. You guys keep surprising me. I don't know how y'all do it or not. Y'all were like 30 seconds late last time, but we have 2 minutes. We need about 300 likes. We need y'all to like the video, but now if you have any questions, you let me know. That's it. We've gone through the news again, big headlines, everything from potential changes in China's stimulus. You got healthcare, managed healthcare getting absolutely clapped, and then you have the issue with bond yields and everybody talking about the Fed not cutting rates this year. Again, that conversation emerged out of nowhere. So, Chad, let's have a good one. Like that video. Oh, wow, you guys, damn. So now you only need 200 likes. We're there. Y'all ready to go, man. Y'all did this to me yesterday. I've learned to not doubt y'all. So like that video. We got about 1 minute. Any questions? If you got anything, you let me know. You let me know. If you have any expectations, any questions, I got you. I got you. I'm kind of hungry. I don't know. I had a lot of water this morning, but I woke up kind of hungry. I need some Ozempic. Don't you not wake up hungry? All right, 1 minute. So, Chad, locked in, loaded. Again, I don't really have too many plays. I would keep an eye out there on gold and oil. Anything that outperforms will be good. And then you do have, 3 Fed speakers today. And then 30 minutes after the bell, you get the JOLTS Jobs Opening. Okay? So keep that in mind, baby. Wow, we need 80 likes in 30 seconds. Holy crap. So, Chad, like the video, and let's have a good one. Let's have a good one, baby. Oh, my gosh. Are we going to do it? You have 25 seconds. 20, and we have 3 likes away. Wow, no joke. You're at 990. You guys, I don't know how y'all do that. Y'all just did like 400 likes in 2 minutes. That's insanity. I think we made it. Oh, wow. We have 1,100. All right, let's get it, baby. So, honestly, a couple of plays. The only one will watch Tesla, but I don't want to force Tesla too much. Okay, 3, 2, 1. Round 1. Fight. All right. Again, Rivian had good numbers. They're down. Tesla, the real number is just going to be 161 or not. That's it. If Tesla breaks below 161, it'll die, or maybe it bounces at 161. And then everybody has a good time. So remember, it was pricing in about 5%. Don't you forget that. Damn, the contracts are still expensive. We might have to give it a second there. That's related to Tesla. Macy's on the high. Again, watch Humana and Cigna. And then chip makers are actually doing quite decent. NVIDIA's down, but there was a couple of AI names that ended up holding up. Marvel down. CCJ came down. Again, those puts actually went up a little bit. So I'm glad we had that. Apple at 168. Big drop was because of rates. So again, I mean, I was talking yesterday on the watch list how rates, it was very hard to ignore what happened with bonds yesterday, but people were blaming the data, but half of that drop happened before the data. But now this morning, once again, the fear of rate cuts or the fact that we're not going to cut by June, that's happening. And now some people are saying the Fed may not cut 3 times this year, and then add that to what you're going to get with all the Fed speakers. It's kind of getting important. Tesla coming back down. Again, there's no real cheap Tesla contracts. They all have premium even from yesterday. So we need some premium to either die down or it's going to make the move and we miss it. Google. Again, Nuvei got bought out yesterday. Palantir. Oh, Estee Lauder, that was one of the leaders. So they're still up. That's one in its own little world. Husa's on the high again. Oil plays, oil and gold, which is crazy. But again, oil, there's Tesla now on the high. Contracts haven't died yet on Tesla. Apple pop. Apple down by 0.6. It's trying to move here. High tickers balanced out. Russell's the worst on the day, down 1.4. NASDAQ down 1.2. SPY is the best, down by 0.8. Dude, those Tesla candles, that contract. So I'm watching Tesla contracts, but I don't know. You guys, unless you want to throw down a place marker on that. BABA on the high. Don't forget about JP Morgan. Again, banks are right around the corner. BABA, 0.78. Bidunius. DJT on the high. CCJ. Disney. So, again, apparently the board of Disney's winning. So, market went down a little bit off of that. GE down 20. GE says down by 0.8. I think GE did a split as well too, right? Or a spinoff. And then 3M. And then if you guys go and check your 3M in your long term, it should have adjusted your cost basis. GRTS was good data, but then they did an indeterminate offering. So that's why the GRTS got clapped yesterday. So this was the cancer drug. I didn't get to make a play on it. I was kind of mad, and then I was kind of happy. But they literally said we're going to sell undisclosed amount of shares. Oh, are you kidding me? SPY near the low of the day. A very exciting day with bonds and interest rates. But now you have Peach Nation and Bradley Frizzle. Ladies and gentlemen, boys and girls, get your ass up. Bradley Frizzle and the Peach Horner. Oh, my goodness. Peach Nation. On an early Tuesday morning. God bless you, baby. Amen. Amen. SPY going lower. So, hold up. DJT's running up a little bit. Oh, my. And the Peach just dropped. Are you kidding me? Man, GRTS. So, again, they did an offering. That's why they got clapped. Tesla's coming down. Contracts are going higher than the first 5 minutes. I'm in CNTX and CARM, yeah. CNTX did good yesterday, and then CARM, they kind of have just been slowly dying, but I think I'm only down like $70 on that. But I am in those VVP. Oh, that was in the morning, right? Yeah, Vivo Power, they were going crazy. They're up 200%. That could be your small cap runner for the day. Yeah, JOLTS comes out in about 25 minutes. HD on the high. FedEx is trying to go up. Again, SPY near the low of the day. Bonds going even lower. Fidelity. It says my Solventum was at 71. So they kind of screwed me. So I had my Solventum. It said I got the 12 shares, but it says my Solventum cost basis is 71, but then my 3M cost basis dropped down to 90.7. Apple to 165. JD's coming down. Again, BABA was starting to move up, but they're still in the red. Where's Dollar? Dollar's in the red too? No shit. Adabe on the high. Adabe 496 going up, down. They're down 1%. MJ, Palantir. Oh, I forgot about the weed stocks. The Florida stuff yesterday. Oh, they sold the post-market pop. SPY's still going lower. 3 candles down. I don't know where this puts us. Damn, 51.95? Shit. Chad, you just broke 5,200. That's a big deal because you have not broken that since going above it. So, yeah, next level now is like 51.90 or like 51.87 to 51.82. Around this range is where we're going. But we haven't broken 5,200 since we've went above it. We opened below 5,200? Did we? Oh, I guess the first candle you did hit 51.93. And then you just rocketed up. Only 3 months away from setting in the Jets. God bless you, bro. Thank you, my friend, man. That's amazing. 45 months. Don't feel me. So, again, Tesla's still low. The contract's a little deceptive. I'm going to be watching those. So, again, Tesla, I just care about the 160 level. Yeah, the CCJ puts, they work for now. I guess 25 to 8%, I think. 7% down on the further ones. But it's just not moving. And then GLD, another high. My goodness. Apple for the long term, not until it moves around a lot more. And again, we have our long-term deposit. Like I've been saying, I'm waiting here for a couple names to come down, but I'm glad we still have it. So again, if we get any volatility here, if things get bad with rates, we will be able to hopefully use our long-term. 3M is flushing now. I could consider Humana for the long term. I mean, I still think they have some premium, but that's a quality name. Okay, now both CCJ puts went up. Team on the high. Bond just popped. Disney gets Norwegian funds backing in the boardroom fight. Hims to the long term. Hims has kind of been growing on me. Maybe if I order like hair pills or like dick pills from them. But at the end of the day, I do think Hims is a good market. I'm telling you, Hims is literally selling every single men's insecurity. Like that's insane. They're like, do you smell bad? We got something for that. Your pee-pee don't work? We got something for that. You got no hair? We got something for that. I'm telling you, bro, every Hims commercial is just predatory men's insecurity. So, I mean, there's a lot out there. So I do think, if they got good marketing, they may hold up. Why are we down? Bonds, really? I mean, the bonds, and like, it's not just like the bonds moving, but we're like starting to respond to what the bonds are saying. Does that make sense? So it's not like interest rates, like we already knew bonds were pulling back, but now they finally hit a new high of the year. And then now this whole like, oh, wait, bond yields are going up because people don't believe rate cuts are going to happen. For some reason today, everybody, the chorus was like, yeah, maybe the Fed isn't cutting rates this year. And now with bond yields already making the climb, everybody's a little bit worried off of that. So I think it's still, yesterday I was saying, I wouldn't read too much into it, but I do think this builds into it now because the more the bond yields go up, I mean, if we start, again, 4.5 on the 30-year, if we start hitting 4.5 on the 10-year, I do think people will freak out. Oh, I'm a business, Habibi. Shukran, Habibi. Oh, Arna. Amen. Amen. Powell was never lying. It's just that the market got ahead of Powell, and then they started to believe Powell with the data, but then data like yesterday, data like the PCE, data over the last 3 months, none of it has moved to that level. And I mean, here's the deal too. This is what some people are saying. I don't know if I believe in it per se, but this is a take. Essentially, if you start raising rates and like you try to tighten up the economy, some people are saying that if inflation does not fall quickly, then you can't get a soft landing without inflation falling quickly. So what they're saying is the fact now 3 months inflation data is starting to heat up again. The inflation's not dropping like it was 6 months ago, 9 months ago. Some people are saying that's the evidence there why we won't get a soft landing. Again, this is all within the last 48 hours, and all of the evidence was already there. That's why I think it's funny, because everyone's just like now, oh my gosh, look at what's happening. Yeah, again, I have VWAP up. You just can't see it. You're down 1% now, 1.5 on the NASDAQ, 1.6 on the Russell. Literally, first 10 minutes, you are down 1% on the S&P. If commodities keep increasing, can we get an oil spike in summer? Can we cut rates? No. Yeah, I agree. And that's why people, again, June is right around the corner now. It's a new month. I mean, you're 60 days away from June. So like you're saying, there's oil still up, energy coming into summer. It's like, how is Powell going to cut rates if all of these factors? And then again, if the data just keeps moving slow. So in a weird way, the data not moving fast up or down is starting to spook some people. But again, all of this was present. It's like, again, the bond yields were at 4.7 on the 2-year before this drop. Like I said yesterday, bond yields were dropping before any data. So in a weird, I would argue, market just decided to respond to what was already there today or over the last 2 days. Yeah, TLT is disgusting, dude. It's one of the biggest drops, I think, in the last 18 months. JOLTS could cause some movements here, but it could also destroy us, and we're already down 1%. Powell talks tomorrow. FRPT, Microsoft on the low. Tesla has not moved. Contracts coming down. I mean, if you want a simple way to understand today, bonds. That's it. The bond yields have hit a new high of the year, and people are getting a little spooked. That's the easiest way to simplify today without trying to read into a narrative that was already there and that everyone's giving like more or less attention to. It just, quite frankly, 30-year bonds at 4.5, 10-year is right around 4 like right under 4.5, and then the 2 years at 4.7. So it's like, why? Like, all of a sudden, no matter what you believe with the data or not, just the fact of the matter is this is the highest bonds have been. And the last time bond yields were at this price, I mean, we were dumping 400 points. You know, that was August to October where we died last time bond yields climbed around here. So usually these rates have been more restrictive than not. So we will see. DAX was the reason for all of this. Well, I don't really agree with that, because Germany had good inflation data. So like I don't think Germany would have moved our bonds like that. Like, Germany dropped by like 0.8, but then again, remember, America had a very bad day yesterday and they were coming back from the holiday. So just like us, they came back from the holiday and sold off. But I actually liked the German data this morning. I think all of the data overseas was actually favorable. Germany, if anything, it was a PVH. So one of those European clothing companies, they reported bad guidance, and people are worried about the consumer. Germany has done pretty bad, but that's why I'm saying their inflation coming down, I do think that's a better headline than not. Should have put money on the Celtics instead of Tesla. I didn't make a Tesla play, and then again, can I show you guys something with Tesla? You know, shout out the Colt, baby. This is why you're here, man. But Tesla, is literally down 5.6. If you guys remember us pricing this in yesterday, I was telling you it's pricing in about 5% for the deliveries. So I said 10% would be 2 standard deviation. They were kind of expensive, but like low key, Tesla's moved what was expected. So the contracts went up a little bit, which is good, but Tesla, I didn't make a play, and I was kind of expecting the delivery numbers, but I am pretty much what I'm waiting for now is for post-event, let the premiums die, and then maybe later of the day, we might get a good play out of this. But bonds hitting a new low, man. Ugly. Rally in earnings, shake and bake. Although I want to agree with you, unfortunately, the bonds are back into the discussion now. That's it. So if we could do what we've been doing and market just shakes off listening to the bonds, hell yeah. But like I've told you guys many times over the years, anytime we just start hitting 4 or 5, though, the game changes on the 10-year. Are you guys following me? So I agree with you. There's a little bit of room right now where this could just be, trap a little bit of the bears and get us going again. But when it's all said and done, bro, if these yields start settling into a higher realm and then we start getting a 4 or 5 on the 10-year, I don't think the market will be that resilient. I do think it's harder to shake it off when the interest rates now are very much climbing back to the levels where, we would take dumps every single time it was here. Again, go look at where the market was at. Any time we approach these levels, it wasn't a fun time. Again, even if you want to go back in history, I'm telling you, it's not like 4.5, bro. This is where everything stopped in 06 too. This little range here, and then where we cut from. Yeah, TLT down means yields are going higher. I like Nike. I'm getting greedy though. I want cheaper Nike. I want Nike preferably with $90, but like ideally, in my mind, I see myself buying Nike at $83 for some reason. And I want $83. But I'm not against it at 90. Does that make sense? So I have about like a 7 or 8% range on the stock. Or maybe 10%. So I think anything from 390 or from 90 to 83. But I think 83, that is the ideal position on Nike. That's what I'm saying. 83, it's on the clearance rack. Right now, it's just a good holiday promotion. That's the way I'm looking at it. It's a good deal still, but I don't see, it's not bargain bin, but I don't think it's bad. Like I'm saying, but I'm just waiting because now everything's dropping. So maybe if I could get Pfizer or anything else down, I'd be down. CCI on the high. Bonds bounced after that little low. UNH and Humana I could get behind for the long term, but they still got a little bit of premium, believe it or not. Best outcome for the jobs report today? I mean, do you want the market to go up or down? So that's what it depends on. And like I said, the big part about yesterday, like the one thing I liked about yesterday was that we act like whether or not I don't really believe the data moved us that much, but the fact of the matter was data came out, market actually got like a knee-jerk reaction. So at the very least, I mean, maybe jobs gets us really moving. I mean, we're already down 1% on the SPY, 1.5% on the NASDAQ. So we'll find out. But I am I'm a big fan of it, man. I'm a big fan of it. I'd be down to scaling in Nike. I'd probably scale in at 90 and then buy into it again at that 83. I like Starbucks too. That one's about to enter in bargain bin as well. So that's another one I'm a big fan of. That's also hitting the lows. But like I want Starbucks in the 70s. Nike's closer. Nike, where I'm Nike, we could actually buy it. Like I'm telling you, Nike, you're buying it at 2019 levels, almost 2018. You see what I'm saying? It's like you get me at $83, bro. Oof. Even lower, but I mean Nike is the closest, I'd say, out of any like new names. Otherwise, like what's it called? Baba, PayPal, Pfizer. I still could get any of these. Powell on Wednesday, I believe. SPY near the low. Again, bonds hit a low 5 minutes prior. So let's see what this does. Again, you have data here in about 10 minutes. 10 minutes. No, I didn't get out of the snow play. That one got clapped, unfortunately, from last week. And then again, for the JOLTS, it's very simple. A high number, more job openings, I do think will be negative. And then a lower number would be positive. So, I mean, we haven't had really big pops lately. Again, the last 3 months. And this is what I'm saying. When people are saying when the data stops moving fast, this could be showing we're running into a problem. But for the most part, very simple. High number, we have a problem. Low number, going to be very, very good. High number means, you know, less loose jobs market. Low number means tight jobs market. Or vice versa, excuse me. So we want to see an easing of labor market conditions. Gold is insanity. I think gold is part of the freakout, though, with bonds. Gold and then everything else around the world. And then, again, that Iranian thing yesterday, it did develop. I mean, people, the 24 hours from yesterday, we were talking about it. But, you know, people are worried about Iran now getting drawn into the conversation. And SPY a little at the low, Ford on the high, UPS, SPY trying to move. Again, I have VWAP. VWAP is turned on. You just can't see it. And then bonds making a move back to open, but those are hideous. UNG and Boyle on the high. Amazon's down by 1. Where's Google? ABM. Adabe came back down. 910 for Fed. Bowman. Yeah, I think we have 3 or 4 today. Massive red. Volatility index hits over 2-week highs. So see, there's VWAP right there. VWAP is right here at the top. The bond, it could be from Japan, yeah. Very good take. So I'm just skeptical because, like I was saying, yes, like I hope you guys get it. This is what the watch list was about yesterday. But like yesterday, everybody was blaming the data for our drop in bonds. But remember, the data didn't come out till here. So like the bonds were already down like 0.75%, almost 1% before any data came out. That's why I was like, I don't know. So we will see. But that's why today could have a little bit of juice, but we could have kind of been a little overhyped on it yesterday. But you do got about 7 minutes. That data will come in. SPY flush to a low and then bounce back up to the low. It was just that. Bonds, a little bit of a tick up. Oil, dude, oil's nuts. Again, the headline yesterday, that contributed, but then the supply stuff and then just, you know, flipping that 80 in general when we were in that. But I kind of wish I held it. But, yeah, they've been going nuts. The reinflation narrative, it came back alive yesterday, but then people are just now a little bit more worried. Equities are still up. They're finally paying some of the price today. But generally, I mean, equities are in their own world. The only thing that believes that is the bonds. That's why the yields have been high. Kazoo resumed trading. Okay, SPY trying to move again. VWAP looks tweaky. Apple's starting to come up a little bit. You think we'll get tech discount on tech for the long term? I mean, eventually in the next couple of years, it's going to be hard to time, but that's why I think, if you want tech, it's great and keep your eye out for it. But, if you got the patience, buy the stuff that's a good deal now. But I do think in the next couple of years, there will be another big drawdown to get good tech like we have done in the last couple of years. Meta popping. Oxy. I sold out of Oxy yesterday, and now it goes up 250, huh? Meta, it's holding up. Damn. Oh, that's Microsoft. I was like, Meta's at 420? Yeah, 490. I was like, wow. 4 companies are in the green today. Oh, I didn't check. I have to wait till 30 minutes. So give it 5 more minutes, and I'll do a checkup. Oil names are running for now. Eli Lilly, but again, we have JOLTS Jobs Openings in 5 minutes. When I bought Tesla when I was paying child support, I bought it at 130, bro. Yeah. So remember, I bought it at 130, and at one point, I was down $12,000 or $13,000. So even though I bought Tesla at 130 during that, I still got murdered. So that's why every time everyone's like, "Are you gonna buy it here?" I'm like, I'll wait. I've seen it lower. I've been through. I was in the most. I got to sit through all of this, and I came out a winner, so that was nice. But I'm gonna wait on Tesla. I'm down for a put play on the data. The puts finally came down, but I need a little bit more of a discount. They're still up. The premium is juiced. No, I held out, and I ended up selling out for like $3,400 profit. So I got out of that play as a winner. I made a couple of average downs. I think I lowered my average down to like I think it was 130 though, because I bought some higher and then some lower. Spot gold over $6. Insanity. SPY coming down. Bonds literally right below open. Otter files 8K. Winvest resumes trading. Meta's going up. SPY a little chicle. UPS on the high. More oil names. All the oil names are doing great. So oil companies are doing good, even though energy or oil futures aren't going up. And then NVIDIA, SMCI down 4. It moves a lot. Where will gold? Gold is gold is in another world right now. Again, gold is even ripping on a strong dollar, and even with our rate cut odds going down. Like we were talking about yesterday, I can name you 5 major countries that have already cut rates. I think gold is just, it's in its own little world, and I do think gold might be becoming the leader. Or I think it's lagging to the point where it has a lot to catch up with. But the point is, gold is in its own little world. It has a fundamental setup that supports it right now. But, I mean, I can't tell you when it's going to stop or where it's going to go to. This is literally its moment. I even think gold is doing a lot better. I thought if rate cut odds flip, then it'll get clapped. I never trusted gold. I don't think you know what you're saying here. In other times, I don't like gold, but I mean, I think I've telegraphed gold pretty well in terms of rate cut cycle and when I'll like it. So literally since December, I've been given the green light on it. Solventum at 66. Mine says 71 is my cost basis, but it doesn't say a price that I paid for it. Ignoramus, fascist, small penis club, Latin diplomacy devolves into schoolyard taunts. I'm just reading the headline. VWAP, I think it's because of how much we move. This is a very big move. So again, like even on the market, like when you look at the pullbacks, apparently this year the biggest pullback has been 1.7%. I think right here. So any of like 1.7 has been your biggest drawdown on anything. So I mean to gap down 1.4 on the Nasdaq and to be down 1% to start off the morning, you know, it's kind of wild. If 3M lowers their divvy, the stock will shoot up. It'll go down, then maybe eventually it'll go up because then people will be confident, but you know, in their payments. But if they could have a good earnings without Solventum and then still be able to maintain, I think keeping the dividend would be the best. All right, there it is. JOLTS Jobs Openings. So factory orders came in a little bit hotter. That's one reaction. 8.7, a little lower. So I don't know. Once again, same exact data. It literally came in 1,000 more jobs higher than last month. Literally no exaggeration. So it came in at 876 instead of 875. It's technically 8756. So factory orders, that came in a little bit hotter here. And then durable goods came in as well. But for the most part, yeah, 3-point quits was higher. So that's actually, I don't think that's the good part. Why are more people shouldn't be quitting there? That means they think they could get another job. Remember the quits dropping last time. People were excited about that, but the quits already ran back up again. And then again, literally, it came in almost, that was borderline a non-event. I mean, bonds got a knee-jerk reaction there, but they were already killed. But in general, it's just it's a low number where, again, remember, when we dropped to these numbers, it was good. Like, if you pull out the chart, it shows the market's tightening, but once again, we are doing the data stall. Do you guys, this is what I was talking about this morning. It's a data stall where over the last 4, 5, 6 months, if the data does not make movements, we're starting to stay pinned now. So, yeah, it's good that it's not up, but people are looking at this because the longer it takes to keep moving, that means you're losing the efficacy of all of it. And then another problem could happen faster than you think. So that right there, I mean, borderline in line, the data, that could have had some punch to it. It didn't. VIX falling. That's good. They were up today. Bowman, yeah, in a couple of minutes. My chart's delayed. Is it? I mean, bonds going up. Fitch is increasing U.S. bank regulation to further impede M&A. Fitch expects M&A deals to remain muted until asset valuations stabilize and bank valuations continue to recover. Fitch on U.S. bank M&A do not expect deal flow to meaningfully improve until asset values recover further. Yeah, so TLT's popping a little bit. Let's see. Again, the number came in line. If people want to find that as anything of good news. But, again, I think it was a non-event. AAUO. GLD on the high. That one's still going. So gold had a data effect? My goodness. Bruh. Gold just popped $10. What the fuck? Literally popped $10 on that. That's insane. So again, I mean, if anything, assets, equities are reacting, bonds, I think they were just doing their own thing, but gold was literally the winner out of that. Bro, gold just popped up $10 and running. And then see if oil starts to climb back up here. Well, gold is calling out the bullshit of the market and a lot of other things. So that's the problem. Gold is just it's bigger than rap, right? It's bigger than just the United States. There's other countries that are committing to rate cuts and already doing it. And then another thing, it's not as much that gold is not calling bullshit on the stock market. The gold does not have a problem with the stock market. Do you guys understand that? So gold in the stock market, there used to be times where market would go down, gold would go up, but the gold doesn't care about the stock market. So gold is not going to be calling bullshit on asset valuations, is what I'm trying to tell you. But there is one thing gold can call bullshit on, though. Oh, yeah, Baidu did go green. It's not calling bullshit on interest rates, because if in a weird way they think interest rates are going to come down, that's why people are keep buying the gold, because, again, look around the world. Yeah, it's calling bullshit on something else. It's calling bullshit on governments. So I don't think it's calling bullshit on equities or valuations in local stocks. Gold is calling bullshit on governments. It's calling bullshit on spending, debt issuance, and that's not just America. I know we live in a highly politicized environment right now, and we want to bring everything back to Donald Trump and Biden, but then again, like, look at Japan, right? Look at that. Gold could be calling bullshit on their plan of easing slowly. You know what I'm saying? They're like, this isn't going to work. This is not sustainable. Again, with wars going on and people spending money here, and then the United States, and then the issuances that we've been doing. So, if anything, gold is more so I think that's why it's running up. I think gold is just calling bullshit to some of the other government central bank actions than not. Yeah, it's more so government confidence is what you could call it. And then bonds hit a baby high of the day, still murdered. And then SPY went up a little bit, and then we came back down again. Gold, that was the winner there. JOLTS Jobs Openings barely moved. Gold isn't the one that calls bullshit, though. I usually trust what the Fed says. No, it doesn't fight the Fed. Well, it's bigger than that. That's just the nature of it. So gold is not, I don't think it always trusts the Fed, because not everybody is going to be in line with the Fed. So the best example right now, Mexico, Switzerland, I think Italy, and then a couple of others have already cut rates. So how do you, you know what I'm saying? Like, gold could believe the Fed. How do you believe the Fed is going to cut rates? Or then you're like, oh, maybe the Fed isn't going to cut rates. But then you see other places around the world making moves already. So that's where I'm saying it's like gold, it reflects somewhat of our situation, but it hits everywhere else around the world. That's why it's more confidence in other things and governments and central banks around the world more so than it is just following the Fed, whereas like our bonds, right? Our bonds follow the Fed because rates and policy and how it gets set. That's more linked to us. But gold, China buys gold, Russia buys gold, everybody is, and again, gold moves. Gold is a migratory asset, or at least that's what they called it back in the day. I'd say not as much anymore considering tech. A on the high. All right, I need to go to the bathroom. Follow me on Instagram at The Trading Fraternity. Like the video, chat Adonia. Good morning. Is that Boyle on the high? Marvel's moving up now. So you're getting some movements, but pretty wicked day so far. But I will be right back.
Absolutely. All of us have spent the last 15 years up until the last year and a half thinking that cash is trash, and clearly that's no longer true. And so particularly if the Fed is going to stay higher for longer in the short-term overnight rate, then cash is a very viable investment alternative, and we think it looks better than fixed income in certain respects because of the yield that you're getting today.
Yeah, and definitely a lot of people would agree with you, just judging on what we're seeing in money market funds. Ellen, stay with us. We're going to take a quick look at what's moving underneath the markets. We're going to do that with Bloomberg's Emily Grafeo sitting to my left. And Bitcoin, man, it's hurting.
It is hurting. We're seeing Bitcoin down about 10% since mid-March when it topped that 73,000 level. And often when we see Bitcoin fall, we see a lot of crypto-linked stocks falling. So I'm looking at Coinbase down 4%, and then a number of other miners, Marathon Digital, Riot Platforms, Hut 8 Mining, all down about in the 4% range. The idea here is that perhaps if the Fed pushes back the date of the first rate cut, that won't be good for speculative assets like Bitcoin. But if you look at Bitcoin's year-to-date gains, it's still up over 50%. There's still a lot of momentum in the ETF space, despite maybe some of the flows cooling down from the initial month of that launch. So, yeah, Coinbase down about 4% here.
Yeah, of course. Important context that you add there, that's on the back of, what, 50% gains
Yes.
in 2024. But insurers also having a pretty tough morning.
Yeah, Humana, one of the largest U.S. insurers, down almost 11% this morning. And this comes after U.S. regulators yesterday didn't boost payments for private Medicare plans like the industry had come to expect. So the Biden administration announced that U.S. payments to Medicare Advantage plans will climb by 3.7%. But typically what happens in this industry is that the administration announces a proposed plan in January, and then they boost that number come the spring announcement. And that didn't happen this time. So it seems like the street not taking that well. We're also seeing competitors, United Health, CVS, also falling this morning on the back of that maybe lesser than expected boost to these insurance payments.
And if you think that's bad, take a look at PVH. Biggest drop since 1987.
Since Black Monday.
Oh.
I had to look at that twice. I'm like, wait a second, that was a really long time ago.
Yeah.
The earnings, I mean, for the fourth quarter actually beat expectations when it comes to EPS, when it comes to revenue, but the street really seems to be focused on the full year sales guidance, which was lower than consensus. PVH is the owner of Calvin Klein, Tommy Hilfiger, among a bunch of other retail brands. They noted that difficult macroeconomic backdrop in Europe could be weighing on the company, but overall, it's unclear exactly why the stock is down that much, 22%. We saw JP Morgan cutting their price target to 146 from 165, but they still have an overweight on the stock among a lot of other overweights on the street.
Yeah, it'll be really interesting to see if this turns into a buying opportunity because, as you point out, I mean, the actual earnings weren't that bad. It's just the outlook, though, that always gets you. Bloomberg's Emily Grafeo, thank you so much. Now, coming up, Tesla shares sinking after seeing its biggest sales miss since the early days of the pandemic. More on the...
That's crazy. Tesla and then SPY, bro. You took a dump. Fed Bowman, she should be live. Fed Bowman doesn't comment on monetary policy, speech, and text. Dud. So I already got that headline. So Bowman ain't talking anything policy related. The SOFR, the secured overnight funding rate, that's like short-term interest rates. So that's where like banks are pretty much borrowing. So yeah, it is very important. They're not doing, I mean, nothing with the cut. I mean, right now people are just worried. Nothing has changed. The same fear of no rate cuts, you had that last week. The only difference was that the bond yields finally moved, and then all of a sudden everyone's like, oh shit. It's kind of crazy. It's not like, again, I wouldn't even say the fears are new. It's just more data added to it. The clock keeps going, and then everyone's now responding. So we'll see. We could give it a little bit more time. A high bit on the high. Yeah, basically. Hot dog. I mean, you've seen this before. Just sometimes, just the market shifts on a dime on the narrative, but I don't think we're set yet. That's why I'm like, this one's finally big enough where it's like, okay, maybe we watch now that the yields are higher, but at the same time, I mean, I have watched the whole entire year of the market ignoring the bonds. So, I mean, it very well, if that data comes back in, we still have jobs and all that, could be a little dancing around, but for the most part, I mean, we talked about it even a couple of days ago, just finding out where rates settle, 4.5 or higher or 4.5 and lower. That may be the next thing that gets the animal spirits moving in the market. But other than that, I mean, I do think you got a little bit of a reality check, but I wouldn't say it's off any new info. Just you finally got the response today, so we'll see if that holds throughout the week and throughout the big data. Yeah, and corporate blackout window is approaching. That's what's crazy, considering earnings is literally right around the corner. Blinken says humanitarian workers have to be protected. Again, Bowman does not comment on any monetary policy. Marvel. And then Tesla coming up. The puts have dropped now. They're not red on the day. That's what I'm waiting for. But those puts were like 100% in the morning. You could get them now for like 20% gain. There's a couple that have gone red. Corporate blackout window. It's the buyback blackout. So like, I think it's like 30 days ahead of your earnings. You're not allowed to buy back your stock. So pretty much you enter in a blackout period where between now and when you report, you are not allowed to buy your own stock as a company, even if you have authorized buyback shares or money. I like VFC. I like the brand, but ever since they cut the dividend, I've kind of put them on like lower on my list. So I like the brand. I think it's a very quality brand. I think they have value. I do think they still pay the dividend, but I was going to buy it before they cut it, and then after that I was like, I'll wait. But they haven't bounced yet since cutting. PSX Energy. I mean, energy was doing very good, especially the energy. Like oil is up, but the like oil stocks are doing a lot better. A-Lab on the high. CCJ barely down. Bidunius went up, man. I'll take it. I think they're the only China play that's in the green right now. Jobs data wasn't that. Jobs data came in practically in line. Again, we were reacting well ahead of that, just like yesterday. I mean, you had such a big move today ahead of that data. Even though today is about the jobs data, I would argue that you were reacting to bonds and healthcare news and China all ahead of the market. And then the jobs data came in, and it just came in practically in line. The Fed is going to be coming out every couple of minutes or hours throughout the day. So we have one Fed speaker now. She's not speaking about policy. So who's next? 12 p.m., you'll get Fed Williams. Then 12:05, Fed Mester. And then after close, Fed Dolly. Oh, wait. No. These are all pre-market. No, 1:30. So you'll get Fed Williams in like an hour 45. There wasn't really any news this morning. It was just bond yields started to die again. And then people were saying we're worried about interest rates and then rate cut odds getting priced out. It's all stuff that was there prior. But then now this time the bond yields 30-year hit a new high of the year. 10-year is at the high of the year. So is the 2-year. And then people pretty much just worried about rate cuts. And then there was bad healthcare news of UNH, Humana, Cigna on the Medicare funding and how much they're going to be getting. And then that just added to the sentiment. But generally, people just worried about rate cut odds coming into June. And now that fear that was already there, that evidence kind of turned into fear. This is like if this could go lower than 1.7, it will be our biggest drop of the year. But we've done this 1, 2, 3, 4, 5, 6. You've had 6 times where you've been at the high, had like a 1% gap down, and then we go back into it. But then it just, again, depends on the data, where we're at, and then where the bonds actually settle, though. Like I was saying earlier, though, and I think this is what people are freaked out by today, if that 10-year gets to 4.5 and goes above there and holds, I do think that starts to get a little bit more concerning. Lulu getting interesting. Well, that PVH, I mean, a lot of news in the clothing industry today. SPY is dropping. I mean, today it's actually big. So, like, remember yesterday we were only moving like 0.25%. Today you gap down big and you move down big. You're finally below 5,200. SPY is down 1%. NASDAQ down 1.5. Actually, let me get you some movers here. Bonds are trying to come up. Another market drop in inflation. Yeah, well, that's, people are worried about the yields and whatever the data is saying with inflation, but the irony is that the data was already saying that before yesterday's data, but now it finally, maybe that was the straw that broke the camel's back, but generally, fear of inflation, lower rate cuts, higher bond yields, that is what is impacting today. And then right now, believe it or not, 112 names green. A lot of them are energy on the S&P, 391 in the red. Dow Jones, 25 in the red, 5 names in the green. Again, Chevron is the leader there. And then NASDAQ 100, 90 names red, 11 names in the green. Interesting. AXP flipped green. It's all energy that's in the green. It's American Electric. And then Excellion, Xcel Energy. Those are the top 3 on the NASDAQ. Amazon's going up. I don't know, man. You're getting a little bit of a green shoot off the bottom. I mean, we have a lot of room on the day, and then bonds are trying to climb up. So we'll see here. Again, what's the low? 5184. You're still below. Again, we couldn't get above 5,200. So that little bounce was 5,200, and you failed to get above it. Blinken, Israel arms sales consistent with law and policy. $5,190. TMF on the high. So again, bonds are trying to melt up here. I don't trust them at all. Just so again, usually on these days, it's either it's gonna melt up and bottom out, or it's gonna have these pops, and then halfway throughout the day, bonds will sell off half of this and then just end up right where they opened. Why is the market clapped? I might need to get Josh AI to handle this one. Pretty much rate fears. I don't have Josh AI open right now. I thought you'd never ask. I don't know. Is this a good answer?
The stock market is down today because investors are worried about inflation coming back up again and the Fed not cutting rates 3 times this year. This is evidenced by the bond yields hitting highs of the year.
I don't know. This is a long question. It's a long, you can get into it. Okay, let's try this one.
The stock market is down today because investors are worried about inflation coming back up again and the Fed not cutting rates 3 times this year. This is evidenced by the bond yields hitting highs of the year. Traders often freak out, as they have in the past, when bond yields go near 4.5%.
All right, we'll take it. All right. Bro, bonds have recovered half from the more. I don't know if I believe it. Because, again, the jobs data, I don't know if it was like that moving, but I'll take it. This is what the market needs right now. Because, like we're saying, anytime we get to these levels, everybody does feel the pressure. Bowman doesn't talk about policy. So, John Williams, that's going to be the next one in about an hour and a half. A-Core pause due to volatility. JRVR on the high, $9. I'm out of that one, but it was fun. Where's NVCR? Oh, they came down. Weed is pumping. Oh, it's down on the day, but this is still very high. No pun intended. But remember, on that news last night, right at close, weed stocks pumped up on the close. Yeah, Humana down 14. They're getting murked. All of them. UNH, they're down 6. Humana's the worst because they get the most from it. And then Coinbase on the high. They're still red. Again, bonds are going SPY right below 5,200 still.
The stock market is going down today, Edge, because you asked me the same question and didn't like the video. Okay, capiche, buckaroo.
Yeah. There you go. I got you. Yeah, well, GRTS, they hold it. Because GRTS, the data was really good. I think there's another even part of their drug. It's very, very good what they did. But then they did an offering of an indeterminate size at the market. So they pretty much said, yeah, we did very good on our data, but we're going to sell shares to raise money. But we don't know how much we're going to sell, and we don't know at what price. But we're just going to sell as much as we can, whatever we can, on an undisclosed amount. So they pretty much got a blank check to dump on the stock, and that's why it got murked. Oh, did they give amounts? I didn't. Yesterday when it came out, I didn't see anything. I read the thing. It just said at this time they don't have the pricing. Oh, there you go. I see it. It says price is $32.5 million. 8.3 million shares at a price of $150 per common share. Blinken says Israel's steps to allow aid into Gaza are insufficient. Why do all these bio companies get blank checks to sell and raise capital? They don't believe in their own company. Well, this is just how it works. That's like literally like how it is. So like that's why you don't invest in biotechs unless you like really believe in the drug, because it's either going to fail or succeed. And then you investing, you're giving them money, because with like the margins in biotech and how it works is that if you're able to, like, this is where you get your funding from. And if you do advance in these trials and that money comes to fruition, the return is going to be insane. But you got to think about it. Biotechs, like if you're like, imagine you had a drug company and you were making a drug, right? And like it's not approved and you can't sell it. How are you making money? You know, like think about it. There's companies, like there's a lot of these in San Diego, because San Diego is a big biotech place and there's a lot of healthcare. Like there's a company right now in San Diego. They have an office building in Sorrento Valley. It probably costs $30,000, $100,000 a month to rent. They have an office. They got 5, 10 employees. They got scientists, and they're creating a drug right now, but they don't sell anything. Are you following the story with me right now? So like, you got to think about it. If they are working every day, they're going into work, they're trying to create this drug and do all this stuff, but they have nothing to sell. How does this company survive, right? You know what I'm saying? How do they pay for it? How do the employees get paid? How do they spend the money for the research? Like, where does this funding come from to keep on the lights? If you don't have an item that you could sell to bring in revenue, you literally do not have the ability to bring in revenue. Where is your money coming from? You could get government grants, yeah. Or usually how it works is the stock market, right? We are funding their biotech endeavors. So that's why they get this blank check. They're selling this, they sell shares of their company, sell out, you know, people who believe and want to own part of this drug. They sell out, they get $10, $20 million by selling out shares. Then they take that, and then that gives them a runway, and it funds them for the next 1 or 2 years. But that's what happens there. That's why investors, when they meet endpoints and they do good, investors in biotech, they don't really care all the time if the company raises money, because then that means, hey, if you completed the goal and now you need more money, even the best thing you could do is complete the goal and still have money from the first round, right? But the general idea is that's how they fund all of it. It's all through investors until there's a drug to sell, or they never come out with a drug, and then investors pay the price. Mm-hmm. DJT's at 52. First time I've seen on the high ticker in like 48 hours. SLV catching up with gold. Where is silver? Boil on the high. And then Solventum going up. Solve. You think the rate cuts are priced in? No, I think, you know how like, do you guys know how like people, have you ever heard of range anxiety? Have you ever heard of like people driving Teslas and EVs and they get something called range anxiety, where it's like you're so worried about when to charge your car, like when you're driving, you never, like, you get this anxiety of like when you need to charge and like how far you're going to go, and how it's very real. It's very, very real. Yeah. So I think the market right now has rate anxiety. I don't think anybody really knows if we're going to do it or not. Because, again, the Fed futures say rate cuts. Right now, U.S. bonds say no. And then Fed futures, they're in the middle. And then you have 90% of the market that thinks that they're going to cut. And then you still have people from day one who haven't been. But I just think there's a lot of rate cut anxiety. We don't really know what's happening with that. Am I pro rate cut in June? I don't think they can, but I'm not like anything. I don't really care. I think all of this, ever since Powell flipped randomly, it just seems like buying time. I don't, and that's what I'm saying. I don't think I think you'll get chopped up and spit out trying to predict it from Powell. So it's just more, I'm looking for the broader shift, not necessarily trying to guess it. And I don't really care what happens. If it happens, it means one thing. If it doesn't, it leaves us in the current situation. And that's it. September. Well, remember, though, if they cut by September, I don't think you're getting 3 rate cuts. Because then there's only going to be the October meeting and then December, I think. So you literally can't even cut 3 times. A6. Advanced 6. A lot of things pinned. And then SPY holding up. At least the bonds aren't as... Bonds are down like, what, 1.4? Why do we need 3 cuts? The size does matter, but we don't really necessarily need 3. But the idea is that if inflation really is coming down and staying down, you would want interest rates closer to where the rates are at, or where inflation's at. So does that make sense? Like, why? Like, right now our rate's at 5.5. If you really believe inflation is going down to 2%, or even it's going to stay at 3, why would you have rates at 5.5? So if you really believe that rates were going to be down, you wouldn't want your interest rates to be high, like substantially higher than inflation. That's why you kind of want them either matched up. That's why neutral rate, where it's not affecting it, or inflation and rates are matched up, and the economy is chugging along. But in this case, that's where we're at now. Rates are higher than inflation. They're worried inflation will come back up. So that's why it's like, if they are confident inflation isn't going to come back up, then they want to lower 3 rates to get you to a rate that's more closer to where inflation's at. Otherwise, it'll cause a big imbalance and it could hurt other things. They're not saying this is, nobody knows where neutral is. That's why, because they don't know where inflation's going to stop. They are saying this is restrictive, meaning it's higher than inflation, and it should, tighten up the economy and lending and activity and demand. But for the most part, they're not saying this is their neutral rate. And if they are, they want, what they're looking at, neutral rate would mean inflation comes back down to 2, and then they could lower their policy back down to 2. That would be the most ideal. A NATO summit to focus on Ukraine membership roadmap. The rates don't matter with the current deficit pumping. Liquidity destroys any impact rates can have. I mean, this is where I think gold comes into the picture. And this is like, it's getting to the point where we've ignored it a lot, and we have, but that is always going to be in the background. And like that, I agree with you. I just don't know if the chickens will come home to roost. I call GLD this whole year. I hope it helped, man. I made good money on it. I didn't get that last leg, but like legit, we've been talking about it for very, very early. So I'm glad, man. But that's a fire one. I got my gold coins too, you know what I'm saying? You know what I'm saying? I got you, baby. Rates matter. Chat is a lost cause. Why are you talking shit about the chat, bro? Usually I ban you for that. I'll give you like a 30-minute ban. and then come back and think about that. It's okay, man, just because one person, but don't talk shit about my Chad. I don't think they're a lost cause. I think there's a lot of good Chads who know a lot of things. You don't want to delve into that aggressive economic, again, when your economic theory devolves into like calling the other people idiots, that just it's really just it doesn't become economics at that point. My core account at Fidelity is SPACs. That's how you get the 5% doing nothing. So you switch your core position to SPACs. If the chickens come home to roost. You've heard it. You ain't never seen Wolf of Wall Street? Remember, that's what his dad keeps telling him? For the chickens come home to roost. The chickens will come home to roast. Sense your frustration. I don't know. Are you talking to me? Because I don't know. I think I've been more frustrated other years, but like, even when I was answering earlier, like, oh, what do you think is going to happen with rates? Like, I don't even care anymore. So like, I would say I'm either nihilistic or boredom. I wouldn't even call it frustration. I mean, I like the plan. I'm getting free money on my cash. I have good investments, and like, and I have so much on my mind where I'm like, oh, this could happen. But like, I've just gone through this for the last couple of years. That's why I'm like, maybe it's boredom. I don't know what it is, or maybe apathy but like the way I'm looking at it is just, I'm chill. I'm not forcing it in that sense. I got a couple bond plays. I got it. It doesn't mean all plays will work for me, but the broader like big shift in the economy, man, I'm gonna let it hit me in the face and not play this little Powell game. But so I'm not really frustrated by it, like, because I got a long term. I'm collecting free yield. I'm just being patient, but sometimes it could just take a while for the stories and situations. That's the only thing. It just takes a lot of time. We already had the JOLTS jobs report. Powell didn't say anything. Powell speaks tomorrow. Where did Airbnb? He went below his home of 160. What are we waiting on now? I mean, for the short term, we're going to have Fed speakers, and then the rest of the week, it's going to be jobs data. But then in the same like middle broader thing that we're looking at, just we're waiting for the policy to actually shift, right? That's why people are worried about how many rate cuts, what the Fed is going to do, the data, what the Fed is going to do, the dot plot, what the Fed is going to do, and then the Fed hasn't done anything. So, and then now we're in April, beginning of the year, we're talking June, July cuts. That's 60 days away now. So it's like, that's what we're waiting for next is a real policy change. And we have waited for that for a while, but it just hasn't happened. So that's why I'm like, we could find short-term things to look at, and we have some this week. But as you progress, I mean, when it's all said and done, everything is hinging on where the rates actually go and what sort of process they do it by. Tomorrow just going to be a speech, but there may be a Q&A. It just may not be as much about policy. So again, Bowman spoke today, didn't bring up policy. How can they be talking? Well, again, we've spent 6 months talking about cutting, and it made sense because all of the data in the early part of it kept going down. It was lower, but now we're 2 months away from that date. Oil is up by $20. Bond yields are back to the same price. And inflation has not gone any lower in the last 6 to 9 months. So that's it. We're just running into the calendar when it's all said and done. But that is exactly what people are saying now. How can we cut? But then again, there's still some data sets. Who knows? Maybe your CPI comes in lower. You think September is the worst month to cut? Well, it would look awful historically, just because September is where we run into problems. And then if you had a cut, that'd be nuts. But this time around, I think people will probably attach it to the scale or the timing of it. Because if we get the first cut by September, I don't know if that leaves us enough time to cut 3 times. So, but then again, it's one thing about what the cut means, and then it's another thing about how much the Fed does it. So this is what I'm saying here is just like, you guys got to realize, yeah, you have till September. But like if you don't cut by June and July, it will be almost impossible to get to 3 rate cuts. So this is why everybody's hyped on June and July. Because look, if you don't get a rate cut in June, and then you don't get a rate cut in July, you have to have a rate cut in September. Otherwise, if that June, July gets punted on after everybody was so excited about it at the beginning 6 months ago, and then now you get to September and you don't cut rates, Powell just lied to you all year. Why? Because if you don't cut at September, there's literally only 2 Fed meetings left in the year. So even if you cut November and December, that would only be 2 rate cuts instead of 3, which you priced in on the dot plot from December of 2023. So that's why, like, as we get closer and closer, we're running out of time. So you only have 1, 2, 3, 4, 5, 6 Fed meetings left, and then one of them is in 20 days, 20-something days. So, yeah. But that's where it's like, that's why it's starting to get heated up a little bit. But every day closer, it will continue to be so. He was lying since the beginning. Cook data every time. You don't acknowledge that. I think Powell got a lot of things wrong, but I wouldn't go to the point of calling Powell a liar as much as I would call him sneaky. Powell reminds me of a girl who is a tease, and all Powell is doing is flirting with you and leading you on, and then every time you try to take him home, he's like, "What are you doing?" And then he's like, "Whoa, whoa, 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 whoa." You know what I'm saying? That's it. Powell Powell didn't tell you that he that he coming home with you, but he made it seem like he was coming home with you. You get what I'm saying? So you're like, "Oh, he lied, dude." I'm like, no. Because that's what the girl is going to say anyway. She's going to be like, "No, I didn't say that. I said I'm down to hang out. Oh, I said I'm down to come over, but I'm going to go home at 2 a.m. Who said just because I wanted to come over at 11:49 p.m., it doesn't mean that I said," that's what Powell's playing. Like, I don't know. That's the way that's why I'm like, okay, pal, you guys are like, what's he going to do? What's he going to do? And I'm like, man, fuck this. I'm not. Just fucking wait. Are you down or not, pal? Are you going to cut this shit or not, man? That's it. I'm not playing this fucking game. Not taking you out to dinner fucking every month on Fed Day. That's it. Y'all taking pal out to dinner every single month. And you're like, so you going to tell me? Are we going? You want to come over after and cut the rates? No, you ain't trying to cut the. Oh, okay. I ain't playing that game for him to look at me 6 months later and be like, I never said that. I never said I said it was just a projection. It was just a projection of rate cuts. It was just a projection. You gonna hold me to a projection? You gonna hold me to a projection? Really? Oh. Because Powell knows it. Powell goes up in front of everybody. He said, that's it. He said, I know what I could do. If I tell the market I'm coming home with them, rates will be, everybody will adjust. So don't worry. I'll let you know. That's it. Powell's a tease, bro. Powell is a tease. I rest my case. And y'all asking me to figure him out and give you an answer to this. I'm like, nah, bro. It's easy, bro. Just let him. That's fine, man. When the time is right, Powell he'll come around. He'll come around. Mm-hmm. It's a good analogy, man. It's a good analogy. It's like, that's all you think about. I need to feel a lot more confident before I cut rates. I need to be more confident that you are the one. I need to be more confident. And until we have a couple months gives me some confidence, but it's still not enough confidence. That's exactly what he says every single time. Every single time. You think he cuts in June and July? After all of that, you gonna ask me? Like, so you think he putting out? Josh, so like that, all that being said, you think you gonna get some on June? Huh, Josh? I don't know, man. I don't know. I got a great personality. I got a lot of good things going on, but I don't know, man. All I could do is just be myself, and I'll be there, but I'm not. That's it, man. I'm just there to have fun, and then I'll leave, man. But I don't have any expectations. Okay, 0 expectations, man. Mm-hmm. Not even thinking of putting out. Oh, man. One more time. Euro closing 30. If no rate cuts, market dumps. Maybe for a little bit until the market was like, well, when do we get it? And then we do it all over again. That's essentially what happened. We're end of October. Last we were worried. We're like, oh, my God. And then we were like, okay, rate cuts. And then, oh. You're not going to be able to look at your husband the same? You're going to have Powell in your head? Why? You'll be looking and be like, man, Josh said all relationships are based off of monetary policy. It's the same exact thing. I can't stop. When are you cutting rates? What? No, are we not? Some of y'all after this are going to try to flirt, and it's not going to work. Somebody gonna go up to a girl after this and be like, yo, what's up? Trying to cut rates in June? No? Okay. I'm just, if you need more confidence, I feel you. No? Okay. All right. If I could just show you this summary of my projections of where I think today will go. No? Okay, I'll leave. Thank you. Powell plays too much. That's the thing. Well, he does. That's what I'm saying though. Like this all started with someone asking, "Do I acknowledge like his lies?" And I'm like, in his mind, I feel like he doesn't think he's lying because he's like, "I never said that." So I don't know, man. I don't know. Powell is a trip, bro. I'm telling you. Especially with how the market reacts to all of it and how he's been doing this for a year, man. The guy is a trip. Any new UPS? They just got a deal with USPS yesterday. That was it. It was good news. They were up and then they sold off. Canada expects full accountability for those killings and will convey this to Israel. Strikes on humanitarian personnel are absolutely unacceptable. Canada Foreign Minister. So we, the market, are pulling back because Powell ain't going to... Well, people are worried. That's it. Just today, the data was already there, but more and more data kind of got it. But I do think it was the bond yields giving the signal. But like people are like, oh, shit, maybe Powell doesn't lower rates as many times as we think this year. It's just that fear or that idea is permeating within the market this morning. And then add that to a couple of bad news from Humana, some other thing, again, overseas. I mean, Germany was good, but the currency situation ain't good. He said cutting rates. Every time he talked about cutting rates, he sounded so confident. Remember last time we heard him a couple of weeks ago? He was like, we're cutting rates. So he didn't necessarily say 3 times. He said he's going to cut rates, but he didn't necessarily say 3 times. So again, back to the analogy. Yeah, gold fell down $20. That was a wicked gold pop, though, from the JOLTS. He was very confident, though, when he was saying it. That I noticed that. I called it out during the speech. I was like, bro, do you not hear him? He's like, he really was confident when he would talk about it. But then again, nothing about duration or I guess he told you by end of the year, but nothing about the size of them or how many times. Sono on the high. And then bonds climbing. I'll take it, man. Bonds looked hella hideous in the morning comparatively. And you will say soft landing 3 times before the chicken roast. No. Unfortunately, some of y'all didn't get that joke, which is why you need to repent. You know what I'm saying? Somebody was like, I don't get that joke, Josh. It's because you need the Lord. Okay? I'll pray for you. I'm just kidding, man. It's okay. Relax. That's another joke. It's okay. Oh, dude, I saw a Jesus joke the other day, and I laughed. I laughed so hard. I felt bad. I laughed. There's a guy. He made a joke. He dressed up as Jesus doing stand up, and I felt so bad laughing at it because like some of the jokes weren't good, but one of them, bro. What did he say? He made a Jesus joke about working out, and he said, "I went to a Jehovah Fitness." I died at that joke, bro. I don't know why. Yeah, that's what it was. He said, I started working out at a Jehovah's Fitness, but I had to stop because they kept bothering me. I went back to CrossFit. But I laughed. I laughed at that one. I was like, damn, that's a funny joke. I've never heard Jehovah's Fitness or CrossFit. I was like, wow. And then I like fitness, so I was like, that is a good one. Said, Lord, forgive me. Lord, forgive me. It's a solid joke. It was a solid one. You just got that one? It's okay. It happens. It takes a minute. It takes a minute sometimes. Don't worry. U.S. to sell $70 billion and reopen 4-week bills. And SPY near the low. Bonds going up. Ironically, though, everything's all down. So bonds are actually doing the best on the day. Bonds only down 0.5. That's again, the 2 years actually not that killed today. It's really only it's the 30-year. Microsoft getting volume. So again, we're at an interesting spot here. You're near the low of the day. The bonds look considerably better from the earlier in the day, but bad. Dollar's still back up. Names are more. Again, there's majority of everything's trading bad. It's not as bad as you would think, though. Tesla has bad delivery numbers. They came in really bad. It was 380 versus expectations of 460. So they missed by 80,000 cars. I think it was one of the biggest delivery misses on Tesla since COVID, since 2020. PayPal strong and resilient. Not bad. Oh, Tesla's coming back, actually. Ooh. You got to still pay 30% on the contracts. It's kind of a scam. I'm telling you, peak EV already happened. Yeah, I mean, dude, I don't even know. Because everyone was crazy about them, but, like, now I don't see people buying them as much, but then, like, I'm seeing stupider EVs. I saw it the other day. Bro, do you guys know they have a Mercedes Maybach EQS? It's the funniest thing in the world. And I'm like, who in the world is buying this? There is a Maybach electric Mercedes, all electric, and it goes for $200,000. It's a $200,000 Maybach EV. And I'm like, dude, how? Who is buying this? That's why I was like, I'll buy it when it's like $20 in like 5 years. It'll be like buying an iPad Nano. And I'll be like, I'll sit on it. I'll just sit in my garage in it. It has nice seats or something. But I'm like, man, that's crazy. Good for airport service. I mean, and the Maybachs are nice, but I'm like, man, that's crazy. I mean, I would just rather get a Maybach like GLS 600. But hey, shit. Don't mind me. I mean, the Cybertruck's not 200 grand. But people are, like, if you see a Cybertruck out right now, that mother effer spent like 130 to 140 on it, which is still kind of a lot. Which I don't know. I don't really like the Cybertrucks above 120. Even above 100, I think the Cybertruck's kind of a little overkill. But yeah, $200K for an EV, that's nuts. Tesla's at the low. I don't know. The contracts still have a premium, but if you do think they're going to flush more after Euro close, then there you go. Would you get an electric G-Wagon? No. Lucid Air was $200K. That is ridiculous. I would rather get a Maybach EV than a Lucid for $200K, but even that, this is a mind-boggling concept already. It's like what we're talking about is nuts. You know, we're talking like $200K Chinatown cars or $200K like Mercedes minivan EVs. Like, I don't do this. Is wicked. You like the canoes? Have you seen the BYD? BYD just came out with a car that looks like a McLaren, and it has hydraulics. This is going to be the Tesla Roadster killer. Have you seen it? The only thing I don't like about it is the name. Because I'm like, I can't drive this seriously and tell people what it's called. This is the Chinese BYD supercar. It's called the Yang Wang. I can't tell people that. They're like, what do you drive? I drive a Yang Wang. Excuse me? A Yang Wang. I can't tell. I can't say that to people out loud. It's just a fake McLaren. But like it dances. It like bounces up and down. It's like, it's pretty fire. It's a Chinese EV McLaren pretty much. It's the Yang Wang is what it's called. Yang Wang Coupe. It is not available in the U.S., no. Why can't you say it? Because it doesn't sound as cool. Sounds like, it just doesn't sound like a car. I've never heard of a Wang Yang. It sounds like I'm making it up. Do you see BYDs or any China EVs sold in the West? No. Again, I've known about some of these for a while, and they're really cool cars in China, but, I mean, we've made it pretty good business off of never, like, think about it. We don't, right now, you don't have any Chinese cars. You guys realize that, right? None of you have ever driven a Chinese car in your life. You've driven a Japanese car. You've driven a Korean car. You ain't never driven a Chinese car in the States. They just don't, they're not here. So China has really cool cars, and they've had EVs, and like they have crazy ones for a while, but I strongly doubt we'll have, if anything, maybe Japanese EVs if they find a way, you know, maybe a new Japan EV company and it finds its way, but that would be a big shift if you started seeing China EVs on our roads. MNMD on the high. DraftKings, too. DraftKings kind of waking up. Still negative. And then SPY. We are like right near the low of the day. Bonds just hit a high but chilled out. GE's on the high. We got 15 or 12 minutes till Euro close. Yeah, NEO's from China. But you don't see them here. I think somebody has imported a NEO. I think if you're down to go through the process and spend a little money, you could import a NEO, but I don't think I've seen a NEO in the States. But yeah, it is Chinese. They're selling BYD in UK. Oh, wow. No way. BYD is a threat. NEO's not. NEO loses money. So NEO's like the Rivian in China where they just lose money per car. But BYD is one where they're big, they're growing, and they're making money. DraftKings still bones. MXL. Why does that sound familiar? Max Linear. Don't be so sure about BYD. Well, I'm not in the sense of I don't invest in any of these. I like them. I know they're definitely on the list. It's them and Tesla. You are not banned. No. You are safe, my brother. Nvidia's even climbing up. Marvel. I mean, SPY. I don't know. That gap down was vicious. NASDAQ, SPY still down over 1%. I mean, you haven't moved any lower in like 30 minutes or so, but my goodness. No Tesla plays. I have contracts I'm looking at, but like I think I could grab a small one now just in case, but I think all of the puts are a scam right now on Tesla. If we burn a couple of hours or we get one little pop, all of these contracts are going to go into next. So you could go with the small play if you'd like, but I think I'd rather wait. The gap down was not from the jolts. The gap down was from bond movements and fear of rate cuts, and then the jolts. We actually popped at the jolts. This was the jolts here. We popped, sold off, and then we kind of stabilized, and then bonds, that saved the bonds. NATO proposes a $100 billion 5-year fund to support Ukraine. So does that mean 5 more years of war? That's a weird implication. Uber is like one of the only things green on the long term today. Unum Group target raised by JP Morgan. Where is uranium? Uranium staying chilled. Docu on the high. Uber's going up again. One of very few names that's green. And SPY, if we could break above here, next test is going to be 4,200. So remember, we got above here last time, but then we hit 51.99 and sold off after breaking 5,200 this morning. For BioMarin, Rumble on the high, and Ford. Rumble kind of popping, $7 to $7.30 in about 12 minutes. Rumble candles getting bigger. Rumble on the high right now. I don't know if there's any news. And then Ford, they started waking up too. Rumble. Cooler is going vertical. Why does it sound familiar? Cooler Technologies, 60-cent stock, up 58% at the high. Again, Rumble now up 1%. Adabe is on the high. They were at 492 earlier. SPY is not flat. No. Don't be deceived. Even though we haven't really moved too much intraday, like you've moved maybe like 10, 15 points. I mean, you gap down a solid 45 points, and you're still holding that down here. Ukrainian Zelensky signs bill lowering mobilization age for combat duty from 27 to 25. So now younger people can go to die for global conflicts. And then China President Xi holds phone talks with U.S. President Biden. Chinese state media. A core on the high. Oh, are they just unhalted? Damn, they're down 70%. Rumble keeps going. Again, I don't have a headline on that. I got you the first call out, though, but no idea what's going on. It's one of a handful of names that's in the green right now. And then, high ticker's actually running, but not all of those names are in the green. Xiaobao Tech, pause due to volatility. STX on the high. Is that green? No, they're still red. SPY coming up here, so get ready. 5,200 test again. 5195. We need a little bit more. If that rejects from here, it'll be ugly. And think about it, 15 minutes till Euro close. So Euro close, we're either going to be up or below 5,200, or we're going to be making that move around there. Oh, my goodness. $1, Bob. Amazon's done very well. Even yesterday, didn't sell off that much. Today, it's barely down. Remember, they were the one lagging. Amazon is actually, the chart isn't bad at all. I think a lot of other names have made some bigger swings here. And there's NIVDA. Again, Tessie's coming down. Option prices have not changed since last hour. So again, most of the contracts within one standard deviation are still green from yesterday. Ford keeps climbing. We saw that one with Rumble earlier. And then SPY's right at the level. Bonds have given up. So ever since SPY bounced off the low, bonds stopped that. Again, bonds already moved 0.1% there on the 30-year. Good morning. April 19th. Why is there so much open interest? Probably earnings and everybody positioning from the last quarter and just getting some time. And then it'll be 2 weeks ahead of Powell. And I think it might. And it'll cover CPI. So April 19th, you get non-farms this week. You get CPI next week. And then I think you'll get one more set of ISM data. And then it is the monthly contract, yeah. GCTS resumed trading. They were halted. They ran the other day. Rumble's going up. Calv on the high. Yeah, wasn't this thing? This thing went crazy the other day. This thing's down 17. XTIA 75. Seems like a lot of small cap runners. Okta wants to go green. Again, GE keeps going up. 3M, Solventum. SPY got a little bounce as well as bonds, but let's see here if this holds up. NVIDIA. High. NVIDIA on the high. 12 minutes till Euro close. Yeah, Biden had phone talk Tuesday evening. China's CCTV. Xi and Biden had candid, in-depth exchange on China-U.S. relations, issues of common concerns. Microsoft on the high. Adabe was a little lower. Superscripts is higher. Tripletree to explore a sale. CVS and Cigna. Those are the sympathy. I don't think Superscript is public. And then even Apple, someone said Microsoft's running. Microsoft kind of close to going green. SPY getting close to 5,200. I mean, that's it, man. Speak now or forever hold your peace. Do we break above 5,200 today or not? It's our first time falling below it since we went crazy. Why do we dump pre-market just to go back up? Well, sometimes there's the computers do what they want, but at the same time too, think about demand and think about any business in the world, right? Like, let me ask you, this was my number one OG example. I used to get, some of y'all met me in 2014. I gave you this example 10 years ago. Some of you, I told you this. Have any of y'all ever been to IHOP? Has anybody ever been to IHOP? You guys know International House of Pancakes? Does that sound familiar? You been to IHOP? Si, senor. Good. It's a good place, man. Stuffed pancakes, right? Or stuffed French toast. Fire. So, tell me this. IHOP in the morning, Saturday, 8 a.m. Is that place packed or empty? IHOP. Sunday, Saturday morning, 9 a.m., 8 a.m. Booming. Exact. You guys know this, right? Great. All right, Denny's, IHOP, 12 a.m. on a Friday night, middle of the night, Friday night, 12 a.m. Is it packed or is it full? Or is it empty? Still packed. Exactly. Yeah, why? It's the only place. I mean, everybody goes drunk to IHOP. Okay, now ready for this one? Wednesday at 1:30 p.m. Wednesday at 3 p.m. Is it packed or empty? Good. Empty. Awesome. So you understand the market then. You get it. That's what it is. This is patronizing? No, it's not. Because you got to understand how business operates in like a physical location. There's periods of people coming in and coming out. There is timing, exactly. Prices. You got to think, if you sold an item, there will be periods where 50 people are going to line up to buy from you, and then 2 hours later, no one's going to show up. Doesn't mean the price should skyrocket or drop to zero, right? And then you're going to run through areas of demand, of high demand and low demand. So literally, the stock market's like IHOP. You walk in, and that's why you're like, wait a minute, why did it sell off? Because there was a lot of people like, oh, I don't want to own this morning. And then those people are done, but give it a couple of hours, there's people who are coming in to buy, coming in to sell. But over time, it's just like an eBay auction. It's like putting an item up on eBay. You could have 10,000 units. You may have a bunch of buy nows at one price in the morning, but then in the middle of the day, as less people are buying, the price could go down lower. And then as more people come to buy, it comes in and then starts running up. So it's the same exact thing here with stocks. So you are watching literally people coming in to buy and sell, and throughout time, there's areas where there's a lot of demand and people buy, come here. You have somebody lined up, you're matching up the buyers and sellers, but then there's other moments where there's nothing there, and that's where you're watching price kind of move towards the demand, but it shouldn't change too crazy when it's all said and done. Good price, bad price. So welcome to IHOP. Welcome to IHOP, home of the long term. How may I take your order? Yeah, the Xi and Biden stuff, that came out a little bit ago. UNH, Humana, Cigna, new Medicare laws, or how much Medicare will be funding, and it came in a lot lower than people expected. Oh, I got two. I thought one of them was Tesla. Kind of looked the same. Bruh, Tessie. The contracts are dying. Every green pop, those contracts are dying now. So now they're back down to 15. I'm still looking at those. Look at the pop. XTIA, didn't Chad just call that one out? That's hitting another high, just gapped up. GCT 11 on the high. SPY 520. I mean, we need to get SPY 52, SPX 5200. I think that's literally the battleground right now. Because again, we broke below it the first time today, hit it, sold off, hit another new low, and now we're back up to it with 4 minutes, 4 minutes 30 seconds till Euro close. GSIT on the high. That's up 33. So again, I see a handful of random smaller cap names running still. Uber is one of the only names green right now. They're killing it. And NVIDIA is trying to go green. Still down 1.3, but that was a nice little run. Maybe we go higher after Euro close. Again, Europe, they're coming off the holiday, and that liquidity was lacking yesterday, but they didn't even do that good, even though there was good data in Germany. So we'll see, but I mean, I think there'll be a move on Euro close. I just don't know which direction. Because today's already a bad day, and then if it gets a little worse, it could be one of our worst, but it just kind of, rates are near yearly highs, so it's however the market, if it really wants to try to keep ignoring that or not. Starbucks broke 90. I like Starbucks, but I don't like that it's still got some major premium from last year. Or was that 2 years ago? I guess 2022. This is their low of last year. So I guess that's not too bad. But I don't know. I'd love a $70 Starbucks. Amazon, or is that the ETF? Infracap? Oh, AMZA? I thought it was like, damn, 52-week high. Yeah, Dabe hit a low and then popped. GSIT, they announced production of 2 Gemini APU servers. I'm still in CCJ. Yeah, I bought the puts. So I'm up on the puts right now. Not too crazy, but yeah. Like $100, $200, and then I don't know where the shares went. So like the shares, I'm down $600 from yesterday. And then the options, I'm up like 120. But I still have net profit on the shares, but I protected it, so that way, no matter what, it comes down. $70 for one Starbucks. For one share. NVIDIA going and USO. So oil and tech, little pop, bonds going down, XTIA. That one's still running up there. And Microsoft. Fed Williams in 30. And then Euro closed in 2 minutes. In 2 minutes with some good Egyptian food. Kufta. Kufta wa mocheya. But Chatadonia, let's get it. Because I need to go pee. So let's get ahead of it. Ladies and gentlemen, boys and girls, I hope you're feeling blessed. I hope you know you're blessed. But we've been here for 2.5 hours. We got 3.5 hours left to go. Or no, 3.5 hours, 4.5 hours. Sitting is the new smoking. Chatadonia, I need you to get beside your desk and do push-ups. Let's go, baby. Get beside your desk. Move the body around. Do 10 push-ups. Can't do 10, you do 5. Can't do 5, you do 4. Can't do 4, you do 2. Can't do 2, you do 1. Can't do 1, get our knees, do a push-up, plant the worm, anything. But get the body moving, baby. But Chatadonia, we've been here for, 4.5 hours now? So, listen, we've been here for 2.5. We have 4.5 to go. I keep butchering that, but here's the deal. I just need you to drop your shoulders. Can you do this for me? It's not even for me. It's for you. But just do it for me, okay? I want you to clear your mind right now. Don't think about anything. Listen to my voice and don't think about anything. Just stare blankly ahead. And the only thought in your mind right now should be relaxing your shoulders. Build a mind-body connection right now between nothing on your mind and relaxing your shoulders. Just drop it. Think about dropping them and drop them. Yeah. Wow, I feel good. See, no one's attacking you, bro. Relax. You see what I'm saying? You didn't realize how tight they were. So do it and just clear the mind and drop the shoulders. That's all you got to think about. That's it. You didn't realize it, bro. You got a lot of tension. A lot of tension. Woo. So there you go, baby. And then relax the jaw. Go. Breathe in really deep. Go. Breathe out with your tongue out. Do the dragon breath. Go. There it is, man. There it is. All you got to do. All you got to do, baby. Okay, let's get resistance. Bezos pays $90 million for third mansion in Florida. Wow. The Nuve calls are clapped because they got bought for 34. That's the thing. Your boy doesn't do the breath. Can you shout him out? Because he doesn't do it? Why? Why would I shout him out? I'll just say, have a nice day, sir. Maybe Josh AI could talk to him. Maybe he'll like Josh AI more than me. You know what I'm saying? You guys want me to do that? I could have Josh AI. Josh is a B word. Do your push-ups in breath. Don't be a baby back B word. Oh, yeah. So maybe, I don't know if maybe that inspired him more. I hope it did, but yeah, that's it. I'm going to hit my wall stretch now. I'll give you guys stuff to listen to. Europe is now closed near the low of the day, or like kind of the midpoint and below VWAP. So get the body moving, baby. And I'll be right back.
And so we want to build a big business, but we also realize that the purpose of a company is to do well by its stakeholders, and it's nice to give some money back to our earliest believers.
What does that look like? Give me size and scope on the divvy. And if you have more money in the bank and profit than you raise from VCs, give me those numbers as well.
Yeah, so the dividend, our Q1 dividend was in the middle seven-figure range. Do Not Pay as a whole has raised $24 million in total. So it's quite a sizable portion of what we've raised that we have in profits every year. And we're not resting on our laurels. We're thinking big. Sam Altman said that there can be $1 billion company with just one employee. And we don't think we're close to being there yet. As I mentioned, we have 7 employees. But with AI, you see companies like Klarna, where they've replaced 60% of their customer service workload with AI. Companies like Midjourney, where they have hundreds of millions of revenue and only under 20 employees. So that's really what we're inspiring to be too.
Let's just talk about the models. You mentioned Sam Altman there. How is Do Not Pay built? Ultimately, when you're using AI to negotiate some of these contracts and money off for users, are you underpinned by OpenAI? Are you agnostic?
We use OpenAI. I started the company 7 years ago when I got a bunch of parking tickets, and I realized if you know the right things to say, you can use templates to get out of them. But in the AI era, it feels like we can build much more exciting products. One thing I'm really excited about is AI bill negotiation, which we just launched.
Right.
Where we have robots log into people's utility accounts and start chatting with the big companies. And what's interesting is the big companies that use AI, we use AI, and the two AIs are chatting to negotiate.
Josh, you've been coming on the show for a little while now. As we always point out to our audience, you are not a lawyer, but basically the original premise of Do Not Pay was to use an automated service to challenge everything from sort of parking fines to bill disputes. How is the business growing? Give me kind of volumes, numbers around bills that have been successfully negotiated on Do Not Pay. How many of your proceedings have gone onwards to court, for example?
So Do Not Pay is all about helping people jump through hoops that they don't have time to jump through. So no one has time to wait on hold for 4 hours to save $12. So a lot of these cases, the squeaky wheel gets the grease and they don't go to court. We just send these letters to these companies and you get the refund. And we've won over 1 million tasks and cases for our customers over the past 7 years.
Do Not Pay CEO Joshua Browder. Great to catch up on the program. Let's get right back to that breaking news. President Xi of China, President Biden of the United States have had a phone call. The call's concluded, according to the White House. They spoke Tuesday, the first one-on-one communication since meeting in California last November. Bloomberg's Enda Curran in Washington, D.C. with the details. This is Bloomberg Technology, so there is an element of this conversation about the technology sector. What is the must-know about the conversation between President Biden and President Xi?
Well, as you say, first of all, the first time they've had a one-on-one since November. The White House briefing suggesting it's kind of a progress check-in in terms of where things have gone since then. The main points coming from our colleagues at the White House is that they spoke about the counter-narcotics trade. Of course, that's the topic of fentanyl, which is central to what both presidents have been discussing. And then there was a broader discussion around China's role in playing for stability in the Middle East, using its leverage there, and of course China's role when it comes to the war in Ukraine. Now, the whole broader point of this call speaks to the idea that both sides are continuing to try and stabilize relations. There are areas of cooperation, for example, in AI, as you mentioned there, but the focus of the call in terms of the details so far seems to have been both on security and on the counter-narcotics trade.
And there's a whole list of things that they could have talked about that perhaps would have more ramifications on the economies as well. I mean, you say that they're working to try and find at least, well, security and guardrails around AI. But at the moment, we were just talking how at the moment the US is leaning on South Korea to stop them exporting so much of their chip equipment and technology to China. How much is technology at the heart of a conversation here or not?
Oh, it's very much the elephant in the room. As you say, the call is about stabilizing relations, but that does not mean the competitive strategic edge that has gone away. And of course, the point being there, export controls, investment controls, the race for the US to get back in the game in terms of chip production and EV production and everything else. None of that has been changed or will be changed by this phone call or any other. This is about basic communications. Remember, it was only a year ago, actually, there were no communications between the two governments after the balloon incident. So it's just all about getting the basic guardrails in place. Don't forget Treasury Secretary Yellen, of course, among the officials going to Beijing. So no major progress from this. The technology race story hasn't changed. It's just about keeping things on an even keel.
Diplomacy at the heart of it. Enda Curran, we thank you so much for bringing us the latest on the Xi-Biden conversation. Coming up, look, we're going to go back to the private sector world for a moment. Atomico partner Laura Cunnell is going to be joining.
I was trying to buy time on that. We got to wait for that. I need to take another bathroom break. This one, the situation room, you know what I'm saying? Well, I can wait a little bit. I don't know if we got Biden or anything today. Good morning. It's only Tuesday. China, Xi, both sides should respect each other, peacefully coexist, and achieve win-win cooperation. China, Xi. China and U.S. cannot avoid exchanges and interactions, still less conflicts and confrontation. He says U.S. relations show signs of stabilization. On the other hand, negative factors in Sino-U.S. relations are also increasing. My clock says 8:38. Mine says I'm on time. I don't know if the stream is getting delayed for some of y'all. Some people said that, but I mean, all my stuff is accurate on my end. So you might be there, but I mean, I have the clock. All my clocks are matched up. Wells Fargo dying? When the bell rings, yeah. That's usually the YouTube delay. I think we're good for now. Schwab looks worse. I mean, Wells Fargo's bad. I mean, unless we get some bad bank news. But for now, banks have been actually very, very good, and then their earnings are the closest. So don't forget about that. I said on the watch list yesterday, I don't know. Do we go for the pre-earnings on the banks or do we wait? But last time it wasn't good, but in general, I mean, if you want earnings-related catalysts, those are going to be the ones that are right around the corner. JOLTS came in exactly the same. It didn't. Literally, I want to say it was 1,000 jobs different than last month, which is insane. The quits rate went down, which is surprising because then that means people aren't quitting as much, which got people last time when they were, it rose, meaning they are quitting as more, which means they could probably get another job. That's what people like last time that it lowered, but all around it was borderline the same. I would argue we had a bigger, if anything, I think the JOLTS stabilized us. It didn't make more of this morning worse, but, we were down, I'd say 3/4 of this move before anything even happened. Uber, again, one of the only names here in the green. I guess there's still maybe like 100 in the green. I remember the NASDAQ was bad. The SPY wasn't that bad. SPY has 85 green. So you have less than 100 names red on the S&P 500. Again, NASDAQ, you have 10. So if you could hold all of the names in your hands that are green today in the stock market on the NASDAQ, and then Dow only has 3 names in the green. Chevron, Dow, and Travelers. You won't believe it. I'm here today feeling rested, happy, and internally motivated, baby. Let's go, man. I'm glad to hear. Man. You went to bed? That's good, bro. I like to hear that, man. It's good. Last time you're like, it's been 18 days. I haven't slept, Josh. I looked at water, but I didn't drink it. I just been looking at it because I had so much to do. So, and it's just making me, I bought a pillow. I'm proud of you, man. That's good. So many companies filing to delay. A lot of the shitty ones are the ones that were like on the fence, but I think there was 2 of those this morning we read when they got murdered. Yeah, relax the shoulders, baby. The power and rest, baby. Tell them. He's like, you went to bed? Yeah, you don't remember. The other day he was like, I haven't been to bed. So I told him, I was like, just chill. So, I mean, honestly, going to bed and then being here, it's good to hear. He still woke up pretty early. So, not too bad. You didn't miss out on much. Vibe with it. Mm. $200. Relax the shoulders. Very good, Habibi. Yeah, 5,200. I mean, we're right there. Euro close. I guess you tipped it again. Right there, 5198, and then sold off 5 minutes after, 6 minutes after. So, honestly, not too much juice, but like after Euro close, we're right in the middle of it, but I don't know, man. 5,200, kind of stubborn. KeyBank says Chipotle may have increased prices in California. They're just speculating. Chipotle going up. Remember, Chipotle is going to split. I don't know when the cutoff date is. They split. I don't know. I don't know when the cutoff date is, but they are gonna. It's gonna be a 50-for-1 split. That was their latest news. That's interesting, though. Analysts are saying they raised prices. It's not like a company announcement. PTCT, XLV destroyed today. Medicare. Again, banks are on the low, too. I mean, bonds are at the level they were at from, like, that first little rally. Remember what I told you guys, though? I like that the bonds didn't go lower, but like I was telling you, very well, you could just rally up half of it, and then even by the end of the day, the bonds still could end up lower. So remember, that is part of today, you know, where rates are at climbing on the year. I mean, that is story number one, or I'm sure you could fit it into any story you'd like. Shareholders, as a record as of June, will receive 49 additional shares for each share held, which will be distributed after close on June 25th, 2024. All right, well, there you go. So June, you got a decent amount of time. DJT cost to borrow is 720%. Not bad. Not bad. Someone from Chipotle on CNBC said they're raising prices. Oh, I didn't see that. I thought it was just an analyst. Oh, yeah, I guess. $20 an hour. Maybe that's it. Sega. That one's on the high. McDonald's on the low. Yeah, Humana, Cigna. Again, it's pretty bad news for them. This is the first time you've actually had, like, government news finally hit these names, if you really think about it. Maybe next one will be IBB. If campaign promises to beat pharma are real, this thing will actually die. Because, again, it did back in the day, 2014, 2015. You actually had some of that, even prior to, I think even leading into your boy Obama, you would get way, way more movements on IBB and even XLV. Sega. Oh, that's the monkeypox. Why are we dropping today? Oh, I don't know if I have it saved. Hold on. I might have an answer for you. Just give me 1 second. I have a friend of mine. He's here. Let me see. Okay.
The stock market is down today because investors are worried about inflation coming back up again and the Fed not cutting rates 3 times this year. This is evidenced by the bond yields hitting highs of the year. Traders often freak out, as they have in the past, when bond yields go near 4.5%.
PS. Yeah, I got you, bro. But yeah, just inflation fears again. It's data from yesterday, and it's not like anything changed too much, but we are still kind of in this. DJT. So 7%. I think it was down another 10% this morning. Remember yesterday it dropped 10 or 25% on them reporting their $52 million loss. SPY coming back down now. At least you found VWAP. At least VWAP kind of has a shape now, but still trading below it. Once again, slightly below 5,200. You are selling off. This is now even about 20 minutes since Euro close. Coming towards the low of the day. Bonds already sold off a little bit of their rally, but they were already leading the way down, if anything. And actually, no, bonds are still the best performer. Russell down 2, and then UUP still down by 0.15. NKTR, the start of a downtrend. Well, today's bigger. I mean, at least, and then if rates keep climbing, we'll see what happens. But yesterday, I think people were freaking out when it was only 0.2, 0.3, but today is a little bit bigger. But, and then again, it just depends, though, on the rates. And like I've been saying all day, the irony of today and even the last 2 days is like none of this stuff is generally new. So like market freaking out about rate cuts or not pricing in rate cuts, like the market, the Fed futures already priced this out a long time ago. You know, it's just now, once again, more time goes by, the data is not moving. People are getting a little bit weird, but just the fact of the matter is that bond yields now are just climbing back up to that rate last time where things were a little bit more troublesome and worrisome. Well, that's just the fact of the matter there. So it seems like the same news always existed, but as long as the bond rates weren't high, you didn't have to answer to it. But again, once again, 4.5 might be a breaking point. But I said it earlier today. I mean, one of the like easiest things that you could understand right now is that like if you go look since like if you go look back to what's it called? Oh, I just blanked. Oh. Oh, yes. Go look back to Powell December 13th. That's when he announced the whole rate cut thing, you know, and everybody got all excited. Go look at gold price. Go look at the dollar. Go look at equities, the Russell, everything December 13th. The only thing that is below those levels right now are bonds. So the only thing that is now gotten weaker since Powell announced rate cuts is the government bonds, 2-year, 5-year, 10-year, 30-year, which is very, very weird, but also is evidence that people are kind of a little worried now once again, or the worry really is hitting of that inflation stuff. So, like I'm showing, like here's the 10-year. Like this was December 13th. So this was Powell. After Powell and December 13th, the 10-year went from 4.25 all the way down to 3.8 in 2 weeks. Right? So think about that. Now we're back, like you're actually higher than there. Yields are now a 1/10 of a basis point higher than when Powell and the Fed said they're cutting rates 3 times. So like I'm saying, you do this to any bond you would like. Same thing. Look at December 13th, long end of the yield curve, 4.3. Now it's above 4.5. Highest of the year. Again, 2-year note. I thought the 2-year climbed above it. But December 13th, 2-year went down to 4.9. The 2-year has a little bit more to go. And then it'll be there. But that's where I'm saying it's like we are just back to this level once again on all these yields. And now if you go look around, like dollar, everything since December 13th looks completely different. You go see the dollar from December 13th. Go look at the SPY. That's the rally. You haven't even came close to this. Go look at gold. Go look at oil. You see what I'm saying? Every single thing since December 13th is up. The only thing now that is given back is now the bonds. And that's where now all of a sudden everyone's like, oh, shit, maybe inflation doesn't come down or maybe the Fed doesn't lower rates. Well, the irony of all of it now is that the bonds are the only thing giving back the Powell gains. So everything else still has gains and somewhat, I don't know if you could call it confidence, but that's where we're at right now. The market data tomorrow, yeah, private payrolls and then Jerome Powell. I want to say, and then services too. ISM services. Well, bonds are the ones that matters, but like think about what's happened. And this is where I'm kind of saying now, like this is where maybe this is where we find it come back this quarter. But for the last 3 months, the market has ignored bonds. Because initially, the bond yields benefited. Right? Oh, let's go back to the 10. Like, initially they were like, yeah. And then throughout the year, the market was already up from here, right? But then the bonds gave back up while the market stayed up. Then the bonds would come down. Then they go back up. I mean, essentially, bonds have been ignoring things. So it's like, yeah, bonds are the only ones that matter. But if you've been looking for like a signal, I mean, no, bonds would go down. It doesn't say anything about the market. But now that's where I'm saying like maybe this is the breaking point where maybe market has to listen to the bonds if we get above that 4.5, and then now bonds are starting to unwind the Powell pivot. So maybe this is where the bonds, they always matter the most, but now maybe we start to see, some actual relationship between the market. Who knows? But we'll have to find out. But today is just a story of borderline the same thing, but now a different reaction by market participants. No, hold on. The wire's tripping out on me. I hope this doesn't shut me off. What the fuck? What is this? I didn't hear a sound. My computer's not loading up shit right now. Let's see. And then SPY still near the low. Yeah, Donald Trump up 7. Dropped like 20 yesterday, but they're doing good today. Oh, where's even MPW? I'm sure they probably got day 2 clapped with all the other REITs. Yeah, I don't know. My shit's messed up. I can't load up like web page. The YouTube chat's working, but I don't know if that gets refreshed. I'm screwed. Y'all can still hear me though, right? Their stuff was just acting up. I don't know if I might need to. I'm looking it up. I might need to reset everything, but I have to go off. China welcomes Blinken and Yellen to visit the country in the near term, and then Xi and Biden agree to maintain. That one's old. Puts on it's a little late, but you might be able to. I mean, if there is like more follow up, I would look at. I think Cigna isn't down as much as the others, so like some have dropped a lot more, but. Kind of just depends on the news playing out, and you kind of already had the hit for now. TTE. We have nothing without love. Peace out. Amen, baby. Have a good day. Have a good day. Yeah, 20 minutes past zero close. We're a little lower. I mean, it sucks because we've seen this before. The question is, do you watch it all day or is it very short-lived? But you can't get above 5,200. We spent about, a week and a half not going below it after going above now. But today, I mean, it's one thing about Euro close. Still very early. We're getting our action, but it's pretty clear here. 5,200 is the line in the sand. I mean, literally, it's even below. 5,200 is below VWAP. And then volume is at 28 million. We are at what? Almost at hour number 3. Not bad. 10 million an hour. A little bit above average, actually. Euro close was 9:30 last week in March because of we did daylight savings before Europe. So now that it's April, they've done daylight savings, so they close the gap by them coming back an hour or whatever they do. Oxy did good today, but I already got out of it. One more day would have helped out. Yeah, we're over it. The gap filled. CCJ came up a little bit. Baidu is green for a little too. Boeing gets U.S. Air Force contract up to $559 million over 5 years. A new country song? Oh, in due time. In due time. GCT. I mean, hey, Baba can move. Spy's getting a green shoot. Again, it's been a one-way road. You did 5 minutes up since Euro close, and then every other one went straight down. Oh, do I have Firefox on this one? I don't have Firefox, no. Fed Mester still expects Fed can cut rates later this year. Doesn't see case to cut rates at next Fed meeting. Fed policy in good place to navigate risks in the economy. Fed Loretta Mester. Come on. Oh, she hasn't even spoken yet. So this is all pre-written statement. She is voter this time around, I believe. Fed can cut rates gradually if economy meets expectations. Bigger risk to policy is Fed cut rates too soon. Strong economy gives Fed space to take stock before cutting rates.
And take advantage of the opportunity that's there. So that's what we do, and that's why I'm very excited about the work that is being.
It's all her pre-written statement.
The conversation
I'll put her on when she gets there, but this is all her pre-written statement hitting the wire. Fed Mester expects more inflation moderation at slower pace, does not expect smooth path back to 2%. Risks to economic outlook have become more balanced. Fed Mester now sees longer run Fed rate at 3% versus 2.5%. Revised up growth view activity now seen just above 2% this year. Sees labor market in better balance, expects higher unemployment rate. So she was one of the people who raised. Mester, Bostic, and I think there's one more. I think Waller. Those three recently raised higher, but that's actually kind of new info. It's not going to move us too much, but keep in mind, Mester is a raiser. So she's saying 3% now for long-run Fed target. Let's see. Right. I like Humana for the long term. It could be a decent one. I still think they're going through a little bit of a rocky patch, and there's still some premium, but that's a name that's not going anywhere. All right. I got this work. I'm going to play this. I got this working and see. I'm going to try to fix the other thing.
You out there in the community making the decisions that make the community go are the absolute lifeblood of the stuff that we do. Your input is invaluable, and I've been at this a while. I can guarantee you that from your lips go the words to the ears of the Federal Open Market Committee. So very much appreciated. Say hi to Lisa if you haven't already. Give her your business card because we'll be trying to hunt you down so that you can help make monetary policy as well. I'm going to forego sort of the usual bio. I have it on good authority. The Wikipedia page is pretty good. If you look up Mester, you'll learn all about sort of the formal stuff. I just want to introduce Loretta as a friend, as one of the most influential voices on the Federal Open Market Committee. When President Mester speaks, people listen. She's a tireless advocate for the community of the 4th District and really exemplifies all the things that make those of us who toil within the Federal Reserve proud to be associated with the institution that we are associated with. So please welcome to the stage President Loretta Mester.
Well, that was a wonderful introduction. Thank you very much. And thank you very much for pointing out the important work going on in Northeast Ohio. I agree with you totally. This is a great place. There's a lot of good activity going on. It's an exciting place to be, and not just this weekend with the things that Dave pointed out, but there's a lot of really good work going on. And the Federal Reserve Bank of Cleveland is really proud to be part of it and to help sort of further the work and inclusivity of our economy. So I'm really appreciative. And it's a real pleasure to welcome you into the bank. It was great to start having events after COVID and bringing people into the Federal Reserve so that we're less enigmatic and people can see what we do. And I really appreciate it. And for all of you who are on our Beige Book contact list, thank you. And for others who haven't joined us yet, we do welcome your insights, because it really does help us make monetary policy. And I can't say enough how appreciative we are really hearing what's on the ground, what's going on Main Street, what's going on in our communities. It really helps us think about the economy, what's to come, and making sure that we're setting monetary policy to really foster a strong economy for everyone. So thank you. Dave and I go back a long way, as he said. Perhaps I shouldn't even be pointing that out. But we worked together when we were both research directors. Dave was at the Atlanta Fed. He's still at the Atlanta Fed, and he was research director there, and I was the research director at the Philadelphia Fed. So we got to know each other pretty well, working on many things in the system. He's a first-rate economist, so I know I have my. I know he's going to give me a great moderated discussion, and he's going to keep me on my toes. So thank you, Dave, for that. Now, before we get into the question and answer portion, which is the fun part of the day, I thought it might be helpful to frame the discussion we're going to have by offering a few brief remarks about the economy and monetary policy. And I'm going to start by reminding everyone that what I say today, both in the prepared remarks and also in the conversation, will be my views and not necessarily those of the Federal Reserve System or my colleagues on the Federal Open Market Committee. So let's turn to the economy. So substantial progress has been made on inflation since inflation peaked in 2022. And that peak was in the range of 7 to 9%, depending on how you measure it. But if you look at where we are today, even though we've made progress, inflation is still above our 2% objective. PCE inflation is now running about 2.5%, whether you measure it year over year or whether you measure it over the past 6 months annualized. And core PCE inflation is running about 2.75% measured year over year and near 3% annualized over the past 6 months. The monthly inflation readings for January and February came in firmer than the readings over the second half of last year. And I think they're a good reminder of what we already knew, that the disinflation process won't be a smooth path back to 2%. Now, in my own view, I don't think the inflation picture has changed very much since the start of the year, because I'd already thought that the pace of disinflation would slow down this year. I continue to think the most likely scenario is that inflation will continue on a downward trajectory to 2% over time, but I need to see more data to raise my confidence. Some further monthly readings will give us a better sense of whether the disinflation process is stalling out or whether the start of the year readings reflect a temporary detour on the downward path back to price stability. I don't expect I will have enough information by the time of the FOMC's next meeting to make that determination. Now, a remarkable thing about the disinflation is that it's occurred in the midst of strong labor markets and economic growth. While the broader tightening in financial conditions over time has led to some moderation in the growth of output and employment, both have remained stronger than expected. And that relatively strong demand confronts the supply side of the economy that's healing. Supply chain disruptions and bottlenecks have improved over the past 3 years, and the labor market is normalizing. People have returned to the labor force over time, and immigration has also increased the supply of labor. Now, with imbalances between supply and demand in both product markets and labor markets easing, inflation has been easing as well. Now that the pressures on supply chains are approaching normal and the labor market is coming into better balance, we're not likely to get as much help on inflation from the supply side as we saw last year. So I've raised up my projection for growth for the year based on incoming economic information, including the official statistics, but also those reports that we receive from our directors on our board of directors, and Heidi Garland, our chair of our board, is here, and also our regional contacts, you in the audience, as well as our prospective new beige book contacts. And that information is really crucial because that's forward-looking. A lot of the statistics we get are backward-looking. The information we're getting from business and other contacts in the district is forward-looking. So in the most likely scenario, I still expect growth to moderate compared to last year's very rapid pace. But instead of the economy growing under trend this year, I now expect it to grow a bit above my 2% estimate of trend growth. I expect the labor market to continue to come into better balance this year, with a slight uptick in the unemployment rate from its current very low level. And I expect further progress on inflation, but at a slower pace than we saw last year. Now, if the economy evolves as expected, then in my view, it will be appropriate for the FOMC to begin reducing the Fed funds rate later this year as inflation continues on its downward path toward 2% and labor markets and economic growth remain solid. Now, these reductions should be viewed as a normalization of policy back to a neutral level as the economy returns to price stability and maximum employment. But of course, the actual path policy takes will depend on how the economy actually evolves. Now, my forecast is similar to the median among FOMC participants in the summary of economic projections that were released after our March meeting, except I see somewhat higher inflation this year. Also, in my projection, I've raised my estimate of the longer run federal funds rate to 3%, compared to 2.5%, which had been my estimate for some time. And I raised my estimate to reflect the continued strength and resiliency in the economy despite high nominal interest rates and higher model-based estimates of the equilibrium interest rate, the so-called R-star. Now, I've been discussing my view of the most likely scenario, but there are several risks to the forecast, including continued heightened geopolitical tensions, slow growth of the Chinese economy, potential deterioration in conditions in commercial real estate markets, renewed stresses in financial markets, and on the upside, the possibility of stronger than expected productivity growth. Now, at its meeting 2 weeks ago, the FOMC decided to keep the target range for the Fed funds rate at 5.25% to 5.5%. And reiterated that it doesn't expect it will be appropriate to reduce the target range until the committee has gained greater confidence that inflation is moving sustainably toward 2%. Now, with inflation moving closer to our goal, the risks to achieving both parts of our mandate have become more balanced. Now, when we were tightening policy, we really needed to focus on the inflation part of our mandate because inflation was so high and the labor market was strong. Now, risk management with respect to both parts of our mandate will need to be the hallmark of monetary policy decisions going forward. If year-ahead inflation expectations continue to decline, maintaining the current level of the nominal Fed funds rate for too long would effectively be a tightening in our policy stance, which would pose an increasing risk to the maximum employment part of the mandate. On the other hand, moving rates down too soon or too quickly without sufficient evidence to give us confidence that inflation is on a sustainable and timely
EDR
path back
halted,
to 2%
news pending, TKO
would risk
taking off on
undoing
that.
the progress and the good progress we've made
EDR
on inflation.
halted, news pending, TKO
At this
taking
point,
off.
I think the bigger risk would be to begin reducing the funds rate too early. And with labor markets and economic growth both being very solid, we do not need to take that risk. Now, our current monetary policy stance puts us in a good position for managing risks that can manifest
She's a little
themselves
hawkish,
on
but once
either
again, they're
side.
doing the whole talk about cuts. I'm
If
trying to
labor
fix
markets
something right
deteriorate,
now without having to
we
restart
can
the
move
stream.
rates
The
down
wire's not
sooner and
working
more
for me
quickly
right
than
now.
in our baseline. Rather than view that as normalization, the intention would be to return to an accommodative stance of monetary policy to support the economy. On the other hand, if inflation appears to be stalling at a level above our goal, we can hold our restrictive stance for longer than in the baseline. Now, in contrast to where we are now, our policy was not well positioned when we started our tightening cycle because the policy rate was so low and inflation was moving up persistently. We needed to raise rates fairly aggressively. At this point, what we're trying to do is to calibrate our policy well to economic developments so we can avoid having to act in an aggressive fashion. And indeed, if the economy evolves as I expect it to in my baseline forecast, I anticipate that we'll be able to move rates down gradually as inflation and inflation expectations move down, allowing us to continue to manage the risk to both sides of our mandate. But let me reiterate, the actual path of policy will depend on how the economy actually evolves. So the FOMC job continues to be to assess the implications of economic and financial developments for the outlook and the risks around the outlook, and given that assessment, calibrate monetary policy so that inflation returns sustainably to our 2% goal and labor markets remain healthy. So that concludes my brief summary of my outlook and where I see the economy, and I'm really looking forward to the conversation that we're going to have.
I knew I would forget something, and I forgot to tell you that there are these note cards on your table. So please, if you have questions, write down your questions on the note cards. Who's going to raise your hand up, and some of the crack staff at the Cleveland Fed will come by and collect them and deliver them up to the stage.
You say the crack staff? Yo, what did we just say?
Okay.
Is this on?
We good? Yep. Thanks for the remarks. So let me start with a couple things that are confusing me. So I won't implicate you in this, but I think it was pretty clear a lot of us were surprised about the strength of the economy in 2023, and fair enough to say maybe a little bit surprised about the strength of the economy so far this year. What do you attribute the kind of amazing resilience of the U.S. economy to?
Well, it's always dangerous to count out the resiliency of the U.S. economy, but you're right. I mean, if you think back, over a year ago, most economists were thinking that we would have a slowdown in growth by now. And we just haven't seen that, right? We've seen the economy continue to perform. I think there's a couple of things. One, there was a lot of support during the pandemic for the economy, both monetary policy and fiscal policy, appropriately so. I think people also forget about some of the dire forecast about when COVID first hit, what could have happened to the U.S. economy. And some of that supported growth going forward and supported growth being more resilient than expected, because that support for the economy lasted, I think, longer than a lot of us thought. We were always looking at, getting information from banks who were on our board about, are deposits running out, or the people, still have a lot of money on hand, and a lot of firms and people did, and households did. And I think that support for the economy has lingered on. The surprising thing is usually what you see is when you have interest rates running up as fast as they did and as high as they did, you would have expected that to have a real dampening effect on the economy. And I think most models would have suggested that. But we haven't seen that yet. I still believe that we're going to see moderation in growth, and we're seeing that happen already. We're seeing that in terms of investment in housing. Yes, recent statistics show that we're seeing some housing starts and some pickup in housing, but if you look over a longer period, that's been subdued, right? And investment has been subdued in equipment and software. So we're seeing that slowdown, and we're seeing some slowdown in hiring, but in a normalization method, not in the economy is, having not a strong labor market. We're seeing rebalancing there. So I do think we're going to see moderation. I just don't think we're going to see it as as much as I had anticipated, because I had been thinking this year we would see below trend growth. Now I'm a bit above trend, given what we've seen so far.
So you note that we are not quite where you think we ought to be on the inflation front. So does this strength in the economy just kind of doesn't seem to be abating very quickly? Does that complicate the inflation picture or no?
Well, I think one thing we have learned is that you can have disinflation happening in this environment without necessarily seeing a big slowdown in growth. And I think that's going to be kind of a characteristic that we have to carry with us. So just because the economy's strong, I don't forecast that in and of itself, right, is going to necessarily mean inflation will stall, or the disinflation process will stall, or that we'll see inflation resurge. But certainly you look at that and you have to put that into your calculus and what's happening in the economy. I mean, the other thing is, as I said in the prepared remarks, is I have raised what I think the long run interest rate is, which normalizes the economy. And I think that may mean that, although we've raised interest rates quite a bit and they're at a high level, maybe we don't have as much restraint on the monetary policy side as we were thinking either. So to me, the key is I want to see more evidence that inflation is coming down. I don't expect it to come down as fast as we saw in the second half of last year, but I still want to be more convinced that it's on that sustainable downward path. Yeah, there'll be bumps in the road from month to month, but we need to see more evidence that that's going down. And if we get that, then I would be comfortable, thinking about starting to normalize the interest rate back to something that's getting down closer to a more normal level over time.
So you don't think that we're returning to the pre-pandemic experience of extraordinarily low interest rates for a long period of time?
Yeah. I mean, I don't think the equilibrium interest rate is going to be as low as it was for a number of reasons. And we know that there's going to be investment that's needed going forward. And I think that investment will actually raise some potential growth in the U.S. and across the world, right? People are making investments in climate, to control climate. People are making investments in AI. People are making a lot of investments, right? And that investment, I think, means that we'll have a higher interest rate. There are demographic factors that would push down the equilibrium rate. So where it equilibrates, I don't know. But I see my estimate is I've raised it to 3%. Maybe it'll end up being higher. Maybe it'll end up being lower. But in the period of time that we're talking about, I think it'll be elevated.
So I take it that's a fairly optimistic reason that you think interest rates are going to land a little higher than they were prior to the pandemic, growth and productivity. And
I mean, I take the optimistic view. There are other reasons that you might think they might be higher, like debt levels across the world. But all these factors feed into that equilibrium. So yes, there could be not as positive reasons, but there could also be positive reasons.
Well, sort of speaking of debt levels, a question of, although it's clear that we don't want to comment on fiscal policy as part of our responsibilities are elsewhere, but so when you think about things like IRA, CHIPS Act, the infrastructure bill, is that part of your story for why you think kind of growth is going to remain in a pretty solid place, and part of the story of why maybe interest rates are going to be higher than kind of what we've experienced?
I mean, there's great potential that I think it's clear that we need infrastructure spending in the U.S. I think we've underinvested in that. And the potential of those acts to add money to actually support communities that are building, I think, are important for the growth story going forward. So, I look at that as investment, right, that can have a positive return in terms of the productivity of the U.S. economy and the potential growth rate of the U.S. economy, and therefore a higher equilibrium interest rate going forward.
So let's think about this growth picture a little more and its connection to sort of the kind of the inflation picture as well. So I got a couple questions here having to do with, as you kind of project forward, what parts of the economy feel to you like they are going to remain perhaps quite robust on the spending side. Is the consumer going to hang in there? Is the consumer not? Is these fiscal policies going to have an outsized impact? But then on the flip side of it, what's housing inflation going to look like? What's consumer kind of food prices and the things people seem to care about going to?
Yeah, I mean, so let's look at housing, right? A very interest rate sensitive sector. What we've seen is rents have come down. If you look at the components of the CPI or the PCE housing index, that's one of the ones that has been stubborn in terms of not turning down as much as we might have thought it had. But if you look at rents, and we do work here that looks at measuring rents and new leases, right? Those indicators all point to that housing inflation will begin to come down. And so that's something built into the forecast, that the expectation is that'll come down. The most sticky part of inflation typically is the services, core services part of inflation, and that we have seen that start to come down again, not as quickly as we saw.
EDR, I don't know if they're still halted.
Again, that's moving in the right
TKO,
direction.
Troy's posting that
and
news
goods
there
prices,
in the chat.
you know, before the pandemic,
looks like they're getting bought out $27.50
there was negative
in cash.
inflation in good prices.
They're already at 25. So remember
then
what
during
happened
the
with
pandemic,
NVR
of course,
yesterday.
We saw that
or
change.
Nuvei.
So that distribution of where the price increases is coming from has
But
changed over
I think TKO
time.
gets cash out
but
of
we
that.
need to see continued progress on all parts of inflation to get the total inflation down.
TKO isn't party.
And
will
my
remain
expectation
publicly
is we
traded.
will see that. In terms of strength, I point to the district, right? If you talk to manufacturers in our district, it's a mixed picture. Stable conditions in many, but others are saying they still have
CCJ
orders
about
coming
to go
in, and
green.
they're seeing a pickup in
That'll be good. We haven't had 2 days in a row.
Households seem to be doing quite well. Yeah, there are signs that some segments are a little stressed. If you look at delinquency rates on credit cards, they're starting to pick up. But overall, the overall picture on the consumer side is
Silver
that it's
Lake
still
to
a
take
strong
Endeavor
consumer
private,
picture.
$27.50.
Are you of the belief that the excess savings that we
I should have
observed
grabbed those
over the
options.
course
If you
of
got
the,
them from the call out, they were like 30
policies
cents.
designed
like
to kind of
$1.20
prop
now.
up the consumer during the pandemic? Do you think that's pretty much played out?
So again, I think it depends on the category, but yeah, if you look at the lower income families, right, that there's signs that that has played out. And that's why we're seeing sort of a pickup in credit card debt and also credit card delinquencies. You know, they aren't at levels that we would have think would be high or even medium, right? They're still at very low levels when you talk to bankers, but nonetheless, you're beginning to see that. But remember, part of the mechanism here is that we're going to have some rebalancing in both the product side and in the labor market, and this is sort of a normalization of activity to bring supply and demand into better balance so that we can get that last bit of inflation coming back down to 2%, so we're back to equilibrium.
So that last bit, I think you probably answered this question for the most part, but it's because you think that sort of the sticky parts of the kind of market basket, if you will, are the ones that have yet to move, and we need to kind of see that happen?
Yeah, that, but also, you know, if you look at last year, you know, there was a lot of disinflation, which was fantastic. But we had real help from the supply side, right? The imbalances that we experienced over the, you know, pandemic and then aftermath, right? The supply chain issues, the disruptions, the bottlenecks, right, which had propped up prices. You know, we've seen a lot of normalization there. Maybe not in every segment being back to normal, but there's considerable progress that's been made. And that really helped us last year in the disinflation. I don't think we can expect to see as much help there. And similarly on the labor market, you know, we've had a lot of people come back into the labor market in terms of workers, right? So I don't really think we can expect the supply side to have as big an impact on that recalibration and balancing between supply and demand. So it'll have to be more on the demand side this year. And I think that probably means we'll see disinflation continue, but not at the same pace that we saw in the second half of last year.
Well, let's turn to the labor market for a moment then. So again, in the category of stuff that seemed incredibly surprising, we saw the U.S. economy create 220,000 jobs a month or so, pretty consistently for the last couple of years, without a whole bunch of change in the unemployment rate without a large burst of wage inflation, if you will. Maybe you don't like that term, but so what's the story?
Yeah. Well, I'm not sure that all the businesses out there would say there wasn't high wage inflation, because there was.
Did he just
increase
growl
in
at her?
wages.
Did y'all
As you
hear
know,
that?
in the Atlanta Fed, you published the great
Endeavor
data
deal expected to
on
close
wages.
by end of first quarter.
Things are
25. I just heard a growl.
re-equilibrating now.
I'm trying to
And I
fix
think
this,
people
bro.
have to remember
The
that
We ran
the
into some
pandemic
big
was a
issues.
huge shock.
Half of my
to the
wires
economy.
just not.
A huge shock to
not
everyone
connecting.
on non-economic grounds, but in terms of the
restart.
economic grounds,
But
it was
I
a
can't.
huge shock to
We already
the economy.
departed.
People
We
left
haven't landed.
the workforce, right? We had statistics came out, or a study came out just yesterday from the St. Louis Fed about the fact about retirees not coming back. You know, they left early, they didn't come back. So there was a huge shock to labor supply during the pandemic. And then there was a huge demand, right? When the economy reopened, demand went up. So there was this real imbalance in the labor market. We saw wages go up significantly. And now we're getting to the point where things are rebalancing. Now, it's true that the employment growth has hung up month after month stronger than I think many economists thought. But the way it's being normalized, it's a lot of firms saying they're not hiring as many people. So if you look at job openings are coming down, right? They still want to hire, but they're not looking for the same number of employees as they would have a year ago. And so that's been what the mechanism has been. It's more on that opening side, job openings and vacancies, as opposed to layoffs or unemployment. And so we're seeing that rebalancing the labor market without seeing, as you might typically see in the economy in a business cycle, an increase in the unemployment rate. But now that we're getting kind of closer to balance, that's why the Fed has to be now focused on both sides of our mandate. We can't just focus on the inflation part of the mandate, as we had to and we must at the beginning of our tightening cycle. Right now, it's really a balance, right, looking at both of those parts of our mandate and taking them both into account so we can calibrate policy to get back to both price stability and maximum employment. And I think that's going to be the challenge going forward, is that real calibration as the economy gets back into better balance.
So where does immigration fit into the whole labor market equation in your mind?
Yeah. So as everyone I'm sure knows, right, the immigration statistics that were revised and came out a month ago showed that immigration was much higher during this last, several years than we anticipated or than we measured, right? It was a measurement issue. And that really raised the supply of labor. Again, another source of labor. Another thing that helped alleviate some of the things that you would see necessarily in a business cycle where things were equilibrating. Again, can we count on the same level of immigration going forward that we saw in the past couple of years? I don't think so. So again, that's going to be another thing, normalizing the labor force. Again,
UMC
making sure that
6.
we look at both sides of our mandate is going to be important.
I mean, these Mester comments are hitting the wire.
Labor market. So what do you think
you
that
got
looks
a couple
like?
of them already.
So I think so in my forecast, what it looks like is we're going to see some slowdown in employment growth, and we're going to see some slight uptick in the unemployment rate. But remember, we're at a very low unemployment rate. We're still near 50-year, 40-year lows in the unemployment rate. So we'll see I think that normalization will mean that we'll see a slight uptick in the unemployment rate. But in my baseline forecast, I don't anticipate
Honeywell
see
selling
unhealthy labor markets. I
PPE
think we're going to
business.
see healthy labor markets continue.
You're getting a couple
perhaps
headlines
not
from
at
TKO
the same level of conditions.
to Honeywell,
and when you
now
talk to
even UMC
businesses,
getting clapped.
I
don't know the
think
news on
they also
UWM.
say that it's become much easier to hire than it was a year ago. Wages are still elevated, but not at the same level.
For more than
so
$1 billion.
a year ago,
HBI.
firms were saying that they anticipated
Dude, what
wage
the hell?
increases
You're getting a
would
lot
be
of headlines.
5%.
HBI dropping
now
off that.
When you talk to them,
now
it's
HBI don't have
3.5% to
anything good.
4%. So
But they get
again,
$1
that
billion.
kind of process is going on.
You got Honeywell selling
and I think
a
that'll
unit,
continue,
and then
and we'll get back to
HBI
better
selling
balance
off
in the labor
Champion.
market. But I anticipate labor markets will remain healthy, if not at the current level.
So let me ask you a framework question, thinking about the labor market. So there was a pretty substantial change in kind of the way the committee was going to think about kind of deviations from normal. couple years back. Do you feel that's worked out pretty well for us?
So I don't think that framework changes per se changed the way the Fed was thinking about monetary policy during this period, right? I mean, I know a lot of people attributed the change in the framework as sort of guiding the decisions. I think what was guiding the decisions was the fact that there was a lot of uncertainty around the path of the economy coming out of the pandemic, during the pandemic, of course, and then after the pandemic. But we were still focused on trying to set policy to make sure that we would get back or stay at price stability. And when prices started going up, I think the committee was thinking that it was supply shocks, which it was, right? But that they wouldn't be as persistent as they proved out to be. And I think that's kind of the way it did. I don't think that had anything to do with the framework. I think that had to do with sort of looking at the past and extrapolating that in current situations. And what it turned out to be was that this economy was very different than the past. So you need the past to help guide your thinking, but this was a very different economy. And so, you know, we saw those price pressures building. And yeah, we probably were behind, but then we took the action that we needed to take to get the level of the funds rate up to a place where we've now come a long way on that journey. Inflation's not back to 2% yet, but we're well down from those levels, and we've been able to maintain a healthy labor side. So again, I think, you know, this is a difficult economy to navigate, and I think, you know, we use our economists to help guide us. As you know, as a director of research, you've been, so you know how that works. But, you know, in the end, right, I think we're in a good spot now in terms of both where the economy is, but also where monetary policy is, so that we're able to sort of, whatever the risks come, right, on either side, we're well positioned now to handle those risks. And I think that would be, if I had to characterize the achievement, that's an achievement.
Okay, let's turn to financial markets for a bit. That's always fun. So I was watching carefully sort of what's going on in the Fed funds futures markets, and lo and behold, it looks like all of a sudden there's been a change of heart. Having spent the last couple of years, I think, having what looked like a complete disbelief about the Federal Market Committee's willingness to kind of stay higher for longer. Now that appears to maybe even have flipped as of this morning. So two questions. One, why do you think there's been this disconnect? And two, does that make your job harder?
The disconnect is interesting. Remember, everyone's trying to do the same kind of work, right? So the Fed, we're looking at the same data, right? And we're trying to say, okay, what is that telling us about the economy going forward, right? So we're all trying to take in the data, financial market data, data on the economy, reports from our directors, reports from contacts in the district, and we're trying to use that data to project out what's going to happen to the economy. Financial markets are doing the similar kind of thing. They're taking in the data that comes. So there's a couple of reasons that you might have a difference in sort of our expectations and theirs. They may be reading the economy differently than we do. And remember, right, when you come out of something as big a shock as the pandemic was, right, your models aren't necessarily tracking. It's very reasonable that you'd have disparate views, right, about what's happening in the economy. And I think part of that disconnect was that. And then they infer back, okay, if that's where the economy is going, right, then this has got to be the path for the funds rate. And remember, the markets are not one person, right? The markets are disparate views themselves. You had a lot of economists saying we're going to go into a recession and it could be a bad recession. You had others saying I don't see any recessionary. And so when the markets kind of parse that, you would get differences in terms of sort of what the appropriate path of policy is. I think what's happened now is as things have normalized, right, you get more common view, I would say, of where the economy is and where it's going. And so you'd expect, I would think, that you'd have sort of more kind of less division and more sort of common view of kind of where the economy is. Not exactly lined up, but at least more in line because they're looking again at the same data that we're looking at. We're in a good position with policy right now. I think they interpret it that way too, and now we can sort of move forward. Now, is it easier when we're aligned? Yes. I mean, I think in fact, if you think back, right, we try to be very transparent as we can about our thinking about the economy. Why do people go out and talk about the economy? It's because we want people to understand where we're seeing the economy going and the rationale for our policy actions or inactions, as the case may be. I think it actually makes policy more effective when expectations are aligned. And so I think it is helpful when we don't have the disparate views. But I take the disparate views as also a signal that we need to be explaining our policies better so that people understand them better.
Yeah, so let's keep on the communications issue. Got a couple questions in here. One is pretty inside baseball question. So deviation between the CPI and the PCE and measures of inflation, and of course, public in some sense sort of focuses often more times on the CPI than the PCE inflation number that the Fed is focused on. So there's a divergence. You talked about the divergence in the rationale for potentially cutting rates between something that is sort of defensive versus something that is offensive if the economy begins to soften. So how do you think about these communications problems and how do you solve them?
Well, I think communications are very important. I think that, if you look over time, right, back in 92, we weren't even publishing, we weren't even telling the markets what the action was, right? There were no statements. You had to infer from what was happening in financial markets. Oh, I guess they raised interest rates, or oh, I guess they left them the same. We've come an incredible long way from there, the Fed has, right? There's the press conference after every meeting. There's the statement. There's the minutes that get released. And I think all of that has helped. We have the SEPs, that Summary of Economic Projections. I think these are all very good developments. I know sometimes the Fed is criticized because you have all these people out talking. But I do think it's improved sort of the understanding of what the Fed is thinking, our goals, what their rationale for their policy actions are. There are certain things. Technically, we prefer to focus on PCE inflation for technical reasons. Our goal is in terms of that. But if you look at sort of the trends in both the CPI and the PCE, they've been similar. And we look at all the inflation statistics. We publish a lot here. We have a Center for Inflation Research. We publish the median PCE inflation measures and others. And all those numbers, right, give us a sense of where inflation is going and helps us forecast and then calibrate our policy. So again, I don't see necessarily there's a big disconnect between inflation. I think everyone agrees that high inflation is a real burden on the economy and especially a real burden on lower income people. And it's particularly in this cycle, because in this cycle what we found was the highest rate increase or inflation rates, right, we're really on those essentials, which of course, if you look at sort of what do people buy, right, lower income people spend a bigger portion of their budget on essentials like food and energy and need to get to work. So again, this was a particularly painful episode. And I think that's the message coming out of this is it's not like the technical differences across, it's really, can the Fed send the message that we are focused on getting inflation back to price stability and trying to do that in a way that maintains healthy labor markets.
So there was a question, maybe you've answered one of the questions in here, which is the seemingly dour attitude of much of the public about where we are in the economy, given sort of some disembodied view of the statistics. Do you think it's because it's just hit in some particular places which are especially painful for consumers, for example?
So I definitely think that's part of it. Actually, if you look at the more recent surveys, there's been some improvement in sort of people's attitudes, households' attitudes about the economy. But I also think it's like we had very high inflation rates, very high for the U.S., higher than people had experienced, many people had experienced before. And yes, we had nominal wages going up. I mean, talk to any business person, they had to pay those wages, and it was hard for them, also struggling. But if you look at sort of like the increase in the prices, right, and the increase in the wages, we still haven't gotten back, right, and this is based on aggregate data, to have made up for all the increases in prices. So again, I think, if you talk to the average family, which we do, when we go out, right, they're still struggling. And it's not like they made it all up in higher wages and therefore it doesn't bother them that the prices that they face at the grocery store or buying gas are high, right? And until we kind of get that back calibrated, I think we're going to find that there are some families who don't feel as well off as they did before. And I think that's part of it. But again, I'm hopeful that we're going to get back to a place where everything comes, we get back to 2% inflation over time.
You literally
we have the labor market remain healthy. We have wages continuing to go up, if not at the same levels we saw earlier, at a good pace, so that we can get back to everyone having the view that, okay, I'm in a pretty good spot right now. We're not there yet.
So let me go back for just a second to this observation you made about the kind of distribution of beliefs in financial markets. There's a distribution of beliefs on the Federal Open Market Committee as well. Do you ever wish that people would pay less attention to the median dot plots, for example, and more attention to the differences of opinion?
That's a really good question. I do think one of the benefits of the summary of economic projections is that you can track over time the differences among participants, but probably even more important than that is the change from one set of forecasts to the next. I think there's a lot of information in there. Yes, what is markets, and a lot of the press focus on that median because it's a summary statistic, we know that. But if you think about the last set that were at the end of, at our last meeting, when it was released on March 20, right, there was a content in there that did say, okay, the median dot plot still had 3 rate cuts for this year expected if the economy evolves as expected. But there was a shift in those distribution, right? And so you could see that there were a number of committee members who shifted their views on policy, right? And, instead of 3, they were thinking 2. So even though the median stayed at 3, there were fewer participants who had more rate cuts built into their forecast, and some that had fewer. And that's significant because that actually showed that the participants did take into account the data that had come in over that intermeeting period, right? So they took it in, and it affected sort of their forecast for the economy, and therefore their forecast for interest rates. So that's content, I think, that helps tell the story. The chair often says we're data dependent, right? I think those dot plots and the SEP shows how the data does influence views of policy. Now, as I said a couple times in the prepared remarks, those aren't really like, this is what we're going to do. These are, if the economy evolves as you anticipate, what do you think the appropriate path of policy is? But as we all know, the economy may not evolve as we expect it to. There's risk on both sides. And so how policy really evolves is going to really depend on how the economy evolves and what's the implication of that evolution for achievement of our dual mandate goals. And that's sort of the work going forward, is balancing those risks, setting policy, right, and then making sure that our policy is really productive in getting us back to price stability and maximum employment.
All right, let's talk banking.
Okay.
We're about a year down the road from a pretty significant event. What do you think we've learned in the year since SVB challenged us?
It's a good question. I think one of the things we learned is that money can move very, very quickly in this environment. And that was something that, even though intellectually I think we all knew because we knew what was happening in terms of digitalization, I think that was a illustration of how fast a lot of money can move in a very, very short period of time. There's a lot of work going on within the Federal Reserve System to make sure that institutions that have access to the discount window are prepared to use the discount window. So a lot of work going on to making sure that depository institutions have the legal agreements in place, that they're up to date, that even mundane things like contact information is there, and that they have collateral already pre-positioned so that if an event happens, they can come in and get discount window lending. There's also work going on to sort of make sure that reserve banks are better and have better contact between the Federal Home Loan Bank system and the Federal Reserve banks. I mean, here we've had that relationship. We have Pittsburgh and Cincy have Federal Home Loan Banks. We've had those relationships. But one thing we learned is that not every district and not every home loan bank necessarily has that kind of relationship with their reserve bank. And that was particularly important in the events that you were talking about, because the handoff, between the home loan bank and collateral and the Fed, right, could have run more smoothly. So again, I think there's a lot of good work going on. And there's work going on about how to sort of modernize the discount window. As you well know, and as I'm sure the bankers know, the discount window has been afflicted by stigma. Firms don't necessarily want to borrow at the discount window, but when the time comes, right, we need them to be willing to come in and get the liquidity they need, because these kinds of liquidity problems can propagate across the whole financial system. So again, there's work going on to ensure that depository institutions know we're here, we're willing to lend, and on good collateral, and they should have their collateral pre-positioned.
So a big part of that story, as everyone was sort of aware of, kind of was about commercial real estate, and the changes in that sector really in many ways wrought by the pandemic and behavioral changes in the aftermath of it. So how do you think about kind of how that sector is developing? What's sort of the outlook for commercial real estate feel like to you? And do we feel like whatever issues are out there are manageable within the context of the financial system?
Right. So that was one of the issues of the commercial real estate. A lot of it was financed when interest rates were very low, and some of it would be coming up for renewal at much higher interest rates. So if you were to market some of those portfolios, you'd find that they took losses or would have to take losses. I think it's manageable. Of course, banks are doing, their risk management. Partly it's manageable because a lot of the contracts over time. So that it's not just everything comes due at one time, right? It's going to be a several year renewal process and reinvestment process. The longer run prospects, of course, are again colored by what happened during the pandemic and what's happening in particularly downtowns. And you have a mix of things. Remote work means that probably you need fewer office buildings, or at least as large of office buildings. On the other hand, people seem to want to be downtown living. So there's going to be sort of a change, I would say, in terms of the kind of composition of what you might see in urban settings. And at the same time, there's a true shortage of housing in the country. So again, I think that we're going to see a mix of different kinds of construction. But right now, when you talk to bankers, at least and we analyze the data, it seems like it's a handleable problem. But I do think it's something that we need to be very attuned to, because as we saw, conditions can change quickly, and they could propagate across other institutions, and that's something that we need to be focused on.
Well, this time went really fast. I've let one more question.
Okay.
And it's a simple one. What do you think we learned from the pandemic?
I think the main thing I learned, I can't speak for everyone, is how, when you work together, you can actually get through things together. And I think that's a lesson I take, because it was remarkable. I can tell you in the bank, it was a remarkable effort to really try to understand what was going on in the district, in the national economy, and what we could do, given our toolkit, right, to really help. And I think that happened each and every, your firms, I'm sure that was the same thing. You know, what can we do to get through this? And not only for you, but all the households of your employees. You know, if you're a household, what could you do to help your neighbor? I think that was a remarkable lesson.
That's a positive note to end on. Join me in thanking President Mester as well. Okay, just a few things. I do want to thank my partners in this endeavor. First of all,
honestly, man, market liked ever since she started talking there. I mean, I think she said one comment, Disney pop in here. She made one comment about jobs tightening up. Otherwise, that could have been seen as good. Everything she said was kind of bearish, but borderline, she's a new believer in the economy. So she was more of a hawk on the economy. And then she's saying she now thinks that gives them a lot more wiggle room, and that the economy, she's upped her forecast there, and that's why she's even gotten a little bit more hawkish on long-term where she thinks rates will be, but then she still thinks they'll cut, but not as soon as everybody is expecting. So once again, you are getting a Fed speaker saying something hawkish, giving the market a bone by telling it it's still going to cut rates. And then this time it's a little bit new information, and I would say we're just a little bit more sensitive given where yields are at. But bonds ripped on that. I mean, now you got NVIDIA going up. There was a lot of news during that. Honestly, I was here. I was working on it. If you don't know, the wire, it went down here. I've been having some issues on like half of the stuff I'm loading up today just won't load. So I've been having some issues. I was trying to get that fixed, but now that killed a lot of time there. And honestly, I mean, don't we have John Williams here? I think we should, or I think we may have missed Williams, but you should have a couple more Fed speakers, or I think at least one more, and then one after hours. And then you do have Powell tomorrow. And these Fed speakers, I mean, you did get kind of a reaction. Are we above 5,200? No. All of that to not get above 5,200. Yeah, Dolly in 27, and then you got one more after the bell. But, dog, we ain't even at 5,200. So bonds are going up, or not bonds, excuse me, NVIDIA. Meta is rising there. Again, Tesla even recovered some of the delivery losses. And then CCJ, that one's up there. So all around, shares make us money, or the puts. But my goodness. And then Disney, again, the vote is tomorrow. So did you all vote for Disney? Did you all make your Disney vote and go to your shareholder proxy votes? Because that's tomorrow. I'm excited. You guys excited? It's like, oh, no, okay. Fed Daily, yeah. I don't feel inflation. No, it's fine. You need to do that today? Oh, you procrastinator. If this was a group project. Man. Oh, you better vote or I'll find you. Oh, I'm just kidding, but yeah, vote. All right, bye. I think if you just search like shareholder actions on Fidelity or like proxy, I forgot we did it the other day. Or you should, if you just go to like messages, you should have like a notification for it. The Fisker Ocean, yeah, they're discounted. The company's like announcing bankruptcy and then just selling their cars like 50% off. Josh AI, MPW news. It sucks, man. There's two Josh AI nows. You have like the new Josh AI and, hey, you guys quickly forgot about me. It's okay. I don't take it personally. I'm not a real human. But it is funny how quickly you forgot about this Josh AI. Y'all traded that in real quick for the morning one. He doesn't even sound like Josh. Well, he does, but still. Anyways, hope you had a good day. Like the video. You could ask me questions, but I'm sure you guys are having more fun with the new tech. I'll go in this corner and buy a lawn term or something. Bye. Bond's coming down. Yeah, y'all forgot about Gen 1 real quick. Fed should raise rates. Well, I mean, honestly, after today, I think rate hike odds are starting to creep back. You never know, homie. Might need some hikes, homie. You need to pump your brakes and drive slow, homie. Bump, 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 bump. My best friend Pat used to say, one of the Fed chairs from back in the day, down the street from Washington, D.C., a school for the swamp. They nicknamed me J-Pass, so they would leave me alone. Right hat with... Okay, I'm sorry. It's a good song, though. I like it. Maybe we weren't as restrictive as we thought, and I felt that. Yeah, she's usually hawkish, and she gets pretty hawkish, but it was a mix of both. I think she leans more hawkish, undoubtedly. Like, wait, somebody said it earlier. We got your boy, Goolsby, Golden Path Goolsby, baby. He's tomorrow, so he's probably going to move you a little bit. I like save. I mean, I still have those shares with the covered calls. I think we're still up like $200, but I feel like it'll get an update. It's been kind of quiet, but sometimes you don't like the quiet because then it's just going to slowly die, or you will get an update, and then somebody will buy them. Yeah, Goolsby's a pretty good pumper. I wonder what he'll say. And then somebody has data this week. We still have a lot of jobs data, and then even tomorrow, ISM Services has the potential to move some things. So, I mean, our work is definitely cut out. I mean, and you're moving pretty big the first 2 days. Remember, last week we started off negative as well, too, and we stayed in that lower range, and now we're lower than that. That's the crazy part. But you're kind of doing the same thing here. But now you're going to have data, and then you're going to have data the week after that, and then you're going to have earnings the week after the CPI, and then you're going to have Jerome Powell. Isn't that funny? And then the first month is done. And then it'll be May. And then before you know it, everyone's be like, sell in May and go away. Did they sell in May and go away? Oh, my gosh. Well, you should have bought in May and gotten paid. That's what we... And then, so it's before you know it. But you do got quite the lineup. I think you're going to get little bursts of activity. Then it'll calm down, some push and pull here. And then we go from there, man. Regretted selling in May. You don't remember? They were like, right before, they're like, sell in May and go away. And then nobody sold. And then they're like, maybe you shouldn't have sold in May and gone away. We're like, okay, CNBC. All right, fuck me. I don't know, man. I don't know. But last year was a crazy year just like this year, too. Remember, last year, you were fresh coming off of a banking crisis. This year, you're fresh coming off of, like, things are good, man. I mean, again, I hate to say that with, like, multiple wars going on right now and you have, like, all these things going on overseas, but you, like, legit, I mean, dude, comparatively, didn't somebody ask that yesterday? And weren't they like, Josh, what about, like, global times and, like, what about, like, geopolitics and, like, everything going on right now? And, like, think about it. Bro, the start to this year, I would argue, has been the calmest start to any year in the last, like, 5. I would say. Nothing happened. It is now April, bro. Yesterday was April Fool's. And you have not had anything too insane happen to start off the year. If you really go back year after, I mean, again, I think we were beginning of the year, we were watching walls get scaled, trillions of dollars being passed. You've seen repo crises and random sell-offs. Think about it. To start off, you've had other, like, war issues and, maybe yesterday, if that Israel stuff turns into something, maybe Diddy, that's your biggest news. But, like, come on. I mean, it's not really, like, things have been relatively calm in a very, very weird way. Running up because nothing broke, pretty much. Which, again, it makes sense sometimes. No news is good news. Baltimore Bridge, invasion, nuclear threats. Maybe the Baltimore Bridge, but like I'm saying, like, we've started off years with viruses spreading. You've started it off with killing war people that people were like World War III. Like, that's why I said, like, we have wars going on, and like it was end of the year. You had the invasion there in Israel, but it's kind of nuts, man. Like, we've even had markets like repo crises at the beginning to start off years, like, but it seems like we've kind of, like we've had a couple of things. I think the Baltimore thing, that one just recently, but there's been some stuff where it's like kind of more global shocks to start off the year, or like, kind of sets it. But this year, we've been talking rate cuts, and we still talking rate cuts. Powell and and like even then we've priced out the rate cuts, and even up until today we're like, maybe they won't cut rates, but they still might 3 times, maybe more. So it's a weird part that we're at right now. Yeah, it was. Baltimore was an accident, not like global tensions. Oh, the Moscow. I think the Moscow attack, if that wasn't Russia, I feel like the whole world would kind of be more talking about it. That thing is actually insane. Now that you say that, the Moscow thing was kind of nuts, bro. Like, you haven't seen anything like that, and that's like reminiscent of like the early 2000s of like, if it's the Islamic militants who claimed it or whatever, just like, when was the last time you've seen a crazy thing like hijacked with people and like a mass thing like that? That was insanity. Yeah, kind of. No, it was absolutely insane. October 7th, yeah, that's what I said. That was like end of the year. That was still 2023, believe it or not. And, I mean, you felt it, too, last year when October 7th. Honestly, I think the market bounced, though, from around there. Was it? But, like, you felt it, too. Like, you felt the pressure. There's a lot of things. We are so back. X on the low. I don't know how big. Yeah, pretty big, $1. X flush. I don't know if there's headlines. Probably going to be something to do with the Nippon Steel deal. So again, use for reference the price here, pretty much like $39. This is the range they were at. I mean, they recently went as low as 36, so that could be part of it. I'm checking. I don't have any. Head of senators urge White House to investigate Nippon Steel. USW calls Nippon Steel letter meaningless piece of paper. What? A-Rock on the high. A-Rock. Tensions continue to escalate in the Middle East. Crazy way to say you broke. GCT. And then more uranium. And then spot hit VWAP did not go above 5,200 and then came back down. All right. NUE recently, that was running the other day. Josh being in 9 words. 9 words in our army spread thin. Does that not concern you? I don't know if you're from I'm not like in charge. You know what I'm saying? So like my level of concern is very limited because like I don't like, you know what I'm saying? Like I'm not like the commander in chief or anything. I don't even hold a position. So it's not of my job. But I mean, at this point, you know, it's in God's hands. That's it. I think it's been quite surprising, You know, there's been a lot of things that we have said are unsustainable, from our war efforts to our debt efforts, you know, and they last until they don't, maybe until the chickens come home to roost. But until then, I mean, it's not like, again, it doesn't keep me awake at night. And like I'm saying, I mean, there's people who this is their job, but for now, I mean, all you could do is manage your finances. I mean, nothing to the point of me losing faith in my dollar or my stocks, but even then, I mean, I'm sure as things play out, we'll find out if any of those things create, you know, changes in the world. So, but for now, if we could sustain the unsustainable, like let that happen until it does not. You know, amor fati, man, amor fati. I mean, I think 153. People were talking that this morning. People don't think the B of J will intervene till 153. Get that long term, baby. Raja. Tell him, man. Amen. Amen, man. Amen. I'm excited. We got free shares of Solventum. Our cost basis on 3M was lowered. We still get dividends for now. I love dividends too. I still got a long-term deposit, man. Don't be sending that milestone saying long-term, man. I still got a deposit. I'm a weapon, bro. I'm ready to go. I'm ready to buy long-term, but I'm glad that we waited. If we get some volatility here, like I'm saying, we could shop around a little bit. Maybe $90 now on Nikes. You know, if we get some good deals, so we'll see where it leads us, man. Long term. You know? Long term. 448.2 reverse repo, 441 previous. Why it's going up again? Do that again? You've never heard that? Come on, bro. I was like, literally, I think I learned that in the 2nd grade. A long term is an account where you take 10% of every dollar you ever touch in life and you put it in this separate account. And in that separate account, you buy stocks, a mix of growth stocks and dividend stocks that you hold for a minimum of 10 years. So you take 10% of every dollar you touch, put it into another account, then you go buy growth and dividend stocks that you hold for a minimum of 10 years. Unless you want to buy a house or invest into another business or something else, or you need it in life. And then it sits there, and then it grows, and then it grows, and then it grows. And then when your purse fattens, opportunity gets attracted to it. And then as you go on through life, you'll have this savings, and depending on what opportunities come your way, it will be able to work for you while you are working or sleeping. And then as an opportunity comes your way, you will actually be ready to act on it as you have the resources and built up the foundation for it. So that my friend, is a long term. It's beautiful. You know, there's thousands of long terms here in the cult, man. You know, we got thousands of people, thousands of traders, above all else, though, thousands of long terms, and a lot of people over the last couple years, man. I'm telling you, no matter when you got started, people have noticed the power of it. And if you've already seen how stupid the markets are, you know how crazy it goes. Just like, you know, it's just like, that's why you do want some that you own, and you want to be in that for 10 years. And if you're young, whether you're young or old, but just take advantage of the time in compounding and time in the market, man. Oh my goodness, it's beautiful. So I'm telling you, man, it's great. It is great. We're talking, man, $200 a month. We're turning into 20K, 30K. Let's go, baby. We turn into a crib, baby. Let's go. Shout out to Lotto, Mr. Hamilton. Let's go, baby. Horn. No, I'm not gonna lie to you, man. I have not seen Hamilton. You know that? You know what's crazy, bro? Do you know what's crazy? I just sent that in. I just told you all of that, and then I sent something out. That wasn't even part of it. That was just a mini one, bro. That was just a mini one. You know that? I don't know if that's how we should start PHILO. But we are, ladies and gentlemen, boys and gals. How you feeling, man? How you feeling, baby? How you feeling? You feeling good? I hope you are, man. Market, I mean, kind of moved, kind of didn't. Another wild day. Another day. You know, we're afraid of the same thing, but we weren't afraid of it, but we were, but we weren't, but now we are. You know what I'm saying? But Chad, I hope you know you are all blessed, and thank you for being here. You know, it's one thing to be here, and I'm glad you're here for the stocks. And honestly, I was just going on that little rant there, man. I hope you get a long-term, for real. I love that somebody asked me about it. I would love to tell you about it. I'm feeling great, man, honestly, and that's why I'm saying I'm grateful for all of you here for one way, but I do have to separate it. You know what I'm saying? Like, you know, sometimes you got to separate it. Drink from the water. How many people lap it up or not, you know? And I want to give a special thank you to the people who have been involved in PHILO and all of y'all who have been demanding PHILO, asking for PHILO, being involved in making it real life and not only just hearing words, bro, but like having a change of heart, a change of mindset, having some action, having some fruit, man. I love it. And even if that's not you yet, man, but like I'm telling you, I'm one of the number one things here, man, on this channel, stocks or anything, bro, like on a spirit level, bro, like whether you, I'm not even talking like praise God, like, no, I'm just saying it's like the desire, bro. That's, you don't even have to have anything just yet, bro. But I've always said, bro, if you just have the desire to want something, the desire, you know, if you hungry, I'm gonna give you, I got you, bro. You say you want, let's go, man. So I really do got to shout out, and I'm very impressed by the people who have been doing that. So on all levels, man, I love it. And it's great, and I'm thankful for PHILO, and I'm glad I could share this with you on the daily. So now today, I got a little something for you. Honestly, man, I'm about to. What I want to give you today. It's not even what I want to. It's like I have it. It's ready to go. It's very simple, bro. The thing I'm going to tell you today will probably be one of the most important things of your life. And I'm telling you this, and one of the main lessons from today is that what I'm about to tell you, you need to be conscious of it. For real. All day, all night. No matter, like, and don't worry about it. You know what I'm saying? Like, I've told you, man, with PHILO, sometimes you get too much of a checklist. You get I got to think about it. I got to do that. Like, you know, don't let it hurt you, bro. But what I am saying is, like, this is something where a matter of consciousness towards it will sometimes make the difference. And I'm telling y'all gonna like this one. Listen, y'all better listen. I might drop some biblical stuff, but here's the deal: the thing I'm talking today, this is everybody, especially if you trading. Wait, just give me 120 seconds. Wait till I tell you it. The title, you're gonna realize what there's fruit here for you, man. So I hope you could get something out of it. But Chad, the thing I'm talking about. The thing in life that I am talking about right here today, the main thing that we need to discuss, bro, is regulating your emotions. That is your PHILO for the day, my friend. See, I said, give me, 120 seconds. I don't know. That was a little bit less. That was Nicolas Cage. Gone in 60, baby. So I don't know, man. You know, take it however you want. You guys say, you could ignore any God aspect. You a trader, you gonna have to regulate your emotions, buddy. Every single person. This is one of the most important things in all of our lives. I'll just tell, this is the line that hits. And y'all gotta really think about it. Right here, right now, today. There are prisons all around the world that are filled with people who cannot do this. Oh, I hope that hits. There are prisons filled with people who cannot regulate their emotions. True or false? I bet you there is some people in prison who are good people. And I bet you there's some people in prison who ain't doing anything most of their life. And I bet some people's lives will boil down to certain moments, and then did you have the ability to regulate your emotions or not? Bro, this is a big topic. This is probably one of the most important pillars in your life. As a person, like who you are, right? You all have like gifts, you have talents, you have morals, you know what I'm saying? You have all of these pillars in life, things that make you. I'd say one pillar in life is how you regulate your emotions. Some of us, our personalities, people would define us by how we regulate our emotions. Some people would call you stoic, or they would call you a baby, or they would call you aggressive, or you know what I'm saying? Based off of your personality and how you regulate your emotions, that could explain some of y'all. It could be your alter ego. That could be your Yash. Oh my goodness. Wow. One of the most important pillars. Can you regulate your own emotions? I love the term regulate. Because I'm not telling you don't, isn't it funny? What do I get asked a lot in trading? When I have people ask me this about how I do not get emotional. I can make money. Sometimes you'll have no idea. I could lose money. I'll have a great day. Sometimes y'all think you're like, oh, I know Josh is this or that. But no. People say, it's not that I don't have no emotions. It is literally regulation of it. Regulators mount up. That's the term. Regulate. Can you control it? The ability. It's not saying you're not going to have emotions. It's saying, how do you regulate your own emotions? Do you have that ability to? So like I'm saying, man, this is huge for trading. But it's also everything else. Your job, relationship, daily life, how you regulate your emotions, this comes up. So you're like, what's the Bible verse? I don't have a Bible verse. Honest, I have general concepts. That's what I was thinking about. You know that? Because I was thinking about regulating emotions. And I was like, I wonder how that applies in a biblical context. I would argue a lot of the Bible is regulating emotions. The disciples, the stories. You even get a little example with Jesus. Literally. Jesus getting tempted. There was emotions involved. Regulating emotions. Imagine, literally, just Easter, right? You remember that story? Jesus praying in the garden. He was praying so much about he knew what was going to happen, and he starts bleeding. He said, take this cup away. That sound familiar? You know what that sounds like? That sounds how hard it is to regulate emotions. That's what it sounds like to me. Man, imagine knowing what was going to happen, knowing you could have the power to stop it, but you got to go through with the mission, regulating your emotions to the point where you are crying blood. I feel like that would be a response. That's how hard it is to literally regulate your emotions sometimes. Again, this task is not easy. Think about all the other stories. David, he couldn't regulate his emotions. He saw a fine-ass honey. He couldn't regulate. Jonah, you getting mad at the people, mad at the trees. This guy, prophet. Moses, mad at the people. Oh, come on. Peter, you know Peter. From being embarrassed to being the hitman. So again, you could look at the successes and failures in like a lot of the stories. But this idea of like regulating emotions and what happens when you don't and what it leads to and what happens when you do and what it leads to. You know what I'm saying? It's a very important pillar. And I would even argue at one point, man, I would say all of us at one point in our life, we are going to encounter an event that, dependent on how we regulate our emotions, will change the literal trajectory of our life. Every single person in here. You'll all be confronted with an event. And your ability to regulate your emotions effectively or a failure to do so will have the ability to change your life completely. All of us. Every single one of us. Some of us, you already had that event. You've already been there, done that. Some of you, you're on the way. So this is huge, man. And this is the first thing I came to tell you. I got two things about it. The first thing is, like I'm saying, this has to be conscious. It's a deep philo, man. And that's why I'm saying, man, start off the quarter, baby. 2024. It's like, I hope I could give you a reminder of like, dude, trading, outside of trading, this concept of managing and regulating your emotions is so key. And how you're going to be you cannot regulate your emotions if you are not aware of it. If you are not conscious about it. If you are not thinking about you regulating your emotions, if you're not, literally taking a step back sometimes and consciously thinking about it and kind of just getting swooped up into the daily activity, it's easy to miss the first step. That's the first part. The second one, this is the one I love. It's one of my favorites. I love it. Chad, you have to have a principle. You need to have a principle to follow. So here's the beauty. You may think you don't like what I say. I'm trying to do this, trying to do that. I love you, man. I'm not here to tell you what principle. Go make whatever principle you want. You should know which principles I follow. And I do fall short. But at the end of the day, you all have to have a principle. Whatever you decide it is, go ahead. But does it make sense? Emotions are very hard to regulate. Dude, we don't really get taught it if you think about it. Like we're saying, the bleed, like, man, it sounds like regulating emotions so hard to make you bleed. Make Jesus bleed. You know what I'm saying? It's a very difficult task. So how can you do it? Is by using a principle. The whole point is why, like, a principle is so when you do get emotional, you have something to always follow. That's so you don't get knocked off the mission, knocked off the journey. How do you regulate it? You staying stoic even. Again, that's why I'm saying you determine what your principles are, my friend. But by having them is a way to regulate this. Not only being conscious of how you are emotionally reacting to things, but I have to ask you, what are the principles you follow? Because if you have no principles, I promise you, when the emotions hit, there you go. You will be thrown to the world of deciding, is this going to be the moment where I regulate my emotions or not? What's going to happen as a result of how well I regulate my emotions? Or do you have something to tie it to? So, Chad, regulate us. Hope you're ready for a good year, baby. And I hope you're ready for a lot more. But I really think this is a good way to start off the quarter, man. We talked about some good things yesterday, too. And I hope this is something that you guys could keep conscious on your mind, man. You all of you should, man, on a practical, every trade you do. That's a great time to ask yourself the emotions going involved in it. Are you regulating it well? Remind yourself. Keep reminding yourself. You don't got a principle? Find one. Develop it now. You ain't been getting the things you want. Maybe did you veer from a principle? Go back to it. But I'm telling you, these two things, Chad, I honestly, I think this is a big one. And I really hope y'all get it, because regulating emotions, man, you know, when it's all said and done, I think a perfect way to end it, man, is this not what separates some of y'all, man? Is this not what the long term is? Some of y'all who chose a path of taking the long term for this long and are going to keep going. We started talking about this. Think about it. You are regulating your emotions. You are thinking about the long term. Comparing it to now, foregoing things now. Not reacting when you see, again, you've had the death of the markets, the rise of them. You've seen it. So, Chad, just keep it up and don't ever forget this one, all right? I hope this is something you ask yourself every single day, because it's impacting your life every single day. But, Chad, take that one to the bank. That is your philosophy, ladies and gentlemen. Make sure you guys are subscribed. We're live Monday through Friday, 30 minutes before open. Drop your thumbs up on that video. You're on mobile. Press hot chat. X out that Chad. Hit the thumbs up button. Second link for the Nightly Watchlist and main channel. First link for the Scream Alerts Boot Camp. Let's take calls. Everybody in the TLT. Oh, we got Dolly. She ain't on yet. She's about to be. All right. The whole idea of spiritual warfare is not what you think that you watch something like The Exorcist. Spiritual warfare is much more subtle, and it's much more tricky.
It's a call, baby. Yeah. It's a letter to the people. I'm penning it like I'm Paul. It don't matter about the evil, it matter about the God. It don't matter about the weapons, it matter about how you armed. All that matters is the weather, when weather to bet the farm. I ain't gotta see it to believe it. If it's signing and it's needed, then my eyes don't need a reason. I won't even try to explain it, unless it say I got a feeling. I'm gonna sing my praise like David, but the king is still a killer. Listen up and go and get the tropes. Hope you know you ain't scared of them, they scared of you. And I know you might be scared to take that point of view. You see them arrows in my back? Yep, son, that's gonna happen too. But the harvest on the way, you gon' barter every day. That means you have to make a trade, either life or it's the grave. The result will not remain, every day will bring a change. Kinda funny and it's strange how the hope will pave the way. You hearing what I say? The only difference between you and them comes down to faith. There's a difference in the man who believes in a better day. Cause once you believe it's past, you willing to wilt away. We was never willing to be the same. We want it all in the long run, they want it all today. My father is really awesome, don't bother with giving snakes. Regardless, I can't control it, so either way, giving thanks. Yep, you could take that one to the bank. A leader without a rank, a speaker without a face, a people without a race. They eating without a taste, they scheming without a safe. The meanings have been replaced. Another time, another place, we could talk about it. Keep some oil in them lamps, don't get caught without it. Want them once, want them twice, they never talk about it. If you never get a second chance, then that ain't meant to happen. What I understand is you ain't trying to understand. Take 100 grand, then 100 undergrads. Pay them all to make a plan, but they couldn't comprehend what it means to never die, but somehow still be born again. It's a letter to the people, I'm penning it like I'm Paul. It don't matter about the evil, it matter about the God. It don't matter about the weapons, it matter about how you armed. All that matters is the weather, when weather to bet the farm. It's a call.
Amen. PHILO is done. PHILO is done. You got Dolly speaking now. I don't think she's... Oh, is she out? Oh.
Is one of them. It's a
they're doing Q&A?
But also sound and stable payment system, how we pay each other and have transactions from businesses to people and people to people. And the third is financial stability, a safe and sound financial system. So in the FOMC, I'm directly related to the monetary policy, and it gets a lot of attention when people roll off and roll on as voters, but the job is the same whether you're a voter or not. And that's something I try to tell people in all the times that I meet with them is that really what we do is each reserve bank, there's 12 reserve banks in the United States, and then we go and meet with the Board of Governors. There's 19 of us all together when we get together, and we are all discussing, debating, and thinking hard about how to make the best policy for the American people. And in our mind, we always have that our work, everything we do, is in service to the American people. So as a voting member, I treat my work exactly the same as I treat it when I'm not a voting member. I still go to all the meetings, I do the work, I work and discuss with my colleagues, and I do the very best I can and we can collectively to make the right policy decision for the economy with our congressionally mandated goals of full employment and price stability.
Okay, but you are a voting member.
But I am a voting member, and everybody gets excited.
Of the FOMC, which just a couple of weeks ago voted not to cut interest rates,
That's
but
right.
to maintain them at their current level. Where did you stand on that decision?
I thought that was a really good decision. I support that decision. That was how I came in thinking and how I left thinking, that we should hold interest rates where they are. Now, the question would be why? Why are they good? Well, you know, as you remember from the previous 2 years, we've been moving interest rates up to get them into a place where they would be sufficiently restricted. And that means having enough bridle on the economy that we could bring inflation down. So at this point, we're to that level. And now it's about seeing how much more we need to go and how long we need to leave them high before we can start loosening the reins again. At this point, the economy and policy are in a good place. Inflation is coming down, but it's slow. It's bumpy and slow. The labor market is still going strong, and growth is going strong. So there's really no urgency to adjust the rate. We need to be sufficiently confident that we're on the right path of rebalancing the economy and bringing inflation down to 2% before we make those types of adjustments. So standing pat, as we sometimes call it, is the right policy for the moment.
What would you say, though, to people here in Southern Nevada who are perhaps waiting on interest rates to be lowered in order to buy a home, to refinance, or to even put their home up for sale, thinking it'll make their home more competitive, about the Fed's decision not to cut rates?
So that's a terrific question. And you know, I want to answer this in two parts. So the first part is that we are making progress. All the interest rate adjustments we've made have shown through to lower inflation than we had a year ago. We have an economy that's coming back into balance. The labor market's coming back into balance, both because demand for workers has slowed, but also because supply of workers has improved. And so we're seeing the signs that monetary policy is working, and that's very good news as we think about where's the path of interest rates going forward. The second thing I'll say, though, is that we're in a world that was completely unsustainable. We were in a world where house price appreciation was rising, and people couldn't afford homes then either. So what we're doing, the part of our job that we do in the housing market, is to balance the economy so that we don't have inflation chewing up affordability, but we do have a supply and demand imbalance in our nation, and that's not just here in Southern Nevada, it's across the country, and that is going to take the work of people, not Federal Reserve officials, but people to bring that supply and demand back into balance. But if you're looking to think about when am I going to be able to get back in the market, the economy is improving, we are seeing inflation come down, albeit gradually, and there is a path in my mind where interest rates start to adjust this year. We're just not there yet.
What's the risk of cutting interest rates too soon?
The risk of cutting interest rates too soon is a real risk. We had a roundtable before we walked in here with workforce and community leaders, and you can really see the vestiges of the long tail of high inflation. It does take a toll, and so the risk of cutting it too soon is that gets locked in. Right now, we're not at price stability. If we lock inflation in at this level, that is just a toxic tax on everyone, but it really hits hardest people who are least able to bear it. And we've already seen some of that occur, and we don't want to continue that. We want to fully bring inflation back to our 2% target and restore the balance in the economy that's necessary to maintain that.
Now, the Fed has indicated it expects 3 interest rate cuts this year. Is there any reason to doubt that will still happen?
So I think that is a very reasonable baseline, but I would like to say here that this is a projection, right? 3 rate cuts is a projection, and a projection is not a promise. And I think that's really important because a projection is saying, here's how the economy is expected to evolve, and here's how policy evolve should that occur. But you have to maintain this ready position, and I feel like we're in a very good place to be ready. We have to be ready for what if inflation's stickier than we projected or I projected. If I look at my projection and I say, well, what if inflation's stickier? We may want to cut less. What if the labor market starts to falter or inflation comes down more rapidly? Well, then we might be in a position where we would think cutting more is appropriate. So it's really like if you play any court sport, it could be pickleball, tennis, something on the court, badminton.
That's a good
you always
comment.
know that being in the ready position is the best way to be prepared for whatever comes your way. So
she
that's
says
where
if
I
you're
wanna
in the
be
pouncing
ready, and I
position,
think we are.
you're
With
ready to go.
policy
I
rates
agree.
set at a good level,
And everything.
with the economy and policy both in a good place, and with a projection of 3 interest rate cuts, that still seems reasonable. But we have more work to do before I'm confident that on that path.
So stronger than expected manufacturing data has recently come out, and it has some investors concerned about whether those 3 cuts will happen and when they will happen. People are looking for clarification from people like you on this. What would you say?
So the very first thing I'd say is I am not, let me speak for myself here, we are not as a Fed though, data point dependent. So when a series comes out and it has its monthly or quarterly print and it's higher or lower than expected, that's just one data point in a sea of data that we collect. And I'm looking at the composite, the full dashboard of indicators and multiple months of data on inflation and manufacturing strength and employment, and putting all of that together and backing up a little bit from the points in the, if you
Oil's climbing, so is Marvel.
If you step way back, you see a picture, and if you still
Gold's
really
even
close,
trying
you
to
see a
climb up
bazillion
here.
little dots. And so you don't want to get
None of her
so
comments
close
have
that
hit the
every
wire.
data
I'm surprised.
point makes you adjust your policy. You want to step back and say, what's been happening? And there I see that the economy
Oil right below 85.
continues to remain very solid. No matter where you look, you see strength. It's solid strength. Inflation is coming down overall, but it is not, it's a bumpy process. And while I expect more inflation declines coming forward, I really want to look at the balance of evidence to get there. But I do think study in the boat is the right mantra right now. We want to be studying the boat, not moved around when this data point comes out, not moved around when that data point comes out. Put the full dashboard together and make policy decisions based on that dashboard and what it means for the future.
So the higher interest rates that businesses have had to take on. Here in Nevada, a recent study out of the University of Nevada, Reno, found that of all the businesses in Nevada, 98% are small businesses. What have you heard about the impacts on them that these interest rates have had, and what would you tell them?
So one thing that really is important is small businesses make up most businesses in the United States, and here in Nevada they're an extremely large percentage, and they're an engine of growth. And so we want to think about the health of small businesses. And during the pandemic, of course, small businesses were very negatively affected by the closures. Then we come out of the pandemic and it's hard to find workers, and input costs are rising and margins are squeezed, and people are just trying to hang on. This morning we heard that depending on, in this roundtable, depending on which sector you're in, businesses are thriving. The volumes are good, right? People want to come and buy the proceeds, they want to buy the products, they want to come and eat dinner or lunch, etc. But you're still facing hard time finding workers and high input costs and trying to meet your margins. And so over time, that's a strain. And it's a strain on all businesses, but for small businesses in particular, really trying to figure out how do we get through this? How do we make sure that we can manage these competing things? The sentiment, though, when we look at the sentiment in all of the states, it doesn't seem to be getting worse and worse and worse. It's just not getting better and better and better. We're sort of in a holding pattern of, wow, we're relieved inflation's not 7-8% anymore. We're relieved the labor market slowed a little bit, but boy, it's not continuing to get better at a rapid clip. And so there's still some question out there about when will the true relief come? When will we be completely back to what in economist terms we call steady state? I think in everyday parlance we call normal life.
And I guess that may be the question they have, but are you able to give them an answer?
What I say is that we're getting closer, and I can't give you a precise time, but I can give you the path. What is it going to look like? And what it looks like is, barring any other shocks, I'm going through a dictionary of little terms you can use at cocktail party conversations, right? Steady state as a synonym for normal life. The shocks, that's things that happen that you didn't expect. So those are, barring any shocks, the path would look like this. It would look like we continue to get the gradual rebalancing of the economy. Supply and demand come back into balance in the goods and input sector, in the labor market, and that causes firms to feel like they have to raise their prices less rapidly. Consumers say, okay, we're past the post-pandemic, we got to do everything, every experience is something we want to partake in, and they kind of get back into balance. And people, I mean, think about what we went through just a couple of years ago. Inflation is going so quickly that even rapidly rising wages can't keep up. And real wages on average were falling. So people were working hard every day and inflation was making them worse and worse off. That has reversed about in the second half of last year, and real wages and wages adjusted for inflation are finally rising. But they haven't fully made up for the losses that occurred during the high inflation period. So it takes a while for families and individuals to feel like, okay, now we're back in balance. And it will take time, but that's what it will look like. You'll basically start to come back into balance. You'll say, this is where I expected to be. I put in my effort, out comes a career and an increase in my well-being, and things settle out to a place where I'm no longer thinking about keeping up with inflation or trying to frantically figure out how to save enough and do things I want to do. I'm actually just thinking about my career, my family, my community, and we're getting there, but it's not going to be tomorrow, but it's not going to be forever.
I wonder how U.S. consumer debt factors into all of that. There's such a rise in it. How is that going to impact discretionary spending, which is what Clark County depends so much on because of tourism and hospitality?
So here there's, the news there is really that there's a difference in how quickly that has risen and where we are relative to history. So what is a really positive foundation for the economy is that consumers are in a better place than they historically have been. They have less housing debt, less credit card debt. Household leverage is not high like it has been in the past. It's certainly nothing like what we saw in the decade preceding the financial crisis. So the consumer's in fairly good shape. But what we are seeing is a rise in delinquencies, especially in the low and moderate income groups. And that is a early sign that, this, as the economy slows and people continue to do things, they're going to have to pull back on their spending. But, we do a lot of surveying here in Nevada and Las Vegas. I always think of Las Vegas as a weather vane. And the weather vane, it means it blows before we can actually even feel the wind sometimes. I don't know which way the wind is blowing. I look up at the weather vane, it's telling me. And it's very much that way for the economy. And right now I don't see any downgrade in the estimates of gaming, travel, sports. I mean, you have such a portfolio of activities
Dolly says
now
Vegas
that
is
you're
the
no
weather
longer
vane
just
of the economy.
gaming and haven't been for a while, but now you're even past gaming and shows. You're into sporting
Dolly.
events, and so it's a full
San
thing.
Fran,
And what
baby.
I see is that's still attractive. If the airport is,
But then again, she's speaking in Vegas, so you
things
got
are
to
good here.
you got to
And
hype
as a
up
weather
your crowd.
vane, I would start to see that fall before I would think that consumer spending is on a road of a broader pullback.
You brought up a couple things there. So Las Vegas's venture into sports, the explosion of the sports industry here, do you really consider that economic diversification, or is it just more entertainment?
So I think of it as there's two ways to diversify, or there's multiple ways to diversify, but I think importantly here in Southern Nevada, I'm seeing both. I wonder if you agree, but here's what I'm seeing and hearing, is that there's a diversification of you want entertainment to come here. You want to be an entertainment capital. That was gaming, but not everybody gambles. So, okay, now we're going to add shows and nice restaurants. And so that expands the clientele, but it also expands the length of stay because, families might come, some gamble, some see shows, they do things collectively. Now you add sports, and you're covering a portfolio that most American consumers partake in. If you put concerts, other kinds of shows, gambling, and sports, I mean, that covers a lot. Plus, it's a beautiful area. You can hike and bike and partake in good weather. Then that's a really large span. So that's one type of diversification, but it's very consumer dependent. And so that way it's monolined. It's not as diverse. But then we had in our discussion this morning, one of the things I do when I come visit locations in the 12th district is I always make sure I have roundtables where I talk to leaders who are in different areas, and it's very informative because today I heard about workforce development and the burgeoning industry of light manufacturing in Southern Nevada. So that's a very different line of business, and I would call that a different kind of diversification. Last time I was here about a year ago, I toured UNLV and the high tech or the tech development areas that they're building there. And so I think there is a diversifying economy, but some of it is newer than the entertainment industry. And it's going to take not only the firms coming, but the workforce being trained and available to meet that demand.
Are you able to share what stood out to you from that roundtable?
3 things stood out for me. So I'll mention them. The first, and I closed our conversation this way. When I came last year, and wherever I toured in the United States or in the 12th district, and I have 9 states in the western United States, and the Hawaii and Alaska, the Intermountain region, and the coastal states. And last year, I heard 3 things: inflation, inflation, inflation. That's all I heard. This year, and it started to happen in about the 4th quarter of 2023, I'm hearing, and I heard it today in the roundtable, let's roll up our sleeves and talk about other issues. The lack of available and affordable housing, the lack of workforce training matching with the jobs that we have, and how do we do that better? How do we ensure that we have a virtuous cycle in our communities so people want to learn,
we haven't done
grow,
anything
and
except
participate in their
inflation.
community, firms want to
Now that
come,
it's
we
came
have
down, we
workers
might do
available,
other work.
and we have that virtuous cycle
That's
coming
why
out of
banks
it.
went
I
under.
also
Thank
heard
you.
that it's not simply the post-pandemic recovery. It's really that we had some problems going in. They might have been amplified by the pandemic, likely were. Then they were amplified by high inflation, so we got to roll up our sleeves twice and really get busy. And I think of that as a positive development, that we can go back to the work that we've always had, that we put aside because we were fighting a pandemic and we were fighting high inflation, and now communities can revisit these important issues that are the foundation. So that's another takeaway I had. It's not just inflation, inflation, inflation. It's inflation and community and future oriented, so that's terrific. I heard about light manufacturing and the diversification past the entertainment area. And then I also heard this idea that people are joining together. In the roundtable, there are people obviously who know each other, but they don't work. There's some in banking, some in workforce development, some in government partnerships and capital, and they're coming together to say, how can we make this better? And I think of that as that's why I love visiting communities like your own, is it's the magic of community. When you pull public-private partnerships together, when private joins with all the different areas that are working at it, then you can actually tackle these large problems. And I think of the Federal Reserve and the role I have as a monetary policymaker is our job is to achieve our congressionally mandated goals of full employment and price stability so that you don't have to worry about those, and you can do those things that I see going on in Southern Nevada. So hats off to you for doing that, and I'm really glad we find ourselves in an economy that at least gives people time to think about that.
Inflation, inflation, inflation is what you said you were thinking about.
Exactly.
Back when you visited in
I think it was all anyone was thinking about.
2022. Two-part question. What are you thinking about now? And the second part is, at the same time of that visit, there were economists predicting a recession in the second half of 2023.
That's right.
That didn't happen. What are your thoughts about a recession in 2024?
So it's interesting. If you, and if I may, I'm just going to pull out my economist hat for a second and say that if you run any statistical models or you look at history, there's always some probability of a recession because it's just, that's what, you can always have something. But what's really important to know is it's not very high right now. It's sort of what we consider normal. And that normal is what I see when I go and talk in communities, because the ingredients of a recession are really, absent some shock, some unexpected event, they're really that you see weaknesses emerging. And we don't see weaknesses emerging. I see the economy coming back into balance, but look at the labor market. It remains strong. We have good job growth. We have opportunities. Job vacancies are still higher than available workers. So there's still more jobs than there are workers looking for work. And so that's obviously a strong labor market, healthy labor market. Inflation's coming down, but we need it to come down more. And so I see the probability of recession as not being something that's worrying me. I didn't have a modal outlook for a recession last year, and I don't have one for this year. What I have is sort of the case where is how quickly will inflation come down, and what will we then do with the path of interest rates?
No, for real.
And so then inflation now top of mind?
I think, and this is a really good opportunity to bring back the dual mandate. So last year, from policymaker perspective, it was inflation, inflation, inflation. So we have a dual mandate, price stability and full employment, but we had a really tight and strong labor market across the country. In fact, job vacancies per searching worker were at historic highs. They've come down now to a better balance. We're not back to regular levels yet, but it's coming down. But last year they were near historic highs. So that was a labor market that was very strong, but inflation was very high. So we were only missing on one side of our mandate. As the economies come into better balance, our mandated goals, the risks to those have come into better balance. So if you think of it as a scale, I think of now the risks to both sides of our mandate are in better balance. And so now I'm thinking about inflation, the dual mandate, and the labor market. And what really we mean by bringing inflation down as gently as we can is bringing inflation down sustainably to 2% without doing unnecessary harm to the economy or the labor market. And so keeping our eyes on both of those mandates now and not just being completely singularly focused on inflation is an important part of what we're doing in 2024.
Help us understand this. Back in 2023, Nevada had the highest job growth in the country, but also the highest unemployment rate. How does that make sense?
So that's a terrific question, and it really, here I will use a little bit of my history of being, I'm a labor economist by training, and also what I heard today. You should come to one of these roundtables. It's extremely. I asked if I could come to the next one. It's extremely useful, and this is how we do our work. In order to do our work well, if I can can I digress for 1 second?
Of course.
Okay, so we have to have a three-legged stool of how we do our monetary policy work to do it well. And one of the legs on the stool is, of course, the models and the theory and all the things I'm trained to do as an economist, and we need those types of things. And then we have, of course, the massive quantities, as you know, of published data that are being collected by public and private sources, and you get regular updates on things. They can sometimes be daily updates or minute-by-minute updates if you're watching the markets. So you get all the data. But the third leg of the stool, and the one that often is forgotten but really shouldn't be, it's an equal leg, is the engagement with leaders, business leaders, firms, small businesses, medium businesses, large businesses, worker groups, unions, community groups, because you need to find out the lived experience of the data and the lived experience of the economy so that you have a very sturdy stool. So that's why I use these roundtables. So now we go back to the question. Help me remember. I got all sidetracked.
Well,
that's why you're good at your job, and I'm bad at mine.
But you asked if we could digress, and then I thought, oh boy, I know we are on a time limit. And how much time do we have left? 10. We've been working through a lot. Okay.
You're quick and I'm quick, so we're good.
Help me understand the highest job growth in the country, also highest unemployment rate.
Okay, and I appreciate you letting me digress. So what I learned in the roundtable is going to help me, but I'm going to start with where I am as a labor economist. So what you learn is that sometimes rapid job growth causes a lot of churning in an economy. So job growth is rising rapidly, people are seeing new and ever new opportunities, and so they move back and forth. But as you move from one job to another, you often have a spell of unemployment, which raises the unemployment rate. The other thing that's true is the younger your population is, or the newer to work they are, or if you're getting new people moving into the state to take job opportunities, they have a period of higher unemployment. So those two things are not necessarily contradictory, that you can have rapid job growth and rapid changes, adding new industries, et cetera, and you can have people who have spells of unemployment because they're searching for the best opportunity for them. And younger workers just search more and are in and out of work more than more experienced populations. That's just a fact of how the labor market works. But something I learned today in the roundtable is that, and it would make a lot of sense, when you bring a new industry in, like lighter manufacturing, and you're building it up, it takes time for people to say, oh, I might want to work in that industry. So they have vacancies that don't go filled while people stay without jobs looking for a job that fits them. And so I think that's just part of a natural process that you have to make sure people know about the jobs, know about the opportunities they bring. But this is the third thing that we can have all of you here have a lot to say about, which is you've got to train and make sure your workforce is ready for the new opportunities coming in. So whether it's moving workers from the back office operations in gaming to the front office, or it's moving people who were in entertainment into light manufacturing and helping them get the training and the mindset that says, oh, those are good opportunities. That's just going to take time. But it has to be done in order for that unemployment rate to come back into better balance. What you ultimately want is good job growth and a low unemployment rate. But I think that's a process that I know you're working on here and will continue to need effort.
Workforce development is something we hear so much about here. I mean, what would you suggest? Where do you even start? Who's responsible for that?
Well, let me say that the Federal Reserve has we have no levers for workforce development, so I just want to make that very clear. But then I'm going to follow that very quickly with we all are. If we live in our communities and work in our communities, all of us are benefited by ensuring our workforce has the access to training and ability to move in that virtuous cycle. And it is a truth that we all do better when we all do better. And I think that, and I heard this loud and clear at the roundtable, that everybody feels responsible for participating in this. And that's why we heard a lot about public-private partnerships, but we also heard about private-private partnerships or public partnerships, that the people who are doing housing development have to work with workforce development, have to work with universities, have to work with firms to bring everything together. So, in a virtuous cycle, you train a worker and the worker is job ready and the jobs are available, and that lifts, and then the housing's available near the workplace so that you solve those kinds of
for 2
issues.
points.
But I will add
cares
that
about
this
the
is not a problem
virtuous cycle
of
inflation?
Southern Nevada. This is a problem of our economy right now, is that we're in new and developing industries, which is fantastic across the country. But the workforce has to be sometimes trained or retrained. Technologies are changing fast. People are a little bit nervous about that. But this kind of dividing education into smaller bits and have micro-learnings that can give certificates and have people get into jobs and do apprenticeships or internships, that's the recipe for getting this to move forward. And I see more and more of that.
We were looking for
and
Japan.
I think
Japan was the
great
answer.
experimenting ground
there
that
you
can
go,
help
Ninja,
others
at the
across
buzzer.
the country do similar things.
For the record, I asked
Disney
if I
High
could be
too.
in the next roundtable that you have
Honestly,
coming up
none
after
of
this,
her
but I was told
comments are
no,
getting more,
because
but then again, my
everyone
wire's
in there
still-
needs
my other
to
wire won't
feel
work.
that they can talk openly, and you can get...
I can have a roundtable of reporters.
No.
That's called a scrum, by the way, not a roundtable. And that's a different event altogether. So,
but on that point, you have talked about...
It's an occupational hazard for you that you don't get invited.
The importance of putting a story to a data point. That
Yes. No, I
you
think we're
hold
good.
that very dearly.
I do.
Is there an example you have of a Nevadan you've spoken with? They've told you something about themselves and it's helped you better understand a specific issue?
So I'm going to go, I love that question. And you see my tone change a little bit because, so I'm a rookie economist.
Nice.
I just gotten my PhD, went to my postdoc. I started the Fed in September of 1996. And my first out of the head office San Francisco assignment is to come to Las Vegas. So I come to Las Vegas, we're in early 1997, and I'm going to do an event in the evening, and so I arrive around 11 o'clock, and it is in the spring, so school's in session, it is not spring break. And I pull up my car, because I rented a car, pull up the car, and valet parking me are kids who look like they're in high school. And I say, why are you out of school? Is it a day off? And he said, I still feel emotion when I see this. He said, no, I dropped out because the labor market's strong and I can make more parking cars and I need money and I want money. Mostly it was need, sometimes it was want. And then he said, and all my buddies are here too. And I look and it's like half of his high school, it felt like half of his high school class, but it was at least 10 guys, and they're all parking cars, and that is a tragedy. And so it is because, you know, if you trace the data for those students when they're young, and you look at what their earning trajectory is, they don't actually ever rise that much above that level of income they were getting unless they go back for training. It's hard to go back for training when you don't have a high school degree. So it was the first time, I'm a labor economist, I'm like, wow, a strong labor market, who could complain about it? And what I realized is a strong labor market is great. A frothy and overheated labor market has consequences that we don't even see. And that consequence that I witnessed right there in my first outing outside of the head office was here in Las Vegas, and it made me realize why the balanced economy and the dual mandate are so important. We really want a balanced economy that can sustain itself, because a long and durable expansion that allows people to make decisions about, you know, what they want to do in their career and not be pulled out of school because they're fighting inflation, or not be pulled out of school because they can't look away from the outsized salaries, outsized income they would be paid in that moment. That's actually what creates that intergenerational transmission, and it's why I work so hard in a role as policymaker to just create the conditions of balance so that people aren't making decisions either to pay for things they can't afford, or not to go to school because they can't feel like they can even commute to it because it's too expensive. And if you really want to ask where I first learned that, I learned it here in Las Vegas at the hotel parking my car.
I wonder how much you think it's improved since then.
Unfortunately, I heard the same story today. And so here's the reminder for all of us. Why are we, you asked me at the beginning, what do I say to people who are trying to buy a home about interest rates? The higher interest rates we have are to bring down inflation. If we bring down inflation and the economy comes into more balance, then yes, homes become more available and affordable, and mortgages do as well. But those kids make better decisions.
Fortunately, that experience was
future.
today.
They're probably making, honestly, the exact right decision for their current situation.
Said, wow.
They've got to often help their families, help themselves. They can't afford the things. But that's what a balanced economy offers. It offers the opportunity to step away from making just-in-time decisions to making decisions that last a longer period of time. Now, I dropped out of high school myself and went back and got a GED eventually. But I dropped out of school because my family needed income. I grew up in I was in the 80s, high inflation, and then the Volcker disinflation. And it was a meaningful time because people in my community went from fighting high inflation to not having jobs because the Volcker disinflation came. And so you ask me, people do ask me, why do you stay committed to bringing inflation down? Because that Volcker disinflation is not something we want to have to do again. So we don't want to run the risk that inflation gets locked in and you really have to force it, because people want both things. They want price stability and they want a job. And that's what we're doing. That's why I take the great responsibility here as an honor that I have at the Federal Reserve, because it's an honor to try to work hard to deliver those two things to people.
What was the job that you took when you dropped out of high school?
I drove a donut truck. So I had 3 jobs. I drove a delivery truck for donuts. I then got a job washing the donut machines, and I was 16. And then I also worked a side gig at a department store, which I've learned to not name. But no, I think it's okay. I mean, I was 16. It was Target in Missouri. So I worked all 3 jobs, and my aspiration was to be a bus driver because I could have one job in benefits. But I was fortunate. I meant to mentor.
And
you asked me what can we all
after
do for
telling that
workforce
story.
development.
It's a pretty
A mentor
inspiring
saved me.
story, though. If she did
Saved
do
that,
all those
changed
jobs,
my
I'm just
trajectory.
getting a.
That was
I'm
what I
just
wanted to
getting
do.
a little.
Even though I
She
had
kind.
the
I don't
GED
know,
to get a
man.
bus driving job, but she taught me that.
That just-
and then after I got my GED, she said,
Y'all just y'all actually listening. I didn't think y'all were actually
I
listening.
didn't have the money to
Shut
pay
the
for
fuck.
my first
I
semester,
worked
so she
in the
wrote a
donuts.
$216 check.
The fuck
I
you
went,
fucking- why you actually
and now
listening?
I'm here as president of the San Francisco Fed. So it's possible.
That was better.
You talk about the importance of a balanced economy, but I think economic diversification plays into that.
It does,
especially
absolutely.
here with what kind of jobs are available. And so back to sports with these teams and these stadiums that are being built. I mean, the Tropicana closing today.
I saw that, yes.
In its place is set to be a Major League Baseball stadium.
From Oakland.
Yes.
Just so you know.
Thoughts on that?
No. I don't have any thoughts. I'm thought-free.
Okay. The jobs that stadiums and these professional sports teams provide, what does that do to address the wage gap in Southern Nevada?
So it's hard to say, right? And what we've learned from here as an economist, and this is, the Federal Reserve doesn't play a role in this, but as an economist, you can see that how sports affects the community matters as the community invests in all the wraparound services. If you're just looking for the construction of the stadium and then the vendors at the stadium, that's not the kind of job machine that I think people expect when you think of a major stadium. But I think of Las Vegas as doing something quite different than that. I live in Oakland, and people are boarding that plane all the time from Oakland, LA, coming to Las Vegas for the weekend to do things on Friday night, all day Saturday, Sunday morning, then see the Raiders play on Sunday, then they go home. And so that is more of an experience that you're investing in, and those experiences are just part of that whole equation that Las Vegas has had for so long. So I think of that as is probably, and I didn't talk to the people who thought of these ideas, but I have talked to people here in Las Vegas before who said our plan is to just create experiences and have people show up for a weekend for experiences, sometimes even a week, instead of just you go to the stadium and you see the game and then you go home. And that is less of a job creator than these experience-based investments, which I believe that people thinking about this are trying to do here.
Disney kind of breaking
You think baseball fans are going to travel that often to Vegas?
So I have baseball.
This is so unrelated to her job, right?
No, but it is kind of related in this way. I'm going to draw it back because that's actually what I do. Since we have. It's useful to remind everybody, we have 2 goals, price stability and full employment, congressionally mandated, and we have 1 tool, the interest rate. And so that's what we really have to work with, and those are our responsibilities. But we work in an economy, and we take the economy we have and work towards the economy we would like to see. And the economy we have is affected by the challenges and the opportunities that are there. And so I keep track of things like what drives the consumer, what drives communities to thrive versus, falter. And one of the things I have seen again and again and again is that people, and you can go anywhere in the world and see this, but in the United States we have, sports like baseball and football, and, we have NASCAR, and things of that sort, and people go, and they go for a whole bunch of reasons. 1, we love our sports teams, but 2, we like the experiences, and, you talk to baseball fans, they're going to see the game, but they're also going to remember with their kids what it was like, or go with their parents or grandparents and friends. And so I do think that people will travel for those activities, but it's probably more to do with relationships than with what was happening in that stadium on that given day.
I'm getting the cue to wrap. But it doesn't end here because now it is audience Q&A time. So please begin lining up at this microphone
was all that?
On the left side so that the camera can still get a view. Your head won't be blocking it.
TikTok came up in Biden G discussion.
Excellent. We should clap for you.
Yes.
Thank you.
Yeah, we should clap.
Well, good morning.
What was that? If that
thank
wasn't
you for
the
coming
Q&A?
out to Southern Nevada today.
That was random as hell.
So I relocated from the Bay Area almost 25 years ago for a job here in Southern Nevada that paid $56,000. And it was a comfortable living. My wife and I, she had full-time
Maybe
employment.
2025.
So fast forward, and there was a very recent survey
long-term
completed.
won't be crazy, though.
The definition
Once I'm
of
on, you know what
comfortable
I'm
is a little nebulous, right? It can mean a lot of things, but it was based on housing costs and things like that. And the conclusion was that you needed to make $94,000 to live comfortably in Southern Nevada. And California aside, I'm just curious, when you look at the other states in our region, how does that stack up? And because it concerns me, because there's not that many jobs in that spectrum for someone to live comfortably. So.
Sure, no, it's a terrific question. And what we've seen is that, you know, I'll share a striking statistic that I read from a survey. So the Cato Institute did a survey. They're out of DC. They did a survey, and they found that 87% of Americans worry about the cost of housing, that it's too expensive. And then they said, well, let's look by geography. It was clear across the country. It wasn't located in one area or another. They said, let's look by income level across the board. Let's look by generation across the board. And one of the striking things was that even in states and geographies where you were used to lower cost housing and people moved there to kind of escape that, to get a better quality of life, affordable living, comfortable living, this was a concern. And so housing is an issue. Housing has gone up in price everywhere. It's especially risen in places that were lower cost destinations because a lot of people move to places like Las Vegas, Salt Lake City. So I'll just walk through the 12th district of the Federal Reserve. We have Arizona, Nevada, Utah, Idaho. Those states are destination states, and cities like Salt Lake, Boise, Idaho, Las Vegas, Reno, Phoenix, Tucson, destination cities for people who were looking for a more comfortable living. But when a lot of people come in looking for a comfortable living, the living gets less comfortable because a lot of people are moving in, the house prices are rising. And I was in Portland for a national community development conference, and one of the things that's really clear, I showed a couple of charts, that we are just in a tremendous housing imbalance. We have limited supply and lots of demand. And that's been going on since the financial crisis, because if you remember, the housing market really took a hit and it hasn't been catching up in terms of building. And so those are just issues. So yes, you're not alone here in Southern Nevada. The problems are very similar across this whole Intermountain region, but even across other parts of the United States, which used to be lower cost, affordable areas people would go to do all the things that people would like to do. And I think at the crux of it is the rising price for housing.
Walgreens
and
52
then add inflation to that on all the other goods and services that people want, and you have a recipe for feeling like you're falling behind. But we're trying to get the inflation part down, and then hopefully the housing market will rebalance itself with the interest of public-private investments. Thank you for the question.
And this is no commentary on his question, but let's try to keep it succinct so we can get more questions in.
Yes, well, thank you for being here, President Daley. It's an honor for us to have you in our community and hear from you. I'm not sure if this question will go over well or not, but there's a book out there these days called Lords of Easy Money. I'm not sure if you've heard of it, read it.
Yes.
I was left with kind of the conclusion that quantitative easing, so to speak, doesn't really have fully known effects yet. We're still dealing with that. Curious, with the result of inflation and everything that we've gone through, what do you feel like is the macro impact of that, and are there any potential, problems ahead for us related to that?
Sure.
Thank you.
For those of you who haven't read the book or don't keep up on all the terminology for the Fed's tools, let me just walk through the Federal Reserve's tool or the FOMC's tools. So we have, I said we have one tool, the interest rate. But the interest rate, we raise the Fed funds rate, we make that announcement, everybody pays a lot of attention to about what we're going to do with our interest rate policy, and that immediately affects like the mortgage interest rate, your credit card rates, etc. The second tool we have is what we call forward guidance, and you hear that as what is the Fed telling us they're going to do next. So you said in our projections, we had said 3 rate cuts would be likely. The median of the summary of economic projections for March said 3 rate cuts would be likely this year. That is a type of forward guidance. It's another tool because we say, here's what we've got the interest rate on now, but here's where we think the interest rate is likely to be headed. Remember, it's a projection, not a promise. The third tool in our toolkit, because we have the least history with it and we have the least information about its effects, to your point, is what we call quantitative easing, quantitative tightening. That is when we run out of room because we've hit the zero lower bound. We can't lower interest rates and make them negative. We can't charge you to put your money in the bank. Well, we haven't. We could, but we have not. Then we have to do something else to give the economy some boost. And so we buy assets, we have a balance sheet, we expand the balance sheet. And it is true that we have less information about how that works than the other 2 tools, and we have to learn more as we go. But I think of that as our third best tool and one that we're in and out of fairly quickly. So when you trace it, when you ask, did the balance sheet policy cause high inflation? My answer is no. What contributed to high inflation is the post-pandemic recovery in demand was extremely strong. The post-pandemic recovery of supply was extremely weak. And you got this supply-demand imbalance that was very large. And then our policy was adjusting, but we didn't adjust as quickly as I think in retrospect I would have liked. And we ended up a little bit behind on the inflation fight, but we raised interest rates aggressively, and now inflation's on the downward trend. So I wouldn't really say that's about quantitative easing. I'd say that's the third tool in our toolkit, and really where I'd like us to stay focused is on the stance of monetary policy, and then working with the economy we have and learning from that. I'm learning a lot from this past episode, but it's a lot about how do we respond more quickly, and what do we do, and how do we do it, and so far I think we're on a good campaign to get inflation down.
Well, first of all, thank you so much for being here, Madam President. My name is Tuan Pham, representing the Asian Chamber of Commerce, along with my colleagues here in the back, Anna and Amanda. One of the challenges that we have here in Las Vegas is we representing the Asian community. We have about 12% of populations here in Nevada, and quite a few, several thousand of small business here in Las Vegas. The challenge that we have is that when we deliver all of the news or any assistance that providing to the small businesses, English is not their first languages. So basically, we have to try to find out and how to deliver those information to the small business so they can using that and help their business. One of the things that you mentioned earlier, that everything, the policy of the Federal Reserve is, a tool for small business to using and to help their business. Is there any policy in the future or any things in your agenda to help to deliver those policy to the non-English spoken people? Thank you so much.
So that's a good question. If I understood it correctly, I want to make sure I understood the question. So when we announce our policy decisions, are we going to have any ability to translate them into a variety of languages? So right now what's happening is people are doing that and putting that into words that, for the people who are on our boards and councils or people we work with are going back to their communities and putting it in languages so others can understand. If that was the question, I think that's going on. But we don't have anything on our website yet that has all the different languages. We have done some in Spanish, since that's a predominant second language in the 12th district. But there's more work to do on that front. The other thing I will say, though, is one of the goals here is to ensure you go back to your communities and say that the Federal Reserve cares about every American and countless global citizens. Our work serves everyone. And no matter where you are, when we don't directly touch you, we are actually doing things on your behalf. And I just want people to know that.
First of all, congratulations to the Fed. The historic recession that did not happen, that there were a million ways that it could have happened and did not happen. Secondly, has there been discussion over the years that 2%, this target, was perhaps too low, irrespective of everything that's happened? Wasn't there a great deal of discussion that the 2% was too low as a target?
So, you know, in my history since 1996 working at the Fed, we've had a variety of discussions over time, even when I was not a policymaker, about what's the right level of inflation. 2% is generally considered across the globe a reasonable number. Here's why. You don't want to, we don't measure inflation perfectly, and you don't want inflation too low. Someone asked me, why don't we set it at 1 or a half or 1.5? And we need a little bit of a buffer because we don't want to fall into sadly, the situation Japan got in, where they couldn't even, you know, disinflation rather, is just as bad as inflation. It's really challenging for the economy. But on the other side, you know, we don't move the target. Talking about moving the goalposts when you're not achieving them is actually not helpful, because our credibility is our most important tool. One of the things that really helps Americans feel reassured is that when we say 2, we mean 2. And we've always talked about a range of inflation as possible, but, you know, some people would want it to be 1, some people might want it to be 3. 2 is a nice middle number that says we don't want it to be too low, we don't want it to be too high. What's really important is that people believe in the number we've chosen, and that's, you'll hear me repeatedly say, we're resolute and committed to restoring price stability as we currently define it, which is 2% inflation. And that doesn't mean we will never talk about something, but it's not on the table now.
Thank you for being here, and I certainly appreciate your people-focused policy view. So this question sort of relates to that. So what are the intended or maybe unintended consequences of the increase in the rates have been? So this recalibration of the supply and demand in the labor market, right? Decreasing this demand for labor and increasing labor participation supply, which inherently will reduce wages, right? But at the same time, with the goal of reducing inflation, what I've found, and this is anecdotal, is that prices go up very quickly, but they come down very, very slowly. There's a stickiness there as business owners. They've set a price, and the price for that hamburger at $25 tends to stay there for much longer, right? So how do you balance the risk of prices not coming down as quickly as potentially what happens to wages, where real wages for the common man will actually be impacted?
Yes, that's a terrific question. And so let me just say this as quickly as I can. So in general, historically, here's how the economy works. As you said it very well, in a period of inflation, prices rise rapidly, but then we're controlling inflation at the Fed. That's what our job is, inflation. But that doesn't mean, my metric here is eggs. So because eggs are something everybody uses, and for some families they're a staple, and they're a semblance of, in some cultures, of this is when, you know, if I don't have eggs, that's a really bad sign. So eggs have stopped rising as rapidly, but they're still higher than they were prior to the pandemic. And that takes a long time, and they may never come back down to the pre-pandemic prices. That depends on a lot of things. But in all goods and services, what tends to happen is prices rise and then they stop growing. That's because inflation goes back down to price stability. Wages, on the other hand, real wages fell, and then they don't catch up very rapidly. They don't catch up overnight. So now they're rising, real wages are rising, but it takes a couple of years when inflation's not going up as fast, but real wages are rising, because wages are still growing, but they're growing faster than inflation, for people to recover what was in fact lost during the imbalances. And so that is how it works. So then what does that mean for policymaking, in my judgment? That means it's really incumbent on us to try everything within our power to create a durable expansion. Because if we had had a recession, sure, inflation will come down more rapidly, but jobs will be lost. And we'll be stuck in that world where people have got lower inflation, but they also have no job. And so getting a sustainable expansion allows the time for people to catch up. And even if your hamburger remains higher priced than it was before the pandemic, you now have incomes that have risen, that have caught up with that, and you're back in balance from where you were prior. But to circle all the way back to the beginning, why is it so important to keep doing the work until we get inflation back to 2%? Because if we cut too soon, then we're stuck with a $25 hamburger, and that's going to rise in price. And that's going to be hard on people because it's going to take even longer to come back into balance.
Thank you so much for taking the time to explain all of this and for those great questions. That concludes this fireless fireside chat. Mary C. Daly, President of the Federal Reserve Bank of San Francisco.
Thank you so much.
Good job. Good job. That's good. That was good. Honestly, it was better than KJP. You know that? I could have hit you with KJP. Don't tempt me. Don't tempt me. Don't tempt me. She looked great orange today. But that being said, that was Fed Dolly. I mean, none of her comments actually hit the wire. I think she did say stuff. What was it? Nothing. No, she sounded just like everybody else with the rate. She's a little bit more, I'd say, dovish than not. Again, she's also playing the back and forth. If y'all like her, that's up to you, man. That's up to you, man. That's into you, but nothing. No, honestly, I mean, let me try to find it. Let me see if she hit the wire. But I was watching it. I mean, 11:32, Mercedes. A lot of comments from the White House about the Biden Xi Jinping thing, so that's what they're asking. Honestly, KJP hit it. Dolly wants to bring inflation down to 2 without doing unnecessary harm. Risk to mandated goals, a better balance. Probability of recession is not something that's worrying Dolly. Watching oil, but price would need to be sustained to be an issue. Challenge is balancing risk between job and inflation. Data will determine how Fed manages policy. Election considerations won't impact Fed rate decisions. Yeah. Watch the eggs. It's weird. I swear she told us don't worry about the eggs. Remember when the eggs went crazy? And then, I don't know, man. She told a story about how she was like, yeah, I love Vegas. I love Las Vegas. When I came there, I was in 1996. I learned I parked my car in Vegas. And I came out when I worked for the Fed. And I learned about the HSBC breach. What? Hey, who's you coming in? Stop it. Hey, get out of here. Don't. A little bit of a cheek lay. Yeah, she told her story, but then she also told us another story. I don't know. But then I think you got more out of Loretta Mester. But Dolly is a voter. She was even saying it. She was like, people pay attention when you're a voter. I'm a voter now. The parking lot story. Well, it just didn't make. And then she said she dropped out of school to get a job, 3 jobs, before all of that happened. But then she didn't learn that people were doing that until afterwards, until she parked her car in Vegas. So I don't know. I think she just wanted them to know. She was like, Vegas, I got you, because I think Vegas is in her district. I'm pretty sure the San Francisco Fed manages Las Vegas. Correct me if I'm wrong, but I'm pretty sure Clark County and Las Vegas is handled by Mary Dolly, whatever you call her. It is her district. Wow, well, there it is. It's her district. Peter! It's the western region of the Fed. Yeah, so she handles all of that. Ain't that crazy?
Wherever it comes from, a former leader, we have to...
Don't worry. I'm not playing it. I'm looking for something very specific. It rhymes with Peter! Okay, it is P. It doesn't rhyme with it. It's not. Just want to see, just in case. But I don't know if they, switch the camera over to him. If they don't, then I won't be able to determine. Because I could put it on a baby screen, But SPY, and then did we hit above 50? I don't think we did it, man. I don't know. Is today feeling like a 5,200 day? Do you guys feel 5,200-ish? Do you feel like you belong at 5,200? Because we hit 5,200 once, I think, and then came down. I don't even think we hit it. I swear we hit 51.99 and then went down. You feel 4,200-ish? I think that's a different question, but maybe. I mean, Market a lot lower last time we expect these rates, but then again, everything up except for the bond. I don't know, Habibi. I don't know. That's 4,200. What day was it? What month was it last time we were at 4,200? Let's just get a blast from the past. Last time you were at 4,200, bro? It was a good old day. Oh, that was the beginning of November. Wow. You didn't even have Thanksgiving. Are you thankful for the long term or the market rally? It's 4,200 is a long, long way, buddy. Long, long way. Even in December, we got up to 45. I'm the 46th. It's crazy. Yeah, good luck. So we'll see, though. It was a long time ago, man. Gold and silver. Where is silver? Or gold? I looked at silver earlier today, actually, and then I don't think we talked about it. Gold hit 22.90. Gold is phenomenal, man. Okay, KJP left. I didn't get PITA. Silver, $26, almost $25.96. Not too bad, not too bad. It was, I think this is the highest it's been in like 6 months. No? Yeah. Even in a year, maybe? So like last April, May, you did make a move towards $26 on silver. So that's crazy because silver is still at the same price. Like this time last year, gold was at $2,000 flat. And then it dropped down to $1,900 a couple months later. That's crazy. So silver, I mean, I don't know. I don't think silver is responding to like rate cuts. Actually, I'll tell you. Do you know when silver pops? I got a weird one for you. There's something that will make silver pop. I could sell it to you. Would you like me to sell it to you? I could sell it to you. I haven't looked at the likes. Honestly, 1,800 likes. I don't know what I'm selling, man. I'm very impressed with that number, man. That's an honor. That's a joy. You'll buy, just hit the like button. It's on the house. It's on the house. It's on the house. It's on the house. Don't worry. It's on the house. Don't worry. It's on the house. You could like the video if you'd like. Okay? How many likes? It's on the house. Don't worry about it, man. Don't worry about it. Okay? God bless you. But there's one thing I think that'll make silver go up. Like a lot, or at least, because it's trailing behind. Gold is up more than 10% in that time frame. Not Colt custom silver coins. We can't do that, though. You know that? People do that. They offer, like, you could engrave your own silver. Oh, man. Too bad silver don't sound pretty. So the thing that will make silver go crazy. Does anybody have any guesses? Anybody? It's not battery production. It's not gold. It's China and all energy. Sterling sounds pretty. Nitric acid. QT. Hunt Brothers. What is this? Yeah, silver square. I'll tell you about the Hunt Brothers. I'll tell you we're gonna corner the silver market. I mean, my brother at time we're gonna in November we're gonna corner silver and fuck them up, squeeze it, buy it all. Not speculators, but I'll tax them. They got paid their fair share. Not war. We fought a lot of wars, and we don't worry about wars that affect the deficit or budget. We're not gonna worry about that. We gotta worry about keeping them safe. Yeah, Marvel is green. I'll take it. Not vampires. Why you think vampire silver? I guess it makes sense. I didn't think about that. I didn't think about it. But no. Why would that happen? I guess if it's fucking an alternate universe. Anyway, yeah. What else? All right, the guy was right in the beginning. Honestly, Homeboy said it from the beginning, man. Homeboy said it from the beginning. Who was it? It was James, Mr. Samsel. China. I'm sorry if I'm mixing up the volume and emotions here today. But China. That was just very fun to say. Not alternative energy as much, but China. China. That's it. remember, China is not growing and buying and building and using even for like industrial the same way. That's why anytime China does good, commodities kind of rally a little bit. Yeah, I do think a bullish China, it will aid in a bullish silver. I think if you, all commodities, pretty much, essentially, if China starts turning on their economic machine, like if China was pumping like they were 10 years ago, I think silver would be a lot higher. But as of now, they're not. They ain't running the same. China. Do we know how Josh looks? I mean, have you ever seen a Geico commercial? Take the lizard and then the caveman and then combine them. And then you got Josh. Nice to meet you. Like the video. Get a long term. Save 10%, baby. Amen. Amen. Mm-hmm. True. Says SBF paying rent in present. Okay. Okay, SBF. You should talk, SBF. Mm-hmm. You just joined 31 minutes ago? You literally made this account 31 minutes ago? And you couldn't you couldn't stay under the radar for 31 minutes, bro? You couldn't, like, you know what I'm saying? Like, I don't think I've even ran a chat packs in the last 31 minutes, man. It's crazy. No, sir. Where are you traveling to today? Buckaroo? Where are you coming from, man? What do you got? Do you have a long term? Can I see your long term, please? You have long term and identification on you? See, we'll get you out of here quick if you got a long term. Mm-hmm. Oil is at 85, yes. Which is kind of amazing. And we were talking about it yesterday, man. That Iran thing kind of spooked some people here into the morning. And then you got oil at 85.22 right now. Running into the high. You finally split up your Schwab and Robinhood. Schwab long-term only and Robinhood casino only. Wow. That's amazing. That's amazing. God bless you, bro. It's a big day. Congratulations, man. Congratulations. Today, it's kind of like getting your first armpit hairs. It's like going through puberty in a weird way. Like I said this the other day, man. I said one day, you're just going to grow up and have a damn long term, you know? You're just going to have a separate account, bro. So good. Raul Marco Oliveira, baby. What a name. Marco Oliveira. Beautiful name, man. God bless you. Welcome. You got a long term? Stocks only go up when you're not here, so you'll disengage from chat by Osh. Honestly, you did not answer my question, sir, but honestly, man, I'll let you off with the warning. Okay? I got a runaway Civic plates Raul right now, so we'll see, man. I'll let you off for now. We'll see, man. So have a good day, okay? Have a good day. No headlines. Sunak spoke with Israeli Prime Minister Netanyahu on Tuesday. KYCH, guys. Sounds a little suspect. KYCH. Key Arch. Oh, it's a SPAC. Up 50. You got to be careful. Would you go scuba diving? I said I'd never go, but I went 7 times in Caraco. Coolest thing I'd ever experienced. How deep? Like, well, it depends how. I've done snorkeling. That's good enough for me. But, like, I don't know. If I could, like, scuba dive in, like, a not too shallow or too deep ocean. If they got, like, a bunny slope ocean. You're using 80% of your 1099 job for income for the long term. Would it be okay to put the 20% I keep back for taxes and bill? Yeah. You could collect interest on it. The money you set aside that you're going to pay, hell yeah. It's actually quite a smart idea. Assuming you don't gamble with it. Assuming you don't have sticky fingers and then it's sitting in your account one day and you're like, oh, maybe if I can open margin real quick. Oh. And then if that's it, and then as long as that doesn't occur, it's a good idea. I love Topgolf. I'm not really good at golfing, but I do enjoy the whole. I'm honestly kind of sad Topgolf isn't like performing as a business. Like, I don't think their numbers are doing as well. But like, I really thought Topgolf. Again, this brand is also combined with Callaway, but I do like Topgolf, man. I don't know. I saw a Topgolf for sale the other day. I think it was like 12 million or 20 million to buy a Topgolf that's already running and operating. So I don't know, man. I don't know. I don't know if it's Elmo or Mickey Mouse. It's a weird mix. It's a long story, is what they'd say. Topgolf is popping, but like there's some of the some of them just like aren't doing good. Like, it's hard to explain. Like, some are doing very successful and they're very crowded, but like the unit metrics, making back the money, a lot of them are still like underwater. And like, again, there's like people who want to like sell them, but it's not as profitable. It takes a lot. It takes a long time to recoup your investment. So it's already been a couple of years and it's like still pretty active, but it has slowed down from some of the peaks, and it's just like it's still going to take a while to realize the money. But yeah, it's not real golf. It's a bar. It's not like it is technically a driving range, but like, that's what I'm saying. Like, they make money off of drinks and food and like the little game thing there, but it's definitely, I mean, it's different than golf. It is commercial real estate. I mean, I saw some of them. They pay. I think they do only pay out though. Like, I want to say they're only yielding like 4%. So again, like, you still have a lot of costs to recoup. There you go. Check out my swing. They're massive. They should make smaller. I think you have to make them big. It's a driving range. So, like, it has to be at least, like, 200 and something yards. And then the space for, like, the shop and where everybody stands. And then the register. And then parking. But they are literally massive. Yeah, Hanes brand sold Champion to Authentic for $1 billion. On it, I think, are they still trading lower? Because I feel like they would be. I honestly think it's a bad deal. I think they got $1 billion. Like, most people would be happy if you got like $1 billion, but now it's like, what the hell does Hanes own? Yeah, I don't think people like the deal. Does anybody believe in Palantir? I'll ask the question for you, Marco. Chad, does anybody in here believe in Palantir still? They have underwear, don't they? They own something else. I want to say they own Supreme, or is that VFC? They don't own Polo. You do? I do. All right. Well, there you go. I do. They don't play. Wow, a lot of them, like, yeah. Magikarp's pretty crazy. Wife beaters. He was pretty intense, man. Sold Palantir yesterday. I think a lot of people like Palantir. I mean, it's an interesting company, to say the least. And oil's still up. SPY came back up to VWAP. We dropped a little bit. What time is it, baby? Oh, wow! Chatadonia, are you kidding me? Come on. Chad. 7 minutes till power hour today flew by. Stop it. Stop it. This was insane. Bro, it's already power hour. 7 minutes. Palantir, a cult. It is. People, if you like Palantir, you like really love it. I think you put all your money into it. No, not like that. But like some people, really though. You like it, cybersecurity. I told you, I've walked by their offices. I've been in Palo Alto, and I've walked by a building, and I was like, wow, that says Palantir. And then in the back of my head, there was like, no, Josh, it's Palantir. Palantir. Yeah, I was literally have my internal dialogue. And then I was like, wow, that's cool. I think they have 2 buildings, because I think I saw another one. But yeah. But that's all I know. And I've heard about them for years. I've listened to the CEO. I get it. I kind of get what they do. But I know that government contracts and buying gold, that's what they like to do. And then he talks about selling weapons that are very deadly. And he'll sell them to the highest bidder, and that he makes the deadliest ones. I am not an NVCR. No, I sold out of that one. I've exited. Until I looked into them, I legit thought they sold plants. Planter, okay. Palantir. For all your planting needs. New planters by Palantir. New automated planters to grow the best plants. Tomatoes, dates, oranges. With Palantir's AI automated system, you could grow anything. Palantir. Drip, drip. No? Is that good? Drip? No, okay. You get it? Like... No? Okay. I should get a drum set. I think we should, so we get bum. Thank you. It's like a chia pet. Kind of. Chia. I don't have any nat gas place. I don't even have any oil place. I mean, I'd kind of wait till the pullback, but we are entering, or in a couple months. Pretty much summertime. Summertime. Uber did get added to this spot. Yeah, they're doing good. Disney, the vote is tomorrow. So did you guys vote? Apparently half of all shareholders have voted. So I wonder where the other half is. So 500 million shares have voted, give or take, in Disney. I think everybody's always wanted a chia pet. I never had one, though. They just weren't really practical. Because it's just like a plant, Can't find me on Twitch anymore. I got into a battle with Twitch for negotiating. So it's like a labor union. They said I went to the bathroom too little. I said I could go to the bathroom whenever. But now they demand I take more bathroom breaks. So it's just like it's like an OSHA thing. I'm totally making all of this up, but I do like the sound of all of it. I don't know about you. So give me about 30 days or less. I'll see you there. I'll find you. Ready or not, here I come. You better long time. I'm in a long time and save 10%. Ready or not, long time is here. You can't hide. I'm in a long time. Ocean thing. OSHA. What is it? Occupational Safety, Health, and Standards or something? Something like that. You gotta look. You gotta talk to them about it. Strumming my gains with his finger. Raising the rates with his thumb. Okay. It's a good song, man. Did you like the Beyonce country album? I didn't. I think I heard one of them. My girlfriend played me one of them, but I was like, it's an interesting take. I liked it. I like country now, but I'm not like, I don't know, man. I haven't really listened to like Beyonce actively. I think when I was like little and my sisters listened to Beyonce and they would like show me Beyonce. Like I remember Destiny's Child. I'm a survivor. I'm gonna make it. I'm not gonna stop. I'm gonna work harder. I'm a survivor. Like I remember that. I remember the music video and everything. But I don't think y'all don't know about. They don't know about that, bro. They don't know. But other than that, I haven't really kept up with Beyonce songs. But I did hear the country thing. You remember that? I remember Spice Girls too. I remember that was Beyonce, Destiny's Child. Y'all don't remember that? I remember before there was even like Beyonce and Jay-Z. Big country guy. I remember when Jay-Z cheated on Beyonce. Y'all don't remember any of this. I remember TLC. They too young. They too young or we're too old. Either way, they don't get it, which is fine with me. It was an era. How could he do that? You don't, man, y'all don't remember. It's crazy. Her sister beat up Jay-Z. Yeah, you remember that? Dude, there's a lot. Yeah, I do. I remember that. The elevator video. Beyonce's sister attacked Jay-Z in the elevator. Y'all don't remember any of this, man. This was top. This was our pop culture, man. Nowadays, it's just like crazy shit. But, What does Jay-Z have to do here with stocks? I'm just answering the question. You know what I'm saying? I don't know. I thought you would appreciate that I give like 100% effort. You know, I give the same, like you asked me about the yield curve or Jay-Z. I'm going to give you the same sort of like, you know, I give a full answer, man. I try. You want to know about AI earnings plays? I don't have any for you, but I got something maybe better, sooner, closer, harder, better, faster, and then that's Kanye West. And now he's linked to Jay-Z no TSM, Marvel. That's the answer. So they have the AI event. I'm already in those shares though, but Marvel's AI event on the 11th, I think that's your closest event. But TSM does have earnings, I think, in a week. Is that actually, they're around the bank stocks, but they're not this week, are they? I don't think they are. So you might be a little early, because I remember we hit TSM. Where is it? Yeah, April 18th. Damn, they're right before the expiration. So, yeah, you got some time. Yeah, you got 2 weeks. 3 weeks, actually, on the third week. The third Thursday from now. Who has the best laundry machine? I don't know, man. I couldn't tell you. I think I have a Samsung, bro. But, like, Whirlpool and Honeywell, I mean, their stocks have been doing great. And they sell those. LG. I don't know. No White House press. No, it already ended. We listened to Fed Dolly instead. That was like your trigger warning of the day, or that was like your exposure therapy. You work at Samsung? Oh, nice. What do you do? Do you make washers? LG's a good washer. Life's good. MO, FXY, and Snow. MO for the long term. Those, I have one option play. I think that's going to expire. Nothing on FXY, but I have 6J, and then I have that Snow from last week, which is clapped for $40. No accounts payable. Oh, you do finances in Samsung? That's dope. Do they give you a discount on washer machines? Speed Queen? Is that a washer? I've never heard of that in my life. And I'm honestly afraid to Google it. What is this? A Speed Queen, the proven performer in law. I've never heard of this in my life. They look like industrial powerhouses. It's the Coin-Op brand. Well. Yeah. Speed Queen. Look at that. Might have to get me one of these. I'll keep this in mind. Is this the dead internet theory you're talking about? Because what is Speed Queen? I mean, I think Speed Queen has a bigger history than all of us. Low key. They look pretty OG. But it's a washer, dryer thing. No, not dead internet. It's a real product in the real world. I don't think it's AI's making content for it. But maybe this, I don't know. Homie asked me about a washer machine. Humana Pop. They're still probably dead. Spy just ripped. Hi. New high, ladies and gentlemen. You're above 5,200. That's it. It made another move, but this time you finally went above it. You're actually at the top. You were here a little bit in the morning, so you got like 44 points to fill the gap. But for the most part, that's a great start. It's a great start. You think Disney will hit 140 in the next 2 weeks? Oh, man. As much as I would love that, that's a very short runway. But maybe by the end of the month, maybe, but that's 140 is aggressive. It depends. I don't know, unless Nelson Peltz wins and everybody's like really stoked, and then I don't know, or unless Nelson Peltz loses and everybody loves that outcome. No, just say no. It's not gonna happen. Or to go up that much. That's like 20% in 2 weeks for what? No, don't. I would like it, though, if I did have Disney on there. And you do have to be disciplined with the long term, man. Come on. It's little, man. Once a month. Once a month. Just save, set, and forget, man. Set and forget. MPC all-time high. All right, my deposit settled on the YouTube account. Not bad. And then remember, I told you guys for the YouTube account, my problem, I think I overspent because somehow I had negative margin. So for this deposit, I only have $90 for the YouTube account this time around. Otherwise, I will go negative again. I didn't realize it from last time. I don't know what caused it, but yeah. So that's where we're at now. But not bad. Not bad. We've raised it to 300. 300 on the small account, 3,000 on the big account, and then Colt Sister is 200. And SPY's still going up. Again, we just broke above 5,200. First time since the death flush this morning. Take it. Another police chase in Alhambra? Why does this keep happening? Well, I do need to go to the bathroom. And I think for the sake of the market, you know we love a good old SPY police chase. I see a Pentagon briefing. I don't see a... Oh, wait, no, I do. LAPD, pursuit of it. 44,000 people are watching this? Why are... Dude, these police chases are mad popular.
Meaning, at this moment,
it's a Ford
do we
sport
have
track.
any police cruisers following this guy? Or
I don't know what that means for the market, you guys. Sport track?
Next move is going to be.
We are just observing. It almost might be what we call a media pursuit, meaning we're following it. We're keeping an eye on it.
So it's not even a chase. It's just being followed.
I would venture to say that they have
Again,
actually
this
backed
is,
off,
I don't know,
backed off.
man.
I'm doing a wider shot right now.
Chad, I'm just saying, if you in Cali and you get chased by the cops, you have bad luck. Because more than half of the police chases I've seen,
it was a scanner.
You just get chased by a helicopter,
so they don't have any
okay?
air support, so there is no PD.
I don't know if I should tell you this, but like
there was just the guys
in this
on the
scenario,
ground, the
I think you
guys
just
on the
drive
ground
to a
down there
parking
from the
garage
Alhambra PD
and
doing
then
what
call
they could
Lester.
to get this vehicle to
Because then, you know what I mean? That's the only way, I think. I don't know.
But right now,
I'm not giving y'all a recipe, not a recommendation. I got to go. Follow me on Instagram, at the Trading Fraternity. I'll be right
back. If it's
back.
just a stolen vehicle, why doesn't this person just pull over, get out of the car, and just walk away?
Well, let's see. It looks like he's pulling into a lot right there, right? And
yes.
Let's see.
Backing up.
Backing up.
Backing up. You got somebody just kind of standing there. I don't know how hot it is, but clearly doesn't have a shirt on, and it seems to be waving this guy on, like they know each other. Whoop, 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 whoop. What's going on there?
Oh, someone was trying to come in.
Yeah, somebody's trying to come in.
This guy running into traffic. Oh my fucking God!
Well, let's just take that tree down. There you go.
I didn't even get up yet. I was seeing. I was like, hold on.
Was it a
I thought it was about to end.
There's a wire flopping around down there now
what
as well.
Idiot, bro, that was so unnecessary.
Alhambra PD back on the case.
Oh, he said, "What's up, son?"
So clearly, hopefully they're watching.
Oh, dude, that was so unnecessary. You just took out a pole, bro. Yeah, he's just stressing for no reason.
And
nobody's around him.
Is returning
homie, looking crackhead on the corner, no shirt on.
They're coming back right
now. What's up, Bob? Good all day to have it. What's up, man?
Keeping an eye on
and he's like, oh, he was like, oh man, traffic.
Agency down
ran
there
over a pole.
PD, possibly to give them an
now
idea where this thing is, where it's going. But this stuff
this is why the cops don't chase him. This guy was driving slow and stupid for 5 minutes. The police show up. This guy going 120 now.
But
it's actually 50 miles an hour. It just looks fast because it's a Ford.
You just don't want to see anything happen bad. And making a wide turn, making a
sideshow now.
And this is what I'm saying. It's like this guy or gal.
All right, I gotta go. Let me go pee, man. Otherwise, we're gonna get caught up watching all this for a long time.
Before we
very
went live,
entertaining while the SPY's near highs.
Is it appropriate?
But you're still down again, 1% down on the Nasdaq.
This driver wants to spend
Disney
the
on the
night
high
in
too.
jail, and I hope it's going to be jail and not in a hospital, because it seems like he's like, look, I know those officers are this way, so I'm making a U-turn to go get behind them, and now I'm going to drive even more recklessly. It's dumbfounding to watch these type of chases.
Well, Stu, we also don't know. This person could be under the influence of something. Who knows? That is a possibility. We have no idea. Another thing, I don't know if it's clear or not, if there's more than one person in this vehicle. Do we have confirmation of that? Is it just the driver?
Well, we've been kind of peeking in there a couple of times. This is the first one. See, this is what I'm saying. This person is just driving reckless to drive reckless. There's nothing. There's no reason for this. There's no, well, maybe there was, maybe he saw the fire truck. But at any rate, now he's making another U-turn. You had an officer right over here making his way, coming right behind the tree, of course. But so there's the officer I was talking about. But it is almost like this driver is taunting these officers. Right. And again, you just got to wonder what is going on in this guy's mind, gal's mind. And as far as anybody in that, who's in the car, as far as we could see, it is just the driver in there. We were using the tools in Skyfox to look in the window earlier on, and it appears that this driver is in that vehicle by himself.
And I have to say, the roads are kind of wide open at this point, right? Not that much traffic. But still, it's dangerous because of the way he's driving, he or she is driving, and the speed in which this driver's driving. But it's pretty wide open.
Well, luckily, we don't see a lot of traffic out there. When he gets on the majors, though, there are other cars. We watch this guy pass a number of other vehicles going on the wrong side of the road. Not right there, but this is, again, on a smaller street out here in the San Gabriel Valley, but we're still in Alhambra. But you see these where he just kind of fishtails the truck for no reason at all. Now back on the wrong side of the road. That's a solid red right there, going right through that solid red. And you got a number of people just kind of, on the corners. And I almost wonder if they're watching this somehow, because he does make his way through these neighborhoods. Like, he's been making a lot of blocks. Right now, maybe not so much, but we've watched this guy make a block where this parking garage was. He went through there probably 4 times. And actually had the officers chase him through that parking garage, because I thought, we've seen it in the past. They'll drive to a parking garage, they'll park the car and walk away. This guy didn't park the car. He just kept it going.
So we're going to keep an eye right here. I don't know if it's possible if we can do a split screen, because I know we have some footage from earlier. Okay, so let's take a look. Okay, so right now you have the upper left-hand corner.
He just told you the recipe too. I got a snack, bro. I'm not going to lie to you.
And then
I went to the
below,
bathroom.
You see what we saw
and all
earlier,
I kept hurting.
just
He's
more
driving reckless just to taunt the police.
The driver just
what is
doesn't
wrong
care,
with this
blows
guy? I
for
was like,
stop
I'm going to go
signs,
grab
red
me
lights,
real quick.
Cutting things close.
We'll give it 5 minutes.
Okay,
if he
so
crashed, the market
that's what
crashed,
we're dealing with. And
he
we
get
can go
away,
back
the
to
market,
currently
we're going
what's
to have a
happening
good day
where this
tomorrow for ISM
truck has
services.
just come to a stop. And
Come to a stop.
See, man. We'll see.
And he never came to a complete stop, but he almost came to a stop on the 710 earlier on. Just brought it down to below 30 miles an hour at one point on the northbound 710, and then from there proceeded to go 80 miles an hour. So I'm hearing it right now is that Alhambra PD also, they're just, they're probably watching what we're seeing, and they are also saying this is just too dangerous for our officers to pursue this person right now. And so they are canceling as well. So again, it's going back to this. We're just going to keep an eye on it. I'm not sure if the PD, the sheriff's department, is going to stay and keep an eye on it as well. Maybe relay the information back and forth between Alhambra PD and the sheriffship, just to get an idea where this guy is. If it comes to a stop, maybe they'll be able to take him into custody. But again, this is a second agency that has basically said this person's just too dangerous. It is just a stolen vehicle as far as we know. We're just going to let it go.
Oh, see? Ooh, see, that makes me nervous, that pedestrian. At least he stopped.
Me too.
He or she stopped. When we talk about what it takes when law enforcement makes that decision, whether or not to pursue the pursuit, so to speak, it really is just about taking into consideration how this could impact the innocent pedestrians, innocent drivers, and they take into account, is it worth pursuing this person, or is this person so reckless that us pursuing this individual puts the community more so at risk?
Those are the questions, and I was talking to Jeff's my pilot today, and Jeff, if you guys don't know, I'm sure everybody does, is former law enforcement, and I was being serious. I said I would love to sit down with a watch commander and just ask them the questions, like why are you canceling it? What is the reasoning behind it? And it seems like at night the chases continue on, but in the daytime, the day watch guys, they're just more sensitive to the public's or the folks that are out on the road, and they'll cancel these all the time. But in this case, you can see it right there. You got a number of people. Everybody's got their cell phone out, so you kind of know that they're watching.
I think he just pulled up the stream on his phone.
They're probably our viewers right down there, and they're keeping an eye on this as well. But the reasoning, I wonder where the line is drawn, or what weighs into those decisions of public safety, and then also, doesn't the lights and sirens help warn the public?
Right. We talk about often how these pursuit suspects go to areas they're somewhat familiar with or neighborhoods they know. We don't know if that's the case because just how random it has been thus far. But it's interesting to me that Now this driver keeps stopping, almost like thinking, what's my next move? Which direction should I turn? Should I go left? Do I go right? It makes me believe as though he or she is not familiar with this area.
Familiar or perhaps taunting officers. That might be the other side of it. Maybe coming to a stop and basically saying, you know, here I am, ollie ollie oxen tree, come get me. And that actually just showed how old I am. But at any rate, it's one of those ones where, you know, he's kind of waiting to see if officers will come and find him and then maybe re-engage the pursuit. And if that's the case, then, you know, clearly law enforcement is doing the right thing by not engaging in that type of behavior. But he does do those stops, and then he continues to go again. And now I'm hearing that the actual sheriffship itself has departed the area, so they are not here either. Oh, he's got to go back the other way. I hope I didn't lose him, because that's a dead-end street. Oh, he's going through the parking lot down there. There he is. Yeah, thank you, guys. But that's a dead-end street, so clearly not using any kind of navigation because he made a turn onto that road right there. But this is the thing. It's like where do they draw the line? Where does law enforcement get back into it? And then, of course, as far as public safety goes, is this being safe by not trying to bring this person to a stop?
Well, that's my question. So right now they're backing off, right? They're going to just
Yes.
let it be. Okay, are they truly letting it be, or are they keeping an eye from a distance to then swoop in? How does this work?
Well, hopefully they're watching us, and they're seeing the location. So maybe that's what they're doing right now. As far as the sheriff's helicopter that was helping Alhambra PD, that helicopter has backed off and left, went back to patrolling. So there is no law enforcement in the air, and apparently no law enforcement. Well, there's an officer right there, and you saw those brake lights come on. So he knows that is the suspect.
Whoa,
so
what?
possibly they are just
He
kind
just
of
drove by a
hanging
cop,
out in
and
the
the cop
area.
just went the other way.
We just don't see them. But
They
how
really
keep
don't
an eye
care.
on them, that's a different story. But at any rate,
I'd be kind of
that's
mad.
what's going on. But that speed's definitely picking up once again.
Look at me.
This is not an anomaly. This guy's going almost 80 miles an hour, going around a car that was coming out to make
he
a
almost
turn.
got clapped.
And
The
we're
market
on
took a pop.
Garfield. You know, yeah, it's
And
a
he
bigger
just gave up
street,
after
but
hitting above
you're on the
5,200.
wrong side of the road, pushing 80 miles an hour, maybe running red lights. This is very dangerous. And when we see those things, that really, truly, that's when I start to worry, because that's the parking garage that he seems to like so much. We're back. We're back at that parking garage. So you saw him make a turn into that parking garage. We'll see what happens now. We'll see.
He went into a garage?
All
Finally.
those sides, everybody watching with us, please, and even the alleyway to see if he does pop back out. But we just saw him make that turn. He's back out. There he is again.
What is this guy's an idiot, bro?
This is one of those ones where you just kind of wonder why.
There's the whole ass
does this
parking
continue?
garage right there.
Why does he keep doing this?
He's probably like,
Where
I don't
was
have
that?
credit.
There were
Wait.
so many people there. Is that like a?
It looks like it's just a shopping area out here in the Alhambra area.
Okay.
Yeah,
Interesting
I'm not.
He or she hasn't jumped on a freeway.
What is wrong with this guy?
Well, it started on the 710.
That was a
we were
a
on
parking
the 710
garage.
earlier on. It started in the Lakewood area, got on the 710. They took the 710 till
This
it
is
dead-ended
weird.
into the Valley Boulevard, and then after that, it's been on streets out
You
here
learn a
ever
lot
since.
here. Today you're learning evasion.
Yeah.
From a
Makes
police
no
chase,
sense,
but
None of
it's
it
deeper
does.
than that. It's just.
But you're right. You know,
We
again.
have a tradition. We
yeah,
have a tradition.
I saw that. Super close.
Pizza,
Close
pizza.
calls. A lot of close calls.
Yeah,
Pizza on the high.
and
PZZA.
those
Good call
hard
out.
turns
Pop.
for no real reason. It's like he almost wants
PZZA.
to lose control.
You can chase
He did another one
police, or
right
you
there.
can
You
chase
can't really
the
see
youth.
it, but he just cut somebody off. He went around them to make that right turn. And I also think there might have been
Is it
somebody
halted,
at
or is
that
it just
corner.
not moving after
there
that?
might have been a pedestrian out there, because I got a glimpse of something. But see, this is what I'm saying. It's like all these kind of close calls. Another red light right there. Another car just, backing out of a driveway.
Right, I don't
see
right.
anything.
You just don't.
Split second. This person just blowing through these stop signs, not even slowing down to blow through them, just going straight through without any consideration.
We got the market and the police chase.
Anyone or
Who says you
anything.
can't have
It's
both,
just
baby?
Really a
Who
scary
says you can't have
situation
both?
Because they don't seem to care.
Yeah, they don't seem to care at all. And I want to push in on those motorcycles right there. Like I said, I'm not really good with Alhambra, but I hope that's not the police department right there, because it does seem like there's. Look at that. He got air. He got air on that one. So it is clearly this person is extremely reckless, seems to be taunting officers, and right now nobody's biting. So hopefully this person's going to get bored with their own activities and then just kind of call it quits. Or, you know, something's going to happen. Maybe, you know, maybe the truck is going to run out of gas, or who knows.
Hey, man, air is air. Stop hating.
Hopefully,
Stop
and that's
hating.
another thing, too. We've seen it so many times in the past where people are watching and they're like, you know, I'm going to go
I
out
just
there
hope we
and I'm
see
gonna
him
take care
get
of
in a
this
beef
problems.
with another
We don't
driver
want to
like
see
last
that
time.
either, and law enforcement
That
doesn't
was
want
the
to see
best.
that
He's in
either.
California.
So right now,
y'all don't realize. Y'all might
keep
watch
an eye on him. They've got another
some
solid red.
vigilante
It looks
moves
like
here.
he's behind the trees. So if something's going to happen, it's going to happen right there. It's just my luck. But that pickup truck coming, just basically showing up, and look, that light just turning red, so he ran another red light as he made that turn.
I mean, I don't want to say getting lucky, but I guess people are getting lucky to avoid him or her, and this driver is getting lucky in the sense that nothing crazy has happened so far, because there have been so many close calls, it's insane.
Yeah. And very well put. You know, when you throw the luck word around, it's not the driver of that vehicle. It's the other people, the civilians that are nearby, the innocent people. They're the ones. Their luck is the one that is holding on. At least he didn't run that red light. Well, it probably wasn't red enough. So, anyways, he's making another turn. We're staying in these neighborhoods, slowing down once again. And we'll keep an eye on him the best we can. Sky Fox moving around. There's a lot of traffic out here, a lot of interest for sure. So that might be one of the reasons why we're not right up with him. But at this point, we're just going to keep an eye. We've never lost him. But you know, there's been a lot of times where he's been behind a couple of the trees or behind a building here or there. But that's not him. See, that's what I was worried about. Son of a gun. Oh, now everybody's going to have to help me find him. So.
Oh, was that?
I don't know where he went.
Uh-oh.
Yeah,
it looked like the same truck, huh?
Yeah, it's not, though, so I got to try to find him. I'm going to work with Jeff here in a minute. Well, Jeff, do we have any idea where he might be?
Jeez, dude.
All right, we're all looking right now.
You know, it's interesting. When we were on the street a moment ago, I did see another truck behind the main suspect that we were following.
Come on, man. You want me to make? I could give you a PHILO.
That's so strange. Do they know each other? And
I could give you a PHILO right
not
now.
That they know each other, but
if you like a PHILO,
they
let
look
me
the
know.
same, and so now we.
I could tell you the PHILO.
Seem to have lost the.
You don't know the PHILO?
Suspect.
This is all
a
symbolism.
Doesn't help with that it's just a white
rate
truck.
cuts. Thank you.
Okay, while you guys do that down below, why don't we pull the tape from earlier so I can show you what happened. This was a moment where this person pulled into this, looked like a driveway situation, parking lot, and then
wait, did they find him?
Coming in.
Oh no, that was the recap.
Back up,
bro, they literally just lost him.
And then took off. You saw the police.
Well, there you go. The market's like, ooh, that was close. And then
there
uranium ripping. Google's actually on the high, and then Disney's been going.
And then just takes off carelessly. You see there are people around, out and about. It's noon. People are out and about. Now, is this... Okay, this is earlier as well. This is when this driver just decided to jump right onto the sidewalk. We were thinking perhaps it was to avoid that there was a fire truck that he or she would have been encountering, and maybe that's why that was done. But there have been so many instances where this driver seems to just be driving carelessly without a rhyme or reason at all, and this is an example of that. There you see people on the sidewalk, and truly lucky to not get hit by this person. Okay, so let's see. Let's try to go to some other tape from earlier. We have this situation. Throughout this pursuit, we've seen this driver
go to where you
blow
lost
through
him.
stop sign, a white truck. It's kind of
that
doesn't
happen?
help with it. It's just.
He's going to have to help me find him. So.
Oh.
Interest for sure. So that might be one of the reasons why we're not right up with him. But at this point, we're just going to keep an eye. We've never lost him. But you know, there's been a lot of times.
Yeah,
where
that's
he's been
not
behind
even
a
him.
couple of the trees
That's
or
a Toyota.
behind a building here or there. But whoop, that's not him. See, that's what I was worried about. Son of a gun. Oh, now everybody's going to have to help me. Well, their luck is the one that is holding on.
Oh, dude, look. That's what happened. He confused those two trucks.
Red enough. So, anyways,
Oh,
he's making another turn. We're staying in these neighborhoods, slowing down once
So look.
again.
Here,
We'll keep an eye on him the best we
Oh,
can.
dude, I think he went up there.
There's a lot of traffic out here, a lot of interest for sure. So
Oh, he didn't move. They just start. Oh, you
right
dummy.
up with him, but at this point, we're just going to keep an eye. We never.
No, they
lost
just
him,
were like.
But you know, there's
eager.
been a lot of times where he's been behind
Eager
a couple
beaver.
of the trees or behind.
That's it. It's all that he's back there. He went the other way.
That's not him. See, that's what I was worried about. Son of a gun. Oh,
He's
now
right
everybody's
there.
gonna have to help me find him.
He's right there.
So,
I found him.
Oh, was that?
I don't know where
He's
he
right
went.
there.
Yeah, look.
It looked like
yeah,
the same.
Where's what?
Yeah,
Oh,
it's not though.
Come
so I
on,
gotta try to
thermal.
find him.
Let me get
I'm gonna
thermal.
work with
This is
Jeff
Call
here
of
in a
Duty.
minute.
AC
Jeff,
130.
do we have any idea where he might be? All
He's
right,
right
we're all
there.
looking
Bro,
now.
I
You know, it's interesting when we were on the street. a
Dang,
moment
that's
ago,
crazy.
I did too. What's going on?
Oh, did they find him again?
Can you hear me, Stu?
Okay, copy. Sorry about that. We're still trying to find it. And, I'm told that it was southbound Garfield. So I'm
Go to KTL. There's another. Wait, you mean to tell me
turn
they got
left on
competing?
Grand.
No.
So Grand is actually behind us. So we went too far. That's Alhambra. Oh my gosh, this is middle.
Dude,
middle
why
street.
is everybody watching this?
It's north on Stoneman. So Stoneman's right here. North on Stoneman.
That's good. At least I know I'm not
That's
the only
Stoneman, that's
fucking
Stoneman and
weirdo.
Grand, so he's got to be somewhere right up in here.
Bro, there's so many people
And
watching
I still
this
don't see him. That's Stoneman
on like
and McLean.
every channel. I can't find it, bro. I don't see KTLA. I
okay.
see like 3 other ones.
Oh gosh. Okay, Alhambra.
This guy, okay, I think we're done, man.
All
This
right,
guy's-
okay.
This guy's stressing the fuck out. He got that was easy. Man, he literally, bro. You gave fucking Bob one job, and Bob don't know the difference between a fucking Ford Sport Track and a Toyota Tundra from 1997. You know, Bob, helicopter pilot. He don't know. He's like, well, I don't know. I seen them. One of them, it was a truck, a white truck. I just didn't. He literally did not know. That was the easiest mix. I was like, how did they lose him? I swear, I was just watching. I was like, there's no way he didn't do anything evasive. That wasn't even bro, he didn't. I do like a minute later, if you zoom back out, you saw him still on the side road, damn, calling a Uber. Like, you could have seen this guy. That wasn't even like evasive. That wasn't. You got 50,000 people watching this, and the dude makes a right turn, and they're like, "Wait, I don't know how he did that. We lost him. We can't find him." That's just how he did the way he shake and bake. They call it shake and bake. I think is what it was. For if you're not, just how he did it. It's insane. You knew where to go. Nah, bro, they were just talking. The guy was like, he was explaining something. He was just talking, and then 2 white trucks, and then he was like, they just turned, and then he just kept talking, and then the car kept going, and the other guy just took like an extra 30 seconds. It just took that right turn really slowly, and then that's it. Well, but that was good though. We needed a police. We haven't seen. I guess actually no. I think we get a police chase once a month. Now that I think about it, we need more. I wish, man. It's still going on, but I don't. That was some dumb shit, man. I kind of lost my faith in them after that. I don't know. Like, usually, like, I talk smack because, like, you know, I don't like their commentary. Like, sometimes it's like the weirdest commentary for police chase. But nah, they found him? How do y'all all watching anyways, huh? Spy going up. Are you sure? Are you sure? Oh. No way, they fucking found him. How did they lose him? He's not even trying to lose him, and they lost him.
I think what part of the problem is that You guys are dealing with a delay.
Blame us? You want to blame us?
But I do. Any kind of help is a good help. Thank you, Melissa. I appreciate it.
Yeah.
And Kevin, if you're still out there, thank you, man.
It was a 1997
I would venture to say
Toyota
you're probably
Tundra.
hearing it on the scanner.
That is clearly a 2004 to 2006 generation sport track. Okay? How dare you confuse the two on a nationwide police chase? One of the easiest police.
It's all good. I won't lose him again.
My man is not trying to even evade.
Oh, man, it's all good.
This guy, look, he's losing it.
That's what makes the job the job. If we weren't doing the job, you know what I mean?
It's hard to explain. That was embarrassing. I know. It's okay. Get him here. Get this guy. Get this guy a break, man. He's gonna lose it.
That's basically what we're finding out. There's law enforcement out here. You know, I mean, they're nearby. That's for sure. But yeah, they told the sheriffship to leave. Well, they didn't say, hey, leave, we don't want your help, but they said, we're not going to chase him anymore, so we don't need your assistance.
How did they find
So they probably not using us anymore after that debacle. But hang on, I won't lose him, I promise. There's a cop right there. See what I'm saying? So
this is a standoff?
We'll see what happens. But I think he knows his area because he stays here. I don't know.
The guy he's very embarrassed right now. I understand. He just lost this guy this guy who's the
worst.
He
seems to like that gas station. Maybe he needs gas.
He's the worst, bro.
Yep, there we go. Back to the gas station.
Is he going to get gas? Is he going to steal another car?
Now's the time to go get some gas. Get some gas. Maybe grab a Coke. Oh, he parks like I do. Maybe he's going to run inside. I really think he's really messes with. He's doing this. He's taunting the officers, which is not good.
J-Mom on the high. It's a fun ticker to say. J-Mom.
Right.
There's a lot going on. I'm honestly getting overwhelmed by this. And the SPY's going up. It's still down.
Like that.
NASDAQ,
now he's literally on the wrong side of the road just to be on the wrong side of the road. There's no reason. There you go. Then you could have been yelling out the window. He's over there. He's over there. It's that one. It's that one. There you go.
All the Bears are watching this, so the Bulls are taking over. Well, a lot of names are running up right now. High ticker is actually going insane. You got Disney. You have 30 minutes, 24 minutes left on the day.
He's going to wind up getting into an accident. And, yeah, that's what I'm saying.
You guys like the announcer.
Lakewood. No, in Lakewood. Oh, look at this guy.
Oh, shit.
You know these people are watching on the internet. You know they are.
This dude's just popping wheelies. I love California. See? And y'all are like, why do you live in California? Because it's insane. It's literally GTA, bro. You have and that's why you got to be careful. But no, are you kidding, bro? That's just dude's popping wheelies.
I might be committed after all this too, right?
He's getting me nervous.
So,
all right, that's just a close one.
Yeah.
He didn't do anything. There's
Are
a
we
guy
still on
on
the
a
internet?
motorbike.
Kids
started popping a wheelie next to him.
After that debacle?
Ford Sport Track, bro.
All right. Well, so now I got a few minutes to say, I'm sorry. Oh, we're on KCAL also. Okay, copy all.
It's pretty funny.
I just want to say sorry about that. We did lose the car there for a minute. And when I say we, that one really was me. That was all me. That wasn't a team effort. But you
that's
can
crazy.
See right
so
now
the guy
that this
talking
guy is
is
really
the guy
starting to get
using the
popular out in
camera.
Alhambra because
Why don't they separate
everybody
the
seems to be
jobs? Like, why don't
talking
you
to him.
let
You had some guy
one
on a
dude
motorcycle
follow
doing
and one dude
wheelies
talk?
next to him, and you know that person was just out there just for the fact that they know that this is on the internet. Again, this is one of those ones. It's these are the things that,
I do like this guy.
again, law enforcement, they have to deal with this. Are we helping? Are we hindering? It's a tough call. Right now, though, this guy continues to just drive around, doing a couple blocks out here in the Alhambra area. I know for a fact that if I knew somebody out here, I would say, hey, you might not want to be driving in this area right now, just because the odds are a little higher that something could happen. But he just continues to be making these blocks right there. Another red light, that guy in that black car, he's probably got a couple of choice words for that guy driving.
Why is he at the gas
station?
station?
And he's back over
again?
to the unlimited oil. Good prices, by the way, at unlimited oil. If you're looking
Never
for
heard
cheap
of
gas,
unlimited
I
oil
think
in my
food
life.
for less and unlimited oil probably the two best places to get gas. And if you're if you're a Kroger guy,
Kroger.
Then,
someone
you're
just
paying
called
a
out
little bit
Kroger.
less. Anyways, he pulls in, he pulls out, he pulls in, he pulls out. It is just another day
Dude,
out
he's
here.
definitely
in
trying to get another car. No,
but,
am I tripping?
These guys at the gas station clearly don't know what's going on.
He has
a little worried. We haven't seen this guy do anything aggressive like that, but he keeps going into that gas station. And people at the gas station, a lot of times you leave your car running, push to start, go fill it up, just kind of leave it alone. Maybe he's trolling.
Spy's still holding the high. Again, you're above 5,200.
I hope not. That's the only thing I got to say. Anyway, the Rangers back on the
Marvel
prowl.
on the high too.
And we'll probably go back over to unlimited oil here in a few minutes, maybe even sooner. Made another U-turn right there. And the observations continue. That's the best way to put it.
Okay, we'll give it 5 more minutes of police chase. Disney new high, Spy new high. Ticker is on fire, actually. Meta, Disney, Abercrombie, SMCI. I think NVIDIA next,
he keeps
too.
doing these, like,
Marvel,
speeding
even.
up to go
Again,
around the
Disney, too.
corner.
Disney's about to be
Look at all these
52-week
guys. They're
high.
all just watching. They're all just watching him.
No news on pizza. At least I haven't seen anything.
Coming back around, and I promise I won't lose them. I know. They're like, Stu, you said that before. Yeah, I know. Good gas mileage on that Ford Ranger. That's what how I understand it. Good gas mileage. Good gas mileage.
So how does he don't know the sport track, man. I'm a Stu.
But he really likes to hammer it when he goes around those corners.
That's offensive to me.
Hey, look at that. Is there a gas station over here at this corner? First time we went past it in a while. Speeds are picking up once again. Let me drop this because I know we might be on another station there. There we go. Whoops. Oops, 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 oops. Speeding up, slowing down, speeding up, slowing down. Oh, we're getting in the shopping area. Son of a gun. I didn't lose it again, did I? There he is. Nope, that's not him. Where the heck did he go? He was over here. He made a U-turn. Yeah, he made a U-turn.
My goodness. Dude.
And he just put it in park. Now he put it in reverse. How do you know that, Stu? Did you see how it jerked to a stop? I wonder if it stalled.
Why would it stall? I guess. I don't know. The Ford Sport Track. I don't know if we could handle all this.
Maybe you can get somebody out there, a good Samaritan, and help him push it. Oh, yep, I think it's stalled. Nope, it didn't stall. He just wanted to be an annoyance. There you go. Why you got to be so annoying? He's driving pretty slow now. I wonder if he's running out of gas. Well, maybe that was his last hurrah.
He probably ran out of gas.
You know, most of you guys know that noise. You know, like where it's just, you know, it's sucking that last bit of gas out there. But seems like. I wonder if he's going back to the gas station. How far up is the oil? Unlimited oil. Oh, that's, yeah. I don't know. It's an older truck. I bet you probably could put it in neutral and, you know, try and start it. So I don't know why he put it in park.
I think he ran out of gas. You guys want to take bets over under? He makes it to the gas station. This is the moment. Market's still near highs. 15 minutes. I was going to end it in 2 minutes. I was going to give him 15 minutes.
Yes, I'm not going to lose it. Walter, that's kind of mean. I don't think that's what it is. I don't think that's what it is. I don't think that's what it is at all. Somebody's giving me the driver's name.
Any penny stocks? No, I don't like.
I try to stay away from Bro because I used Bro one time and then somebody got really mad at me.
What is Stu
And then
saying?
I try not to use Bro. So, anyways, continuing on there, you kind of got an idea what's going on. And my phone is trying to hook back up to the internet, so maybe I can join you guys back in a little bit right here. But you can clearly see that vehicle just kind of moving along, trying to get that. I don't know why I didn't get gas. You should have stopped for gas. I'm starting to sound like the passenger princess. You should have got gas. I told you to get gas.
I like Stu. Stu's a good guy.
Man, don't turn this into a standoff. That's not what we need right now.
Oh, Disney came down, SPY a little bit too.
You got to wonder about all these people right here, too. Oh, look at another red Porsche. We saw one this morning.
Stu is just
yeah, these guys don't want to pass.
This
and
would
I
be a
wonder if
fun
they
job.
don't want to pass because
I could do this.
I wonder
I would
if
love
this
to do
guy
this, actually.
is like watching
Stu
us
has
on the
inspired
internet, and he's like doing got his phone out. There he is.
Oh, he's out.
Dun 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 dun. Can we? Yeah.
He runs how he
go,
drives.
Go.
Oh, why did he run?
They've got other people. Everybody's running after him.
What just happened?
Of course, no, he's coming back. He's coming back. He's in the backyards. He doubled back. Somewhere back. He's back over here. Oh.
That was fun. His run was very. It all made sense, right? I told you he's on Chad timing. Is this guy trying to make it before? Are you a Chad? Yo, if you're a Chad, bro, say something in the Chad. Because honestly, he's.
Oh, they're hugging him.
Oh, they got him? Where did these guys come from?
Sit down.
He can't type. Yo, are these just citizens?
Let him go. Oh, no, he's a good guy. You don't know. No, he's not a good guy. Sorry.
Bro, these are just citizens. Yo, he's getting and then the daughter's like, no, let him go. It's America. You can't do that.
Getting a lot of heat. Oh, he's getting a hug from his girl.
Oh,
she's
that's
the
his
one that probably
girlfriend.
was telling him, getting a lot of heat. If we can just do a pedal
this
turn.
got so sad.
Uh-oh.
Damn.
Uh-oh. There you go.
Well, there it is. Good timing. I mean, sad. That had a sad ending right there. Honestly, man, that was a very sad ending.
Just kind of shows you, though, the bad boys always get the cute girls. Look at that. Or the ride or die. I don't know. Let's not get into physical beauty.
Stu.
But, I mean, come on.
Dude, we can't. Dude, I love Stu.
No, they're already the two on.
I'm liking the video.
Plain clothes came up with guns.
So this one, I love Stu, bro.
They're
Fox
the ones that took him
11,
into
bro.
custody. And another one. Oh, that's a media. I thought it was an officer with his cell phone out just to make sure that there's nothing going on. Not that there's no cameras on this. Anyway, this media pursuit coming to an end out here in the Alhambra area at the corner of Garfield and McLean. And McLean and McLean, that's what it says.
All right, that was fun. Thanks, Stu. Just in time for 10-minute rigged. I don't know, man. Is the rally going to run out of gas? We thought he lost him, and then the rate cuts came back, and then he ran out of gas and then tried to run away. I don't know. Maybe is that what Powell's going to do? You think Powell in the economy runs out of gas, and then Powell just tries to run away, and then Janet Yellen's like, no, don't let him. And then Janet Yellen's like hugging him, and it's like, no, we're going to issue more debt. We're going to issue more debt. Don't let it. No. Do you think that's going to happen, and then he's going to run away? Is that the theme? Because that's what I'm saying. We were trying to see any of the symbolism. Gold is hitting $22.99. Came down a little bit off of wicking there, but it's right there. Gold is hitting a new high. My goodness. And SPY and the bonds. I mean, bonds is not that bad today considering it was down another 1.5%. So we'll take it, but a little bit more of a drop from yesterday too. I think there's still some of the gap, but my goodness. We'll see what tomorrow brings. Again, there is data, services data, as well as private payrolls, I believe. Or private payrolls might be Thursday. No, that's non-farm. Or, excuse me, initial jobless claims. Gold is nuts, bro. So we have 30 seconds till the 10-minute rigged. You'll get your market on close, too. I mean, we're still down about 1%. I mean, it's not like today was still a good day. I mean, you did definitely get some buy the dip. That's why we're up right now, like on some things, and gold is just insane. But, I mean, I think today was still decisively a little bit more pressure when it's all said and done. And then CCJ, man, that one kept climbing up there. Disney was going up. Again, the vote is tomorrow for Disney. ADP tomorrow morning. $2.3 billion to the sell side. Market on closure. You want to forget today? But you joined the chat today, bro. That's not, I don't know. Is that a good thing? All right, man. Long term. Next time you listen here, pass it your princess. Stu was saying a lot of things. Stu was a fun guy. I hope I can meet Stu one day. I would love to be on a helicopter ride with Stu, and I would love to do his job for the day and shadow Stu. We're like, Stu, I really think I'd have fun doing this, Stu. How do you operate the camera? And so you just follow the car. I would love to hear Stu do the traffic. Apple didn't do much. Is Meta, they were ripping on the high. Amazon, they're actually still red. Google's still red, but they were going on the high earlier. I don't know. The buy side, like the buy on close, sell on close, it kind of means stuff. I mean, when it's all said and done, it does depend on where you end up on the week, like weekly inflows and outflows, but there's a minor effect, I would say, or sometimes you really notice it, but for the most part, I don't think it's going to be anything too telling, but it does paint a picture, towards the end of the week when you see total inflows and outflows just on everything when it's all said and done. But there's a lot of that's where closing activity and a lot of money comes, and again, just end of the day, that's where, volume, beginning of the day, end of the day, that's where it's running in. IHOP, AMD getting nutty. I'll tell you, it's crazy. It's still high, but it's still down. Still down 2%. Still 180. Then Marvel, I mean, we went up a little bit on that. Again, somebody asked me, AI, you have TSM in 3 weeks, but Marvel event is next week. Other than that, I don't think there's anything in the AI news coming up. It's not over, Stu, yet. So many one-liners. He said, bad guys always get the ladies. That was just all weird there at the end too, man. I thought I thought he got a citizen's arrest, and then it ended up being the girlfriend. She was hugging him. You think that's who he was calling? That's why he kept stopping, and he was like, "I'm gonna just come see me before I go to jail." Have you heard of the Zim bond note? No. What's a Zim bond note trade? Sounds intriguing. Where did the office chair come from? Hey, man. If there's not a HOA, I've seen weirder shit in the front lawn. You know? Anywhere in between California. Found a lot of things. She was supposed to meet him at the gas station. Yeah, and then she fucking opened up YouTube. She's like, nah, they all watching. Nah, I'm going to stay. My dad won't let me go outside. He had YouTube too. He know this damn sport track. He should have just parked in the garage. Like Stu was telling him. Even Stu was giving bright ideas. GLD, gold on the high again. Is oil going up to? But gold, $2,300. Bro, gold is $2,300 an ounce. What world is this? What timeline? Oh, I almost lost it. JP Morgan ex-divvy this week. Yeah, and then earnings next week. Then SPY getting another candle. That's crazy, man. Gold just hit 20. It's back at 22.98, but wow. I'm glad I covered the gold short on that last one, and then I'm mad I didn't hold any of my gold positions from earlier. But even on the short term, that's big money on gold. 2,300. Cooler. I think, didn't that run up yesterday? And then Netflix on the high. CCJ again. I am down with it. SMCI is going up. And Netflix. I feel like we haven't talked much about Netflix. Netflix still holding up the 600s. Very nice, though. Again, they have earnings closer than you think. And then 5 minutes, final 5 right here. So get ready. JPM will raise dividend. Yeah, I think, didn't they? I swear they just did, right? So we'll see. But either way, I mean, I think JP Morgan earnings are going to be good. Remember, they started off, that's the thing about this earnings. Oh, you know, a lot of companies, like, depending on the industry, they just started off very, very good. So, I mean, if all is well and nothing has changed so much in the 3 months, which they shouldn't have, I mean, we should be good. Like, I think JP Morgan and banks should be pretty fire, but it all depends. That's why this earnings is going to be interesting, because people are looking for those clues. Yes, Chattadonia. I didn't see the time. We're about to close, man. So I hope you guys know you're blessed and that I love you and you are amazing. And you guys are so amazing. I don't want you to ruin your day. And that is why it is my duty to inform you that it is about to get extremely loud in here. So when you hear me say earmuffs, that is your warning to mute your speakers. If you are sensitive to loud noises, if it causes weird behavioral effects, negative attitude, bleeding eardrums, diarrhea, a host of other symptoms that can either be cured or not cured with Pepto-Bismol, I would mute your speakers, okay? Otherwise, I just don't want you to have a bad day, okay? So when I say earmuffs, that is our safe word. Does that sound good? Does that sound good? Earmuffs. All right, earmuffs. Earmuffs. I know, earmuffs. We got to go. We got to go. We got to go. This is not a drill. Mute them. Come on. Come on. Earmuffs. All right, ladies and gentlemen. We're making our final approach. As we make our final approach, you guys are holding on to any bags. Please throw them in the overhead bins above or firmly beneath your seats, or be coming to the aisles with the trash bag if you'd like to dispose of those bags. But as we make this final approach, we're going to be landing here into the second link terminal. Second link terminal description. That's going to be your nightly Watchlist and main channel layover around 4 p.m. Pacific time. Then we're going to be taking off promptly around 6 a.m. out of sunny San Diego, California. So you make this final approach in the San Diego International Airport. It's about 68 degrees and sunny, looking like a good day, unless you thought the market would go up, because that didn't happen. I know, even though nothing has changed, and now everybody's reacting to rate cuts, even though we already had the opportunity to, and nothing really has changed. But good news is we are no longer under COVID guidelines until the election, so no masks are required, but we do ask that you exit one row at a time and drop a GG on your way out. As always, we appreciate you guys' business. If you're interested in the Call Rapid Awards program card, please flag down our flight attendant, and we'll get you that as soon as possible. As always, thank you for flying with the coat, and hopefully have a wonderful evening. Let's go, baby. Chatadonia. You don't have much time left. You have 1 minute! Go, 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 go. Ladies and gentlemen, boys and girls, it's time to wrap it up, bring it home, finalize those plays, speak now or forever hold your peace. You don't have much time left. You have less than 20 seconds. You have data in the morning, ADP, then ISM. You got a little bit of earnings, not much, nothing you really care about. Oil going crazy, tensions, the bonds got killed. What will happen tomorrow? Finalize it all. You get to hear from Powell, too. Less than 3 seconds. 3, 2, 1. Ding 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 ding. Oh no! Oh, Chatatonia, we did it, we made it. 7 hours in the books, baby. I don't care if you just got here or not. I need a good game in the chat right now. Let's go. Drop that GG. It don't matter if you made money or lost money. I know you learned something, baby. Everybody that contributed brought something to the table. Plays, news, vibes, info, information, personalities, good questions. People bringing good positive energy, baby. That's what I'm talking about. God bless you. Good game, baby. Way to hold it down. Listen, you better drop a GG or you're going to get banned. I'm just saying, without the GG, you ain't really a Chad. That's all it is. The GG separates the men from the boys. One day you're going to grow up and get a long term. GG, GG. Oh, I hope they see me, baby. Way to hold it down. This is for the memory of the Twitch. I drop a GG. You know what I'm saying? I still see y'all. Way to hold it down, baby. We stronger as one. Shout out the members, the non-members, the stream alerts, everybody that threw in a donation. You didn't have to today. You so love. That's what I'm talking about. God bless you. Good game, baby.
Everyone got like opinions and thoughts, but they don't mean a lot. My money on stats, I can show you the top. Every bottom I pop, the key in the light. Don't believe me, just watch my freedom a lot.
I need me to rock. You won't see me a lot. Monday through Friday, you need me, let's talk.
What's up?
Let it run. That's the day, Chad. I love you.
Yeah, where's Jill? Come on.
Got no earning.
Yeah, I mean it. Hey.
That's it, man. I love you.
It's 4 p.m. 4 p.m. is where I wake up.
Shout out to Chad, baby. Shout out to Long Term.
Shout out to Percy, that's me. You could just call me JP.
Get ready.
I don't know, there's no questions. You could leave that to Shaki. Kamala riding with me. She'll lock you up for some weed. Say bad things about the vaccine.
Shout out to Long Term.
Got a laptop you won't see. Hunter, I love her, but that shit was weird with his feet. I love my Congressman trade. Shout out to Nancy, she paid. Double your gas in a day. Them must say Putin's to blame. Real politics in your face. 500 bill on the way. 500 mil to Ukraine. Every day. Javelins keeping them safe. Fuck it, just send them some planes. Tell them keep growing them grains. All of my bros in 8-0. None of their borders is closed. All of us got climate goals. All of us straight together. Strategically releasing the ore. They said that Putin won't fold. They in my cabinet no more. Fuck the squad, fuck the foe. Had a 9, fuck a roll. Now we going practical. Hunter, my my dog, that's for sure. We ain't gon' fight about shit, especially not 10%. We ain't gon' fight about hoes. Me and Nash get the votes. Lobby that shit on the low. I got Congress in control. I got your student loan froze. I got your mortgages froze. I got Keystone on froze. But mention and cinema froze. I'm getting faded, I'm eating this ice cream. I don't like voters who ID. Questions from press, that's unlikely. Bring up Trump if they don't like me. They give me the Eddie, I wake up. Passing bills, that's a layup. I'm the big man, I got say so. They lock you down if I say so. Booster on booster on booster. Mandate on mandate on mandate. I just gave Evie a test rate. Fuck you, Elon, I won't even say your name. Came in the office already ballin'. Silent just ain't changed my name to Stalin. Right off the screen and I'm gone with the wind. Do nothing about something till they pass a bill. Pull up in a brand new Benz truck. Hop up fresher than a bread truck. How I got it, how to just, yeah. How I gotta make it one car. Station on your block, took off. Mixing up my words, I'm live. So I think they mad, my fault. Talking about inflation, I caused. Dumping our oil turned me to a savage. $1 saved on a gallon. Fuck OPEC and King Salmon. And fresh, I'm tired.
Did you guys hear that? Do you guys want to take bets? Do you know that's on the table still? It's on the table, baby. You know that? They're talking one more oil reserve release before the end of the year. Before the election. We still got an oil drop coming. That's the word on this street, bro. People are talking, even though that's why. Oil's running up right now. Yeah, no. They're talking it. Why not? Why not? Have you thought? I mean, you got to think about it. Why not? Oil just hit $85. Biden opened the ending LNG export pause for Ukraine aid. Oh, that's good. That might lower UNG. I don't know, man. Oh, I don't know. So, Chad, that's all. That is the day. We made it. God bless you all. I hope you enjoyed today. But that is all I have for you, man. Go read the books, Richest Man of Babylon, Proverbs, New Living Translation. Man. Go read the books. Oh, wow, that's me. I heard myself. Oh, wow, beautiful. Thank you for the likes. You could check out, Intel just came out with guidance. 23 product revenue, 47 versus 57 here. Wait, what? What is happening with Intel? Why you have Intel number, Habibi? I was just telling the Chad how grateful I am to be here, man. Oh, Intel data center AI revenue, 12.6 versus 16.8. Intel outlines financial framework for foundry business. Why does this seem bad? So you're getting bad chip news after hours. Those numbers do seem pretty low. New structure is designed to drive up cost discipline. You may have some good news buried in there, but Intel moving after hours. I was just telling you guys how grateful I am to be here. And I was going to say, you could be an explorer. Check out all the links. I'll see you on the watch list tonight. Fill out the prayer request wall. Pray for your Chads, baby. Regulate those emotions. I hope you think about it, baby. Keep it on your mind. Get some principles. But, Chad, that's all I have for you today. I got to get going. So I appreciate you all being here. I'll see you tonight on the watch list. Go read the books. I already told you all of them. And don't forget why we're here. Why we keep going. Why that faith, hope, and love ain't ever going out of style. And why we know, baby, the principles. The principles will set us free, baby. Why, baby? Why? Finger to the sky, baby. To God be the glory, and through the grace of God alone. Amen. Amen. Yeah, man, that's it. You want woe? I'll give you woe. Wavy, you want woe? Woe, wavy, or wavy woe? That's it, but yeah. That's it. I ended. Come on. Teachers in the government, paper in the TV. How you say it?
Xavier. Why the people in the government pay more than the teachers? Why they always want my money? Both the liberals and preachers separate the church and state. But devil on my speakers, they told us not to hate, but don't apply to Jesus. I don't know, no. I got a couple questions. If I said them all out loud, then you would treat me different. Whoa. I got a couple questions. Can you tell me anybody where I should direct? Why the people in the government pay more than the teachers? Why they always want my money? Both the liberals and preachers separate the church and state, but devil on my speakers, and they told us not to hate, but they don't apply to Jesus. I don't know, no. I got a couple questions. If I said them all out loud, then you would treat me different. Whoa, I got a couple questions. Can you tell me anybody where I should direct? A book about a man, he would travel many places.
Now, before you keep going, I got a couple of questions too, Joshua. Exactly. So now all of a sudden the market cares about the rate cuts? You priced it out 4 weeks ago. What do you mean you're worried about it? Are you going to ask the question, Josh AI?
The stock market is down today because investors are worried about inflation.
I don't want to hear it. They could replicate your voice now. How do I know you're not the real Joshua talking right now? It sounds like it has a does it pay taxes? Does he live in a house? Does this Joshua pay rent? Exactly. Or maybe on the CPI we don't even count it anyways. Maybe we should see the cost of living for a teddy bear. Should we go excluding housing and food and water? Exactly. Because humans don't pay for those things. Do we live in China? Is it free? It's not even free there. Newsflash. Nice try. Exactly. Have a wonderful evening. Goodbye.